morning, ladies and gentlemen. We start Monday on a very strong footing. The weekly change on the Nifty last week was a drop of about 550 points, which is 2.33%, mainly on two major issues. Oil had flared up to a 2-month high because tensions in the Middle East escalated again, and there was a parliamentary logjam, a massive nationwide protest by Gen Z on educational reforms, and both points have ended in favor of Dalal Street over the weekend. The protest is over as the Education Minister Mr. Dharmendra Pradhan has resigned. A new guard has taken stance on the Education Minister. The protest has died down. Parliament should start functioning. That's a major overhang that's been removed on the Nifty, and more importantly, oil is down 4%, which essentially means that the Nifty is likely to show a nice bounce. The GIFT Nifty is pointing to a 100-point uptick. So beyond 23,800, 23,900, a fresh rally is likely to start on the Nifty. Again, we'll be keeping an eye out on call writing at 24,000 and 24,100. Those are major resistances, but they should be taken out. Tomorrow is also the monthly expiry for July contracts. The Nifty for the month of July is down 1.5%. So you should see a strong bout of short covering as well as also strong rollovers. The Nifty Private Banking Index was the worst performing index last week, 4.5% lower, and that, ladies and gentlemen, is what is likely to show a strong bounce. Apart from that, there are no other major sectors that are showing signs of strength, at least in the beginning, but just two: Nifty EV and Nifty Waves. Waves I don't track much, but the EV space is buzzing with gains. Two stocks that we've been highlighting since long are Himadri Specialty Chemicals and Gujarat Fluorochem. Both of them are in a strong uptrend and you need to track them. Apart from that, battery maker Exide is in strength, as also you have a lot of moves coming into a counter like KPIT Technologies, which is in strength as far as tech space is concerned, looking at the auto sector. Apart from that, within the Nifty, it's the tech stocks that are in top shape. Nifty Tech Mahindra, HCL Tech and TCS are the three which are showing signs of good strength. Whether it's value buying or bottom fishing, only time will tell, but keep an eye out also on Bajaj Auto. Apart from that, in the broader market, there is extreme strength in Garware High Tech, in Cummins India and BHEL. These are very strong stocks. Apart from that, liquor maker Allied Blenders and Distillers, from the infrastructural logistics space, ACE, which is Action Construction and Equipment, Bosch and Paytm. So that's the broader structure of the market as far as the space of equities is concerned. We'll be joined by Ms. Vaishali Parikh, who's the VP for Technical Research and Analysis at Prabhudas Leeladhar. Namaste Vaishali ji, a very warm welcome. Finally, a shade of green on Dalal Street, possibly for Monday. How are you watching sentiment today?
Very good morning, Shelby. So I think technically we have been discussing that Nifty is at a cusp. 23,500, 23,600 is the make or break level. And today we are seeing that yes, GIFT Nifty is indicating a positive start. So these support levels should be respected, and I think this bounce should continue. And I think for this week, I think once again 24,100, 24,200 stays as a resistance, and 23,500, 23,600 is the support level. Even Bank Nifty, what we were seeing that has been outperforming, now this too has got into a corrective mode. So wait and watch, but near-term support lies at 56,000 levels, and let's see how it goes.
What are the stocks that find your attention in terms of strength as far as the Nifty is concerned?
So I think IT index, if you see on the whole, is showing some signs of revival. So I would say focus should be now on IT index. And stock specific, if I were to say that we have been talking about Astral since quite a while, right from 1330, 1350 levels, and last week we saw it did give a good close. So stock specific movement I would be looking at, and I still feel that this is ready for next target of 1550. The other stock which I do like is APL Apollo. APL Apollo is showing signs of consolidation. We will wait for a confirmation. Once the stock sustains about 1840, 1850, this will also get into a trend. So yes, for now, very few stocks I would be looking at these, but sector specific frontline, I think IT should participate.
Within the Nifty, what catches your attention in terms of stocks?
So, well, within Nifty, I would once again, as I told you, I do like Tech Mahindra. I do like HCL Tech. Infosys is fairly placed, so I would look at that. And as far as we talk about banking stocks, I would definitely look at ICICI once again, because this is one of the stocks that is been outperforming so comparatively. So I think we saw some erosion, but hardly anything. So it's once again at a support of 1410, 1420. So I would look at these stocks which definitely have a good strong uptrend. The other stock that I do like is Bosch, though a very very slow mover, but it is holding on its with its fort very well. So I think it becomes a buy at every support level.
Okay. Vaishali, a view that you may want to offer on Paytm?
So Paytm has been doing quite well, and we saw that yes, with some retracement did take place. But I would say once again now for new buy strategy, 1240 should act as a good support, and because the candle what we saw on Friday has shown a new round of momentum setting in. So risk reward ratio also is favorable. 1240 would act as a support, and if we see a continuation in buying, this will very likely go towards 1320 and gradually higher.
Okay, fair point. A view that you might have on stocks such as Bajaj Auto and the entire auto space, what looks good there?
So, well, Bajaj Auto did very well just last week itself, and it has given a good close. So, I think the trend is intact. And looking at the weekly chart also, I think this is ready for a target of 12,000 and higher. So, our view is positive because it's given a breakout, and even on the monthly chart, we see a good bullish candle. So, I would say gradually this will go towards 12,000, 12,500.
Okay.
Within that, of course, Excite did
within
very
the
well for us.
FMCG pack, yes, ma'am.
So I do like
A view that you might have on BHEL,
BHEL. Well, I would say
ma'am, that you might have on. Ma'am, let's do it one at a time. Please continue your statement. I'll speak after that.
yes. So I spoke about Excite. I still do like, and I feel that there is still further scope of an upside. So Excite is one of the stocks as far as the battery is concerned.
Fair point. Within the EV space, the stock that is doing very good moves is Sona Comstar. Would you have a view on that?
Yes, definitely. So this has been doing very well, and I think it is likely to continue to do well. We have seen a brief of a consolidation, so I would say 700 would act as a support for near-term basis. And when I'm looking at the overall chart, even on a monthly chart, it is ready for a takeoff. We need to see a confirmation of this stock moving above 770. So I think gradually it is going higher. There is no sign of exhaustion. This rally is likely to sustain in this particular stock.
Okay, fair point. That's the strength that we are witnessing in Sonacom style. Let's do other checks on stocks that are most likely to move in strength. We are already at 8:46, 14 minutes away from what is likely to be a strong day on Dalal Street. Oil is down and the parliamentary logjam is over. So these are two very positive events that have happened. Himadri Specialty Chemicals, Vaishalaji, has been in top form. The stock has rallied very sharply. What are the charts telling you for the moment?
Yes, so last week we saw that this was really a star performer, and I think this is also looking very strong. If one has to buy, I think 740 should be taken as a support. And when I'm looking at the chart of all periodicities, it's in a very strong uptrend. This can go towards 800 plus.
Okay. Any weaknesses that you are tracking within the Nifty or within the FNO space? We are a day away from the monthly expiry.
So, well, yes, there were a couple of banking stocks itself, what we were witnessing last week, because Bank Nifty. And I would say a few of pharma stocks can see some profit booking. But right now, at this juncture, I would not suggest because, as I said, Nifty is at a crucial support level. So, I would not look for sell strategy right now. We'll wait for it to see whether are we holding or if we are breaking. Then, yes, we start looking for sell strategies.
A view on the rupee, ma'am?
So, well, rupee, as we were fearing that yes, it was to retest the previous high. So, I think rupee is very likely to show some upward, I mean, further depreciation. And let's see.
Okay, fair point. Uh, you were talking about weakness in FNO. Any stocks that you feel are underperforming and may have strong rollovers on the negative side, ma'am?
So, well, I don't still have the data, but as I spoke to you, Patanjali is still a weak stock. Well, it may see some bounce, but I think we still have scope for further downside. Then I think, last week we saw National Aluminium was trying to show weakness. So we will wait and watch. If 320 levels break, then I think this can slide further. So currently, these stocks I'm focusing on. And in fact, even Lupin I was looking at. Lupin was showing some signs of profit booking. So but currently, again, after a good corrective move, they are all sitting on support. So we'll wait if these support levels break, then these could be sell.
Fair point. Oil has tumbled fairly sharply. Do we see more fall here, or will this be a week of consolidation for the commodity?
So I think it should consolidate because we've seen the very swift movement right from 72 to now 92. So I think it can consolidate over here, but the trend is still upward. So let's see.
Okay. So 8:50, another 10 minutes to the markets. Ma'am, another stock that's doing very strong rounds is Garware High Tech. This is a company which is now trading at 6,900 rupees. In the month of May, this was at 3,800 and had broken a very, very long support resistance which was there since January of 2025. What are the charts of Garware High Tech Films telling you?
So definitely not a buy at this level, but yes, of course, it is showing a lot of strength. In fact, there is RSI is also still not overbought even on the monthly chart. So I would say that yes, this stock is likely. I would say 6,600 or 6,500 would act as a near-term support, and this can go towards 7,500. So trend is quite positive. Even on the daily chart, we are seeing once again a new round of momentum setting in. Indicators are also showing that yes, new round of momentum is very likely. So yes, the view is positive. In fact, in the cash category, I would say do look into Fermenter Biotech also. That also is showing quite a bit of strength. So this is one of the stocks that I do like at this level.
Okay, okay, fair point. Stocks within the defense space, which may be catching your attention when you look at the charts of maybe Hindustan Aeronautics, maybe Astra Micro, what are they telling you?
Yeah, so HAL after a very long time has shown sustainability because it is succumbing to most of the negatives, and now it is showing some signs of revival. As a positional trade, I would say 4,300 should act as a support, and we look forward to a target of near-term target of 4,800, and above that it would go towards 5,200. So view is positive, but well, it's a very slow moving stock, but the trend is good. So yes, 4,300 as near term support and 48 as the first target, about that 5,000, 5,200.
BEL?
Sorry, you said BEL?
Yes, ma'am.
Yes, so BEL also, I think it's not doing much, but I would say 400, 390 should be the support. If those support levels break, then this stock is likely to show some weakness. But right now, it's just been consolidating at these levels. So 400 should act as a near-term support, and 420, 430 is the next target resistance. So it's pretty much a range-bound move. Nothing much happening in this stock right now.
That's true. It's completely range bound. Ma'am, when you look at the strength within the FNO space, let's look at the winners. They are few and far between. Nevertheless, when you look at the month to date performance, Kalyani Jewelers 48% higher, single month. Persistent 20% higher at 5195. Lodha from the realty space is the top performer, 20% higher, as also is Info Edge, 19% higher. A view that you may want to offer on Naukri, Info Edge?
Yes, so InfoEdge looks very good even at these levels because this stock also has been showing a lot of strength since quite some time, and currently it is moved past all the moving averages. So I would say yes, even now it is at a support level of 1100, and once we see the stock move past 1250, 1280 levels, this is ready to see higher targets of 1300 plus. So yes. We take small steps, but it is in a good strong trend, and the trend should remain intact, keeping in mind 1100 as support. So I think this is ready for a new round of momentum to set in and can be a good buying opportunity at these levels.
Okay, we are 6 minutes away, ladies and gentlemen, from the pre-open trade on Monday. Things are looking good. Nifty showing signs of a bounce of about 100 points or so. Let's look at some news that has come in. Dr. Lal's Path Lab company hints at possible boost to revenue growth, and it forecasts to it from mid-teens. Earlier it was 6 and 7%, mainly on account of volume growth in patients, and is awaiting second quarter results. EBITDA margin estimate of 27 to 28%, and it may increase after second quarter. What else is coming in? This is a very good stock. Acutaas Chemicals, it's in top shape. Expects 100% capacity utilization at its 4,000 metric ton plant in 3 years. Battery chemical supply starts now with quick increase expected over the next couple of quarters. Acutaas, of course, has been one of the outperformers. Let's get Vaishali's view on this stock. Vaishali.
Yes, so I think last week we saw quite a few chemical stocks also doing well, but Acutaas we have seen some correction, quite a few. I mean, two bearish candles. But now what is important is we need to see that 32 close below 3,200 would trigger further selling pressure going towards 2,800. So wait and watch. Not an aggressive buy right now, but let's see is it respecting this support level of 3,200.
Okay, fair point. This is 4 minutes away. We are also looking at silver and gold, ladies and gentlemen. Again, flat to weak trade all of July. In fact, a lot of jewelry stocks have outperformed on the hopes that customers will start trooping back in as gold prices and silver prices have corrected about 15% from the top of June. Vaishali, gold?
I think it's just we've seen good corrective move and it's just consolidating at these levels. Nothing is happening. I guess this could be an accumulation level. There is no clarity. We have seen a good move taking place, and right now it's just holding on to these support levels.
Okay, fair point. So that's the view on broadly all commodities, which is oil, gold, and silver. Rupee we've discussed with Vaishali, the strong stocks in the F&O space, Nifty as well as the broader NSE 500. We are waiting, ladies and gentlemen, for the market to open. Let's again look at what the GIFT Nifty is telling us. For the moment, what we have is a bounce worth 123 points on the GIFT Nifty. So a 100-point gap up on the Nifty is expected. Remember, it shut shop at 23,767 after 4 successive days of fall in which the index lost somewhere like 2.33% or 566 points. So a nice bounce back is expected, mainly on account of a nice reversion to mean, as also oil prices have fallen 4% and the massive protest in central Delhi by Gen Z on educational reforms is over. That's a very big plus for the sentiment on Dalal Street. Let's see how this goes. Vaishali, would you like to recap your thoughts before markets open?
Well, I would say that market should hold on to these levels. As I said, 23,500, 23,600. So I would say look for buying opportunities because this is an attractive level to consider.
Okay, fair point. That's the view coming in on the markets. Let's also look at some strength that is being translated in terms of rollovers. The top 10 rollovers are in Manappuram Finance, a fresh record high, as also a stock which is NBCC. A view on Manappuram at 352, Vaishali?
Yes, so I think Manappuram as compared to Muthoot has been doing very well, and Manappuram Finance right now at around I think it's 352. Yes, so I would say the trend continues to be positive, can go towards 380, 400 levels.
Okay, it's 9 sharp, ladies and gentlemen. Let's look at what the Nifty is doing. We'll ignore the earlier tick. It talks about a 137-point down tick. That's not going to happen. We are going to have a gap up as far as pre-open is concerned. Let's look at the top gainers within the NSE 500. Let's look at the most active list for the moment. L&T 1.5% higher, bouncing from 200-day DMA, 3844. You have Infosys 1.3% higher. This is a good sign. Bajaj Finance is 3.7% higher, 1050. You have Indigo 3% higher. Remember, oil prices are down. That's a very big plus for India's largest airline. Reliance down, up 1.2%. Shriram Finance up 2%. Eternal up about 0.4%. These are positives that are coming into the market. What is pulling the markets lower? This I don't think so will happen. Nevertheless, let me point it out. You have an 11% downtick on Aditya Birla AMC, 9% now, still negative. Zen Technologies is opening 11% lower. Those are two negatives. Let's look at gainers in NSE 500. Lodha Developers, strength again. Laurus Labs, in strength. IDFC First Bank, strong earnings, in strength, 9% higher, 88. Concord Bio from the pharma space, 6% higher, 1324. And AU Bank 990, slipping a bit. These are the initial trades that are coming in. We'll let the Nifty settle. It's just vacillating very, very sharply, but nevertheless, it'll settle about 50-70 points higher. A quick break here, ladies and gentlemen. We'll be back shortly.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
Scorching heat, immense humidity, use of force and tear gas by security forces. They endured it for 36 days but continued their protest and remained firm on their demand. As a result, Dharmendra Pradhan had to step down from his position of Education Minister. Prahlad Joshi has taken charge as the new Education Minister. Now, all the demands of CJP have been accepted, including withdrawal of FIIs against protesters and compensation for families of students who died by suicide linked to exam controversies.
We have bloody Senate. क्या कहते थे ये? क्या कहते थे? इस सरकार में इस्तीफे नहीं होते. क्या कहते थे? इस सरकार में इस्तीफे नहीं होते. हम कहना चाहते झुकती है दुनिया, झुकाने वाला चाहिए.
Since Genji is gone home, the protest comes to end. However, eyes are on the parliament session on Monday when the government will be tabling anti-paper league bill with stringent provisions. The apprehension, however, that remains that unless there is a strict enforcement of such laws, probably there will be fraud in the system. But there is also expectation that such stringent laws could prevent paper leak in the future.
All eyes now shift to Parliament, where the government is set to table a tougher anti-cheating bill. The Public Examinations Prevention of Unfair Means Amendment Bill 2026 will be introduced in the Lok Sabha. It seeks to significantly strengthen the 2024 anti-paper leak law. Minimum jail term has been hiked from 3 to 5 years. Maximum jail term is now extended to 10 years. Individual fines have been raised to 50 lakh rupees from 10 lakh. For organized exam mafias, the fine goes up to 10 crore rupees from the earlier 1 crore. All probe agencies now face a strict 2-month deadline to complete investigations. Most importantly, provisions for special task force to probe the cases and fast-track courts to try all exam fraud cases.
Mantar right here is now wearing a deserted look. The security forces have been withdrawn, protesters have gone home, but that leaves a message that why Gen Z were forced to hit the street, it is the flaw in the system. NEET, paper leak, united them, it became a movement, but finally it has been called off as they were rigid on the demand.
We'll double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange. Very good morning, dear viewers. You're watching the Business Today show with me, Sakshi Batra. This is where I get you all the stock market opening action in this fresh and new week on Dalal Street. But first up, let's take a look at what's hot in the corporate and the financial world. Crude oil prices plunge after US pauses its attacks on Iran. Asian shares as well as global bond prices climb on hopes of a softer inflation outlook. All eyes are now on the US Fed rate decision this Wednesday. Stock markets to react to a busy earnings day. NTPC reported a strong Q1 performance while Bank of Baroda missed the estimates after a one-time litigation hit. Jindal Steel's profit also fell short of expectations. Investors will now closely watch Q1 earnings from BEL, Tata Power and Coal India. Lots of IPO action on Dalal Street this week. 9 new public issues are going to be hitting the markets, will raise nearly 12,000 crore rupees. 7 new companies are going to be listed on the bourses. Finance Minister Nirmala Sitharaman's strong message to income tax officers says do not make people run from pillar to post, cites the example of the new income tax office in Mumbai for which top IT officials had to battle bureaucracy for 53 years. Niti Aayog report flags challenges faced by investors, says skilled labor, access to land and delays in approvals are dampening India's investment climate, adds that states which have facilitated reforms have attracted greater investments. We'll straight away look at the Indian rupee. Breaking, viewers, the rupee has opened this week at 96.15 vis-a-vis 96.56 on the Friday's closing action that we had seen. It's a 41 paise higher opening for the rupee and a stronger one for the rupee as well. We're also looking at the precious metals shine this week. At the open, MCX gold has gained 700 rupees. It's now trading at 1.44 lakh rupees per 10 grams. We are looking at MCX silver prices soar by 2,300 rupees. 2.24 lakh rupees a kilo is how silver prices are trading on the MCX this morning as well. Let me straight away now welcome our guests on board. We have Shail Bhatnagar, our internal expert for markets on Business Today, and we also have Avinash Gorakshakar, the founder of Avinash Mentor Research, joining in as our external expert. Good morning to both of you, and thank you so much for taking the time out as well. Shail, to you first. It's already settled in the pre-market action as far as the Nifty is concerned, 160 points higher, so a fresh breath of air that investors are looking at after 5 consecutive days of fall on the D Street.
Yes, Sakshi. Good morning to Avinash and to all who are watching us on India Today. So the gap up is roughly 170 points, which is really good. We are looking at the first 15 minutes, Sakshi. Remember, we also have the monthly expiry this week. So good short covering is what should put Nifty higher. 24,000 is the first resistance where call writers will be active. Beyond that, 24,100. So these are the levels that I'm looking at. Strong contribution coming in from private sector banks, from IT, because IT led the rally last week and private sector banks were down 4% on the index level. So those should show a sign of a very strong bounce back. Oil down 4%, the parliamentary logjam is over and it looks good for the Dalal Street, at least for Monday. Sakshi.
All right. Avinash, good morning to you. Give me a sense of how are you looking at this market in this new week that's going to be seeing the monthly expiry as well. This time around, we have some positive indications. Donald Trump has again played out the taco trade. We are looking at some sense prevail yet again. We hope that this sustains. Crude oil prices are yet again ebbing lower, now inching closer to $90 a barrel after what we had seen last week, climbing above $100 a barrel. Does it augur well for the markets this week, and what would you suggest to investors?
I think good morning, Sakshi. Good morning, Shail. My sense is the markets will definitely have a very positive sentiment today morning, considering that oil prices have cooled off and Donald Trump is now talking of some sort of negotiations again. I think broadly the markets will have a very strong opening in the first half, but the second half I think you need to see some follow-up buying. values have come down to fairly attractive levels. And I think, as you rightly mentioned, Sakshi, today is a earnings heavy day. Apart from Bharat Electronics, many large cap companies are going to announce their numbers. So I think the market should keep a close watch on the earnings quality, on the earnings traction seen in the Q1. Obviously, I think it's going to be a stock specific day. I think broadly the markets should consolidate at some level. And any further re-rating will depend on the kind of negotiations and the fall in oil prices. If oil prices come down to again $85, $86 a barrel, that definitely adds further to the sentiment positively. So I would be more stock specific rather than index specific. And as you said, the weekly expiry is there, so obviously there could be some volatility in the second half.
Absolutely. Let's quickly look at how the Brent crude prices are trading. They've already slid about 8% in last two sessions. We've seen the crude oil prices tumble over 5% overnight. Brent crude prices have now dropped near $92 a barrel. Remember, it's the Iran truce hopes that are sinking the oil prices lower. Oil sensitive stocks, therefore, will be also in spotlight yet again as well. We'll come to that, but Shell, to you, which are the top stocks which are going to be on your radar before I go to Avinash?
Sakshi, I'd be looking at the entire EV space. So Exide Industries, Sona Comstar, to some extent even Bosch and Bajaj Auto. These are the top draws as far as momentum is concerned. Garware High Tech is looking good to me, Cummins India and BHEL.
All right, we'll focus on that. Also 2 minutes to go before we see the market opening. But Avinash, to you, how would you look at the entire oil and gas scenario play out today because of the fall in the crude oil prices? OMCs last week, we've seen massive losses come through for HPCL, BPCL on the earnings particularly. They are likely to react positive on the crude oil prices dip. But your sense of how would you look at the entire oil and gas pack?
I think the oil and gas pick will be in limelight today. As you rightly mentioned, the oil marketing companies would be the key beneficiaries of the reduction in crude prices. But I think even other stocks like typically aviation companies, Indigo, or for that reason lubricant or chemical companies. I think you're going to see a lot of stock specific buying coming in today, because if crude does settle down at 90 or maybe around $85, that is definitely good news, and that will definitely push up the sentiment for these category of stocks.
Absolutely. We are going to be, of course, looking at this entire space. Right now, we're looking at $92.97 per barrel as far as the Brent crude prices are concerned. There's a sharp fall. We're already looking at in the pre-open oil marketing companies seeing positive, indication for the markets opening. We're just awaiting the market opening right now. Remember, a lot of banking names will also be in focus, viewers, today. IDFC First Bank's Q1 net profit has more than doubled, and that will be in focus. We are also going to be looking at AU Small Finance Bank Q1 net profit that has risen by about 37%. We have the market opening for you, viewers. 23,957. There's a 190 point of a jump right at the opening tick. It's a strong opening on the Nifty, 172 points higher. The Nifty Bank also 1% higher, 576 points up. 57,269 is what you see the Nifty Bank also trading at this point in time. All the sectors of the Nifty are trading higher. IT is the one that's leading the gains that Shell also pointed out, 1.2% higher. FMCG up by nearly 1%. You have the autos driving in the fast lane. That's also up by 0.7%. Or the broader markets, look at it, about 0.7% gains coming in there. For the mid and the small cap index is now, moving up higher, 1% gains coming in. Private banks, all of them are in fact moving higher. There is no sector that's down into the red. That's a strong, broad-based buying that you're witnessing as far as the markets are concerned. Shell, which are the top stocks coming onto your radar?
Well, Sakshi, first and foremost, I am waiting for the first 15 minutes for the Nifty to form its 15-minute candle. But look at IDFC First Bank. Very strong set of earnings, and it's rewarded very well. 7% higher at 87 rupees. This is the top traded counter. I can't remember the last time you and I spoke about IDFC First Bank being the top traded counter. Laurus Labs, another very strong set of earnings, now fresh record high, 1.8% higher. Manappuram Finance, lower gold prices, fresh record high. Lenskart, 1.9% higher. Federal Bank, Lloyds Metal. So this is what I'm looking at in terms of initial trades. The gap up has been beyond our expectations, 175 points higher, and as you rightly point out, the entire market is in the green. The advanced decline ratio now 2269 stocks versus just 416 in the red. Very nice opening, Sakshi.
Fantastic opening this Monday morning for the markets. Avinash, IDFC First Bank quarter profit more than doubles to 1,075 crores. Asset quality improves. Is the bank finally coming into a buying zone? What are you looking at on this stock?
No, I think, Sakshi, the numbers have been much better than what the street expected. And I think in terms of asset quality, in terms of disbursement, in terms of the net interest margins, and obviously the absolute bottom line, numbers have been much better. And I think, the commentary also which has come out from IDFC First one call after the results has been very solid. So my sense is that you could see a stronger second quarter and a third quarter also. And hopefully, CASA levels have also been pretty healthy for the bank. So I would say that even at these levels, if one were to invest and take a time frame of at least 12 to 18 months, I think definitely the risk reward could be good. Of course, across the board, banks have delivered very strong numbers, but IDFC First has delivered much better numbers. So it could be a good add to the portfolio, provided one is a medium to long term investor.
Absolutely. We look at another breaking news coming in, viewers. This is with regards to the pulses. There are reports indicating the government may halt open market pulses sales. El Nino fears are prompting pulses stock review. That's what the reports are indicating, that the government is eyeing bigger pulses buffer stock. Chana, tur dal, as well as sales are being curbed under consideration. Also, FMCG and pulses linked stocks could be in focus because of that as well. This is also with regards to the upcoming fears that El Nino could continue to be a drag on the monsoons this season, and therefore there could be some kind of a halt on open market pulses sale as well. That's something that we are watching out for. Avinash, coming to you. Your sense on how are you looking at agri-related names, FMCG-related names this time around? Are you already seeing some impact of the lower monsoons being seen on maybe some kharif-linked crops and the stocks that are reflecting that kind of a mood?
I think my sense is, in the first quarter, quite surprisingly, most of the agrochemical companies, pesticide companies have done much better than what the street expected. I think numbers from rallies have been much better. Secondly, I think in case of FMCG companies, I think obviously the first quarter numbers are going to be a slightly moderate number because the monsoons did not play out. Rural demand was also weak. But I think clearly from the sector.
Yeah. Okay, I think there is some kind of a glitch as far as the connection with Avinash is concerned. We'll get back to Avinash. But Shell, so many banks are actually moving up. Look at DCB Bank, 9% higher almost. That's the kind of move that we are seeing on the pack. IT names, of course, are in focus as well. You pointed out rightly last week was driven by them. TCS, Infosys, all of them are coming back, from those weeks and months of decline. We're looking at several even mid-cap names like VRL Logistics, Dr. Lalpat Labs. Look at Sesha Side Paper, 12% higher. Those are the kind of names that are all rallying. So it looks like, broad-based good setup for the markets today.
Well, Sakshi, I hope this lasts. We've seen many such rallies now fizzling out because of what you mentioned about Mr. Trump. But for the moment, it's the Nifty PSU Banking Index, which up 1 percentage point. Even Bank of Baroda, you mentioned about the unforeseen event that happened in terms of getting that legal case out of the way, is also inching up. Look at Canara Bank, 127.4. You have the entire banking space looking good. And not only these, look at private sector banks apart from IDFC First Bank. AU Bank is 3% higher. You have strength in DCB Bank, 7.5% higher. And look at City Union Bank. Sakshi.
Absolutely. There's another breaking news coming in, viewers. This is with regards to Zen Technologies. Remember, Zen Technologies has unveiled a new anti-drone system. This is India's first high-altitude man-portable system. The system is built for high-altitude operations. Drone detection range is up to 5 kilometers as well. That's coming in. But the stock is down because on the aftermath of the earnings that have come in. This is the Hyderabad-based defense electronics company, Zen Technologies. The revenues have dipped for the company in Q1, and that's why the stock is reacting to this. But the news that's come in is also positive for the company. It's unveiling new anti-drone system that is India's first high-altitude man-portable system that's built for high-altitude operations and, of course, for drone detections as well. We're also going to be looking at focusing on what the finance minister has delivered, a strong message to income tax department, putting taxpayers first. And while inaugurating the new Aikar Sindhu office in Mumbai, Nirmala Sitharaman has urged the officials not to make citizens run from pillar to post for routine approvals. She's also criticized the government departments for being laid back, saying poor governance has allowed encroachments on income tax land for decades. Let's listen in to what she had to say.
I appreciate the work of every one of the officers who worked with the MMDA and also with the Mumbai authorities in getting the clearances. But I'll take a little left-handed, if I can say, not a compliment, but of course a word of advice. A left-handed compliment, yes. In the process of obtaining the clearances, in the process of clearing all the encroachments, in the process of getting the recommendation from the finance minister to the Maharashtra government and so on, I hope you realized what an ordinary citizen goes through. If you as IRS income tax name who can frighten people to run miles normally had to do this running from pillar to post to get a clearance for a land which belongs to you since 1973. But the fact that you led it to have occupations, illegal occupation, shows somewhere in our governance we are too laid back. It is somebody's job to take care of our assets. And when it is encroached, we say, oh, we have the land, but we can't build it. In every one of these instances, I would like you all to put an ordinary citizen in your place. With the authority of the IRS, with the name income tax behind you as a powerful force to frighten people, you also had to run pillar to post to get this clearance for this building.
All right, okay, we'll quickly look at the markets yet again. 23,928, 160 points higher. We're inching closer to the first 15 minutes of trade, but we also have Avinash back on the screens. Avinash, your own sense of which are the pockets that are appealing to you? Are you going by what the earnings are reflecting and then taking a chance, or are you looking at sectoral trends and are betting big on those?
No, I think banks could be a big sectoral kind of theme. Secondly, we could also look at crude beneficiaries like something like lubricants, chemical companies, or oil marketing companies. These could be definitely be looked upon in the current scenario. And I think obviously the broadest level of interest is coming in again, from the domestic capital goods and the auto sector. So I think broadly these could be the domestic themes. Even as of now, the export market themes are slightly patchy. So we like to avoid the export market kind of theme for the time.
Since you do talk about all the beneficiaries of the falling crude oil prices, Indigo is rallying in trade, about 3.5% higher from the aviation space. Your sense on, are you now positive on the aviation pack? Last week, there was so much of news flow that the government was also looking at breaking the duopoly of sorts in the aviation space, more competition. Adani Group could be making its foray, launching their own airlines as well. How are you looking at Indigo from a long-term perspective as a market participant?
I think, Sakshi, even if Adani, group does enter the aviation or the airline market, it's going to be a long time before they try to beat Indigo. Indigo controls almost 50% of the market share, has the largest number of aircraft. So any dip in the market price for Indigo should be a good opportunity for investors. I think aviation India is going to grow rapidly. So I think any dip in the market price for Indigo should be a good opportunity. I think if crude prices corrects further, the stock could further get re-rated. So definitely a strong structural long-term opportunity.
Absolutely. We're also going to be looking at, Avinash, the entire primary market space being in thick action already starting July second half. We've seen a number of big IPOs come in. August also promises to be big bang with a lot of those IPOs coming forward. We have Manipal Health and we have several others that are opening up as well. How are you going to be advising investors to look at this rush of IPOs that will be coming in? What's the best way to approach them and what is the ideal way to approach the IPO season?
No, I think, Sakshi, we are very clear that somebody who wants to make a short-term upside in these IPOs, I think should avoid these IPOs. But yes, if you're looking at the next 2 to 3 years, then I think there are many companies like Manipal, SBI Fund Management, which recently completed their IPO. I think the market is overflooded with good supply of paper, but I think at the end of the day, more supply means that the prices could get depressed once the numbers, once the stocks get listed. So my sense is be very selective when you apply for IPOs. Don't expect short-term gains. Only if you have a long-term vision, then only apply. Otherwise, in the IPO market, listings have been very, very moderate. I think there is hardly any listing gain for any of the well-managed, or maybe the reputed companies also. So preferably long-term is good, but short-term, I think it's avoidable.
All right. Okay, Avinash, thanks to you so much for being with us, as well as for guiding all our viewers as far as the market insights are concerned. Thanks, Shrell, for highlighting a number of stocks there that we have to keep on our radar as well. We'll wrap it up on that note, viewers, on the Business Today show right here. But do stay tuned on to India Today. We'll be back, of course, to track the closing action on Dalal Street at 3:05 p.m. on India Today. So stay tuned for that.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Good morning, ladies and gentlemen. It's been a gap up start on the Nifty. What you see is 23,940, 170 points higher, thanks to falling oil prices, thanks to the end of agitation that was sweeping all of Delhi as also large parts of India. Both of them are out of the way, and the Nifty has reacted as it should have. Nifty Bank 560 points higher, the IT index taking it a little further, 1.8% higher. Across the board, we have a very strong set of gains coming into the market. The advance decline is very, very strong. 2,441 shares are on the green on the National Stock Exchange versus just 422 that are in the red. The top gaining index is the IT index, 1.9% higher, helping the Nifty on its way up. TCS 2291. It's running up very, very sharply and is the top gaining stock as far as the IT index is concerned. Let's look at stocks that are contributing to this very strong rally on the Nifty. At least the first 15 minutes have been good. Infosys is contributing 21 points. Bajaj Finance is contributing 13 points. L&T 11 points. Indigo is up 3.3%. Reliance is up 0.5%. And ITC is up 1.2%. So these are the gains that are coming in fairly sharply as far as the Nifty constituents are concerned. Apart from that, you have a fresh record high on Laurus Labs. A lot of strength is being seen on counters such as Lenskart, Federal Bank and Manappuram Finance. These are the fresh record highs in the market. Where our top gaining stocks look no further. IDFC First Bank, a very strong set of earnings, 7.5% higher at 87 rupees. RK Forgings 6.5% higher. Lal Path Labs 6% higher. These are the stocks that are doing immensely well in the markets. Oracle Financial Services now a fresh record high, 11,080, 4.4% higher. We'll also be joined shortly by Mr. Lakshmikant Shukla, Senior Technical and Research Analyst at Yes Securities. This is the broader structure of the market, ladies and gentlemen. A very strong gap up thanks to falling oil prices. We'll be watching out the way call writers are operating. For the moment, I think the one at 23,950, 24,000 is providing very strong resistance. 15 minutes have lapsed and the Nifty has not been able to overcome 24,000. So probably that is the ceiling for today. Nevertheless, we are rejoicing this 164 point uptick. Mr. Lakshmikant Shukla joins us. Namaste Lakshmikant ji. A view on the market?
Shubhrabhat Sharan ji, and good morning to all Business Today viewer. So on Friday we have seen a breakdown from its crucial support of 23,800, but the good point was that we have recovered also, but still Nifty is trading below its crucial hurdle of 24,000, and then after 24,100 will be the next hurdle due to the presence of this 20 DMA. So I think Nifty need to sustain above the levels of 24,100. Then after we will see some good momentum in our market, and Nifty will continue this pullback move toward the levels of 24,250 to 24,300 zone. On the downside, still I think 23,600 to 23,500 would be the good support. As long as Nifty hold this level, we will see largely some sort of consolidation. But for fresh buying momentum trigger, it need to sustain of the levels of its 20 DMA that is placed around the zone of 24,100. Now, Bank Nifty has also seen a gap up opening in today's session, but facing hurdle from its 200-day SMA levels, which is placed around the zone of 57,400 to 57,500 zone. So I think that would be the crucial level to watch out for Nifty, Bank Nifty. If it sustain well above this level, then after we will see positive momentum in Bank Nifty toward the levels of 57,800 to 58,000 zone.
Right. Lakshmikant ji, any two stocks that catch your attention on the long side?
So I think Havells is looking good. Recently, it has reclaimed its 100 DMA levels, surpassing its previous swing high of 1,230. And yesterday on Friday, we have seen consolidation breakout also of this same level. So I think here we could see some positive momentum. Our expected target is around the zone of 1,280 to 1,300 zone, and support is placed around the levels of 1,200. So holding these levels, I think we could expect positive momentum in Havells. So for my view is positive in this stock. I think, and second one is Motherson. So Motherson has formed a strong base around its 50-day SMA levels, holding its, showing its resilience. Even we have seen breakdown in Nifty and still trading above its prior day candlestick pattern. So I think we could see upside move in Motherson toward the levels of 154 to 155, and support, or we can say anybody can take long position with the stop loss of 143 on the downside. So defending this level, positive momentum could be seen in Motherson also.
Okay, fair point. So Havells and Motherson is what we are looking at. The Nifty, ladies and gentlemen, 23,939. I'll just mark the intraday high of the Nifty. That should help you notice what resistance we need to take out. 23,964. Remember, the Nifty is below 21 EMA. It is also below 9 EMA. So these are resistances that the market is facing. Let's see how it overcomes them. There is a strong move coming on the Nifty Mid Cap Select 100 Index, 14,570 for you. The Bank Nifty is also in top shape, but facing resistance at 57,436. That's the state of play. For the moment, you have strength in IT. Look at Infosys, 1,075, 3.3% higher. You have strength in the IT index, 2.5% higher. TCS, as we've already pointed out, has reclaimed 2300. That's a very, very positive development. What you see on TCS is the highest since 3rd of June. So this is a real positive in the market. You have strength in L&T Mindtree. Coforge is looking good, 1516, and persistent at 5312 is also in top shape. Lakshmikanji, what are the stock futures that are showing strong rollovers on the positive side?
So I think mostly a few of the IT names which you have also on which you have also made your comment recently, where we can see positive momentum. Among these, I think TCS, LTM, Persistent, and few selected PSU banks also could see positive momentum, like Punjab National Bank and Union Bank. So where we could find some sort of traction on the upside. So I think here we need to look out for taking or initiating long position.
Okay, 938. We are 700 points up on the Nifty IT index, ladies and gentlemen, 2.5% higher. 717 points have been added to the index. The private banking index, remember, was the top loser last week, down 4.5%. Today it's up 0.6%. Those are the stocks that are in strength and indices that are showing a green tick. The Nifty PSU index is 0.5% higher. PSU banking index is what I'm talking about. Metals index is 0.77% higher, and the IT index, as I've been pointing out, 2.5% higher. Let's look at what metals are doing. We'll take a quick view on National Aluminium at 343 rupees. Lakshmikanji, what are the charts telling you?
Actually, 2 to 3 days back, I have initiated long position in National Aluminium, and but they're still holding above its key moving averages of 200 DMA. So I'm expecting the target of 360 in National Aluminium with the stop loss of 335 on the downside. Since if you look at the last 4 to 5 days of trade, so it is respecting its this long-term moving averages. So due to this, I have recommended this stock to take long, to initiate long position to my clients also. So I think till it respect this level of 200 DMA and 335 levels, my view is positive, and I'm expecting the target of 360 in the upcoming sessions in National Aluminium.
Okay, fair point. 939. Let's look at stocks which are in top shape in terms of gains. Let's look at Shesasai paper, 11% higher, 255. Let's look at KCP Sugar Industries at 30 rupees. It's clocking a gain of 7.7%. Car trade is in very good shape, 7.5% higher, 2853, and 115 crores worth of transactions have been done. We've repeatedly marked IDFC First Bank, DCB Bank, as also stocks like RK Forgings, 5.7% higher, and of course from the pharma space, Capley Point, 6% higher. So these are gains that are in terms of both volume and price. We'll also be looking at all-time highs. There is Ujjivan Small Finance Bank at 71 rupees, 1.4% higher. We've also marked Thyrocare, 5% higher at 587. Karnataka Bank, 285, 2% higher. And of course, you have Strength, which is coming into counters such as Happy Forge, 1642, 1.66% higher. That's the broader structure of the market. Very strong advanced decline ratios, most indices in the gains, and of course the Nifty up 175 points at 23,942. Lakshmikanji, what are you observing?
I think we could see recovery in the Nifty IT space. Recently, it has found recently it has given a good pullback move from the lower level and started hovering near its previous swing high. 29,500 is the hurdle but I think it will break this hurdle and we will see positive momentum in the Nifty IT space. And from where if it give a closing above this level of 29,500, then we can expect around 30,200 to 30,500 levels on the upside. Among these within this IT space, I think one can look TCS, SCL Tech Mahindra, and within mid-cap ITC, I think Persistent, Midcap, and Coforge can play can show good momentum on the upside, and we will expect this positive return in the upcoming session. So I think this week Nifty IT play a vital role to provide support for the Nifty index.
Okay. A view that you might have on TCS?
TCS has surpassed its previous swing high in today's sessions. Largely, it has been trading in a rising channel trend line, and today it has broken its that trend line. I think near-term, short-term hurdle is seen around its 100 DMA that is placed around the zone of 2,330. If it surpasses this level, then further a bullish move could be seen in TCS toward the levels of 2,480 to 2,500, and this positive view will remain intact till it hold up the levels of 2,200. So that would be the strong support for the TCS. So I think with this support, we will see positive momentum in this stock on the upside and can expect the target of 2,480 to 2,500.
Okay, ladies and gentlemen, we'll start wrapping up trade for the day. Metals have started to come in. Look at Steel Authority 165, and the reason why Steel Authority has to be marked is because Steel Authority has corrected very, very sharply over the last 2 months or so. We've seen a high of 207. We are now at 200-day moving average at 160. So somewhere from middle of May, the stock has corrected and is now at 165. Lakshmikanji, final question, a view on Steel Authority.
So after witnessing decent amount of corrections, Steel Authority of India has found support from its 200-day SMA that is placed around the zone of 157, and from there we could see a pullback move in this stock. So this is the strong support, and even if you look at the stochastic and RSI, that has given positive crossover. With MACD on the verge of giving this positive crossover, so I'm expecting this pullback move could extend higher, and we will see soon the levels of 173 in the Steel Authority of India.
We'll pause it here, ladies and gentlemen. Monday started on a very strong note as far as Dalal Street is concerned. Lakshmikanji, thank you so much for your advice. We'll keep an eye out on Havells as well as Motherson Sumi. Let's just recap the market. 23,952, 185 points higher, driven by banks, driven by IT. So that's a very, very big plus as far as the Nifty is concerned. Two of its strongest pillars are moving with very strong gains. Is this short covering? Is this value buying? Only time will tell. But for the moment, the Nifty is rejoicing. The 4% downtick on oil and the opening up of the logjam and Parliament and the end of the protest in Dalal Street. Thank you for watching. Stay glued.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is our special edition where we are going to be focusing on the upcoming IPO. Manipal Health is among India's largest private hospital operators, and its IPO is now going to be launching next week for all the subscribers. It will definitely rank among the country's biggest healthcare listings in recent years that we've also seen. It's a 9,200 crore rupees, a little over that kind of an IPO that is coming in with a fresh issue of 8,000 crores, and the rest of the portion will be offer for sale from existing shareholders. The IPO opens on July 29th, will also close on July 31st. There is a price band that's been announced between 560 and 590 rupees as well. Let me now welcome our guest on board. We have the MD of Manipal Health joining in for a special conversation. Warm welcome to you, sir, and thank you so much for taking the time out. Many congratulations. The street is looking forward to your IPO. First up, give us an understanding of what is the aim with which you're launching this IPO.
So first of all, thank you, Sakshi, for having me on your show. The primary purpose of this listing is to, the inputs would be used, the proceeds would be used to repay and actually prepay some debt that we have. We had taken about 6,000 crores of debt some months ago to complete the acquisition of Sahyadri Hospitals. And the primary purpose of this listing is to raise proceeds to repay that debt.
Okay. So could you also help us understand, when it comes to the offer for sale, who are your selling shareholders and what would be the stake, or shareholding pattern look like post the IPO?
So, Sakshi, it would be proportionate. All the existing shareholders are selling proportionately. In terms of post-listing shareholding, between Temasek and the Manipal Group, they would continue to be promoters and continue to have a majority stake.
Okay. What factors, Mr. Jose, were considered before deciding on the timing of launching this IPO, and how much of it was driven by the need to give an exit to the existing investors?
Like I mentioned, Sakshi, there is no need to give an exit to any of the current investors. And like I mentioned, our OFS is a very small proportion of the total issue. 8,000 crore primary versus an OFS of the range of 1,200 crores. So there was no desire for anybody to really get a complete exit at all. I think, like I mentioned earlier, people are selling pari passu. And so the primary purpose, to reiterate, was to raise funds to pay down the debt.
Okay. What would be the debt on the books after the prepayment, sir?
We could be net debt zero. In fact, Sakshi, currently our net debt, net of cash in hand, would be about 7,500 crores approximately. And after a primary raise of 8,000 crore, we would be net debt free if we desire to be so. But we have to take a call as to what is that we would want to really prepay, and how much of proceeds that we want to retain in the company as cash in hand, so that we could use it for anything opportunistic or any requirements that we might face in the future.
Absolutely. Give our viewers an understanding, Mr. Jose, of what makes Manipal Hospital's business model unique when we compare it to the peers in the healthcare space.
I think we have used both acquisitions and organic growth as an instrument of growth, and we probably have done the largest number of acquisitions in the recent past. And I think what sets us apart is that we've been able to not only acquire assets but integrate them into Manipal, and ensure that we end up as one common brand, one common team, one integrated organization in terms of processes, in terms of everything that we do, IT architecture, of course, in terms of branding. I think that is something that we have done well. Including Sahyadri, which we acquired 8 to 9 months ago. We have completed 5 acquisitions, and I think that track record is something that we are pretty pleased about.
Absolutely. So, when we talk about your own geographical expansion, how have you gone about it? If you could cite any specific instances of certain region, like when you forayed into the Eastern India space, why was that chosen? What was the process going about it? And how are you looking at your geographical presence right now?
I think actually what has driven us is our assessment of opportunities that exist in various parts of the country, especially in terms of lack of quality healthcare. You asked about Eastern region. We always felt that the East is underserved in terms of the highest end of quality healthcare, and that is something that we thought we could plug. We used to get a large number of patients into our network from eastern part of India. So therefore, Manipal was a brand name which was familiar to that region, and therefore getting into east was a fairly straightforward decision. And we looked around then for opportunities, and in fact, two of the acquisitions in the recent past has been in the east, AMRI and Medica, which gave us really a significant presence in that region of the country.
Absolutely. Now, also help us understand, sir, currently we understand, a large part of your revenue comes in still from Karnataka. How are you looking at the aspect and going forward, how are you looking at the revenue distribution when it comes to geographies?
So actually, you're right about approximately 40% of our revenue, if I'm right, comes from Karnataka. But I think that ratio is really coming down, and as we expand, we mentioned about our presence in East. With Sahyadri, we are the largest hospital network in Maharashtra now, and we have our presence in the northern part of the country, and we are adding capacity in terms of greenfield in Raipur, putting up a facility in Mumbai. So I think as we execute these plans, the proportion of revenue from Karnataka would continue to drop, while overall our revenue would continue to grow. The concentration in Karnataka would continue to drop. I think that's the plan, and most hospital chains got a so-called home market, where operations began, and it is not unusual to have a revenue concentration, in one region or one geography. I think what we've been able to achieve is, apart from Bangalore, which is our home base, we've been able to create significant presence and capacity in Kolkata and Pune as well.
Okay. So let's also discuss a little bit about the valuation part. Give us an understanding and our viewers as to how did you mark yourself against the listed peers? What was the broad methodology also used in this exercise, and how do you see this going forward?
I think the way we looked at valuation, Sakshi, is that there was no intent or the need to maximize the value for anybody, because, like I mentioned earlier, it was not a case of exit to be given to shareholders. I mentioned of our total issue, OFS was a very small proportion. Therefore, that was not a consideration at all. That maximizing value did not become an end object. So therefore, it was about the opportunity we wanted to present to the potential investors, our enterprise, where we are, where we would likely to go if things get executed well, and then really see if investors find this value attractive enough for them. So that's a method, that's a method or approach that we use. And therefore, comparison with peers beyond a point is not really, really relevant in our mind. I think it is for investors to really assess, where we are coming in terms of our value, and it is really for them to make the judgment whether what we offer is attractive or not. So we would really want to leave it to investors to react to this and maybe comment on that.
Right. If you could help us understand it in the immediate 2 to 3 year timeline, what will make Manipal Hospital's business case compelling to the investor community? And if you could help our viewers understand what would be on top of your radar or your top 2 or 3 priorities as we go along over the next 2 to 3 years.
So, Sakshi, 2 or 3 things, which we would really tick off. One, of course, is Currently, our capacity utilization, we got about 13,000 beds, like you mentioned, the largest provider in terms of bed capacity in the country, and our occupancy is only about 65%. So there is significant headroom to grow in terms of volume and occupancy. These are fully invested beds available. So that is one lever that we have in our minds. We have about 3,000 beds coming on stream over the next 3 years, including brownfield expansions and fresh capacity getting created. Third, of course, is the recent acquisition of Sahyadri is yet to be fully integrated. One of the reasons that we pursued that is the opportunity that we see to really turn around that asset to deliver to its potential. So these are the three key tasks ahead of us in the next 3 years. Execute well in creating the greenfield capacity, ensure that Sahyadri performs to potential, and see that our capacity utilization is growing on a volume-driven basis.
If you could also highlight for all our viewers, after the full integration takes place of Sahyadri, by when do you finally see the peak potential being seen on the books, combined books right there? And what kind of a revenue potential does it hold?
So, if past is any indication, our experience with other integrations, if that's any indication, certainly I would think it's about 4 to 5 years before an asset of that nature, a network of that size, can be fully integrated, and the growth to the full potential is a journey. It is not something that we are expecting in year or two or even three. I think it is a 3 to 5 year kind of a journey where we look at structural changes or structural corrections that we could bring into that asset. Low-hanging fruits like synergy benefits, those kind of aspects are fairly easier. But I think it is more about top end of clinical programs, service excellence, digital strategy. I think these take time, and we look at about a 3 to 5 year period, provided we execute well for that asset to really get to its potential.
Right. If you could help us understand in your journey with both respect to challenges and opportunities, what's been in respect of creating a presence outside of South India been? Also, is there a unique approach to build a brand in each region that you look at right now?
When you get into a new geography, you have the task of establishing the brand there, conveying to people what Manipal offers. I think that takes longer than going deeper in an existing geography. For example, if you put up more assets in cities where we are already present, it's somewhat easier in terms of ramping it up in terms of occupancy and getting it to the revenue potential that it might have. But when we get into new geography, for example, when we enter Raipur now in the next several months, I think it's going to be a different experience because we need to establish ourselves as a brand. We need to really convey our promise to the patients and the families. So it takes longer. Therefore, brand building is an effort. It is not something that we take lightly. We would spend time and effort and resources to ensure that the experience that people have in the other parts of the Manipal network is replicated in every new geography that we get into. I think that's the philosophy that we would want to keep in mind.
Absolutely. So since your M&A story has been quite interesting, are there any gaps that still remain to be filled from an expansion perspective? And how are you looking at the inorganic growth even beyond Sahyadri to facilitate this process?
Like I mentioned earlier, Sakshi, the next 2-3 years is going to be a focus on, really getting the work done in terms of the expansion which is underway. I talked about the integration of Sahyadri. But having said that, we would continue to be alive to opportunities in geographies which are of interest to us. Like an acquisition can never be planned. We have to be alive to react to a situation. So therefore, it's about having clarity on the geographies. For example, we would be interested to get our presence into Kerala. we would look at a potential of having an asset in a facility in Hyderabad. We would want to deepen our presence in the national capital region. So these are some of geographies that we would be keeping an eye on. But like you know, these are acquisitions are not predictable. So as an relevant opportunity comes in, we would explore those. But while that opportunistic work would happen.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What's Hot, a show that focuses on the biggest buzz on the day street as we begin this fresh and new week. That's also going to be the monthly expiry week for the markets. We have started up on a positive note. There are no more Monday blues that we are looking at after 5 consecutive days of a fall. We had a positive gap up start and the markets are holding up onto the gains. We are about 160 points higher on the Nifty. 23,927 is what we have on the Nifty, and all the sectors of the Nifty are contributing to the gains right now, led by the IT stocks once again that had driven the show last week and are continuing with their positive move even this week as well. We are seeing about a 2.5% kind of a move coming in for the IT pack. Real estate also follows, again strengthening its move. We're looking at the small caps and the mid caps also pulling up higher. Those are the top gainers on your screens. TCS, Trent, IndusInd Bank. Many banking names are also in focus today. A lot of banking names have come up with the Q1 numbers and markets are rewarding some strong numbers in the session today. Some of the second rung private sector banking names are in focus. We're going to be focusing on them. IDFC First Bank, DCB Bank, AU Small Finance Bank. These are the names that are rallying in the session today. We're also looking at the pharma names, auto, FMCG, all of that pulling up higher. India VIX is down by 5.5% at 13.2 odd levels, clearly indicating to some sentiment improvement in this new week as well. This has all happened also because over the weekend we did see that the strikes between US and Iran also stopped for a tad bit, and we are again seeing some taco trade play out. Therefore, the crude oil prices staged a sharp recovery. Remember last week we were talking about $100 per barrel being hit. Today we are seeing a sharp fall overnight, 5.5% off a fall, and $92.9 per barrel is what Brent crude prices are trading at, bringing back all the focus onto the oil and gas story and the crude derivative stocks yet again that are also rallying in some kind of a recovery action that we are seeing in the markets today. That's something that will keep our attention busy. In the session today, we are already looking at Sensex surging over 600 points. FMCG IT stocks now leading the rally. Even in the broader markets, look at some smart names today. Cartrade Technologies 7% higher. Dr. Lal Path Lab 6% higher. IDFC First Bank, we already pointed out post the earnings, 5.5% higher. Kaplan Point is another one that's up by almost 6 odd percent in the session today. Whereas on the losing side, you have Zen Technologies. After the Q1 numbers have somehow disappointed, 5.5% lower. New India Assurance, Chennai Petro, ITD Cementation. These are the stocks that are otherwise declining in the session today as well. But when we look at the clear stocks that are in focus, a lot of those banking names are clearly making their way higher in the session today. And we have a lot of broad-based movers that are catching the attention. Let me pull up some of those again. For our viewers to see what we have on the Nifty 500 names apart from the ones that I've talked about. Kirloskar Electric Company is higher. Senco Gold from the gold space is up. Sesha Sai Paper 9.5% higher. That's another one that's doing very well. We have Pravek making its way come back after a long time. This one is also moving up strongly in the session today as well. We're looking at across the board. Surana Solar also up by about 9 odd percent that we can see. Those are some names in the broad markets that are doing well. But on the downside, you have Gandhar Oil declining almost 10%. Mostrip Technologies is down. Zen Technologies we marked out for you already. Imami Paper is doing a contrast there with Sesha Sai Paper.
Gensol Engineering, those are the kind of stocks that are declining. But let's welcome our guest on board. We have Mr. Devin Choksi joining in as our market expert of the day. Warm welcome to you, Devin sir. Good morning. Good to have you with us as always. With your comeback, we are seeing the markets also finally come back after 5 days of a disturbing action that we saw on the D Street. Today it's 150, 160 points up in trade. How are you looking at this fresh action? Will it sustain? Will it be again range bound? And of course, every time the markets recover, it's only on the back of the global uncertainties that continue to keep making its way back into the sentiments. How are you advising investors to trade the markets right now or invest in the markets right now?
Yeah, good morning, Sakshi. Well, I think this market remains to be stock pickers market because on one side, the global macros are definitely upsetting. Crude oil price in particular and resultant impact due to crude oil prices is certainly, I think, not letting us have, I think, a good picture as far as I think the direction of the overall market is concerned. But individual stocks within this market, they remain attractive, particularly those frontline stocks which are part of Nifty 50 or Nifty 100. They are in between giving a good opportunity with the sharp price correction which they witness. And that's where we like some of the companies in the manufacturing space, some of the companies in the finance space, companies which are largely catering to the areas where the predictability of the business is relatively higher due to higher inflow of orders from defense, from railways, from power and power utility segment. Even discretionary spending in auto OEMs is also definitely giving a good amount of clarity from the investment point of view. So yes, I guess I think the opportunities in individual stocks across the market, definitely I think it's a challenging period.
Okay. Devin sir, we'll understand from you on the back of the crude oil prices again, falling. We are again seeing the oil and gas space come back into focus. OMCs are reacting positively. This was the space that was reacting sharply lower last week when we saw, some of these companies report massive losses in Q1, HPCL, BPCL. Again, this was on expected lines because most of the West Asia war impact is being seen in Q1 as far as their own books are concerned. We are looking at even oil derivative stocks like Indigo come back into action as well. How are you looking at oil and gas and maybe aviation tire stocks, all of those that are only, looking at how crude oil prices will trade? Could you hear me, Devin sir? I think there is some connection lost between the lines as far as Devin is concerned, but we'll get him back on the platform. But look at how Indigo is trading at viewers. We are looking at a 3.5% uptick right this morning when the stock opened. It was the top mover on the Nifty, still about 3.5%. Percent higher at 5,163. That space is in focus. Let's also pull up some paint stocks and tire stocks to see how are they reacting. Of course, we saw HPCL and BPCL reacting positively today. Paint stocks are also up and about. Devin sir is back with us. Devin sir, the oil and gas related stocks, OMCs, paint, tire stocks, how are you looking at those?
Well, I think they are not the best ones to look at today because of the crude oil prices. Honestly, I find that when the oil derivative prices they remain volatile, they hurt most, I think, to the user industries which you are mentioning, and that's where probably we are not very comfortable putting across our thoughts on this subject. As such, I think we believe that I think oil and oil related commodities they are going to be subject to lot of fluctuations. Neither the price trend is certain nor the input cost is certain. So certainly, I think stay away from it for the time being. At least I think that's the view.
Okay, let's also talk about the space that's reacting positively. IT space is leading the gains today. Again, we've seen a brokerage view there. Jefferies has ended its underweight stance on the IT sector. It's also added Infosys to its model portfolio as well in its latest strategy report that they have mentioned. They're talking about how IT sector is already down 25% so far this year, with the top players TCS, Infosys, HCL Tech and Wipro declining anywhere between 35 to 50% from their 2-year peaks. They are now trading at a price to earning multiple of 13 times to 17 times odd. They're also looking at revenue growth in the IT sector to be low to middle single digits over the financial years. FY26 to FY28 as well. So let's try and understand how should you be playing this. Devin sir, we've seen an underperformance for 1.5 years. We've seen how earnings have come in for this quarter as well, and some of them continue to have a cautious outlook on the guidance as far as the growth outlook is concerned for some of these companies. What was your fresh approach to the IT pack now?
Well, I agree on one aspect that the downside risk in the stock prices is definitely limited because the stocks are quoting it below their intrinsic value. So, to a greater extent, I think downside risk is not worrying me. The larger picture also is not worrying me because larger picture remains quite clear as far as most of the IT companies are concerned because they are adapting the model AI model in their consulting, in their coding, and in also in the deployment as far as the client orders are concerned. So they are adapting to the AI model very well. However, this model is being adapted at the same time. The revenue charging mechanism, which is currently time and effort basis to an outcome basis, is still not happening as speedily as I think one would have asked it for. So, from a perspective of looking at next 4 to 8 quarters, I believe it's going to be a gradual transition into the revenue model, and that's where the larger amount of conviction is that over a longer period of time, the business is of Indian IT companies. They remain relatively, I think, much more convinced. They're much more stronger. The near-term pressure is not something which one can easily accept it because on one side, in TCS and HCL Tech kind of companies have been seeing higher amount of order inflow from AI segment. On the other side, companies like Infosys, they've been relatively a struggler as far as I think their ability to get the new business is concerned. So certainly in the near term, the outlook is not convincing as far as I think the companies are concerned. Though I agree that the downside is limited and the upside, I think the potential remains absolutely high. In between, I think the middle term, I think is a challenge.
Okay, let's also focus on the banking space. Today, a lot of second-rung private sector banks are in focus, Devin sir, on the back of the earnings that they've reported. We've seen IDFC First Bank up by 9% I don't even remember last time I saw IDFC First Bank rallying in a single day. Of course, we have seen more than doubling of the profits there. DCB Bank has reacted very positively to the numbers, 8.5% higher. AU Small Finance Bank is also up and about. We're looking at IDBI Bank as well. How are you looking at this entire space, the second rung private sector banks? Do they have a lot of value that one should look at?
Well, I guess I think the important point in this quarterly result that one has observed, the lower amount of NPAs and relatively stable margins that these banks have reported, along with the corporate loan book, particularly on the working capital side, has expanded. And that is the analysis that one come across that yes, I think these banks have actually stopped the downside as far as their business is concerned, stabilizing at the middle level now, and would like to believe that I think they will continue to hold the fort as far as I think growth is concerned. So from that perspective, we would think that yes, these banks are looking relatively okay. The larger ones, big daddies, the peers in the private sector, they have been growing their book on the larger AUM base, and that's where probably I think one would like to remain more focused because eventually I think they would grow larger size of the AUM and so the profits in the books of the bank available at around 1.52 times price to book value. Is downside the risk is limited in some of these large private sector banks. So focus actually stays over there. Though I agree that upside potential in the stock price would be somewhere around 15 to 20% at best in next 12 to 15 months. So that's the outlook that we carry at least at this point of time.
Yes, you rightly also compared with the large peers. Let's talk about HDFC First Bank, the kind of disappointment that we saw in the earnings. And of course, now the US shareholders, law firms are now investigating for a lot of issues as well. So it seems like one after the other, the troubles have only mounted on HDFC Bank despite the efforts that they are constantly doing to overcome the recent challenges. It doesn't seem to be solving very soon. What's happening with HDFC Bank? And, how should an average investor look at it? This is one stock that is probably in every investor's portfolio, either directly or via mutual funds, because 99% of the mutual funds would have an exposure. All the FIIs still have HDFC Bank despite their, cutting down exposure to India. How should one be really looking at HDFC Bank now?
Well, for over 5 years, I think the stock has not performed as far as the stock market is concerned, and I think it has remained at the same level. That's a real worry actually, because if the one looks into the reasons are a little peculiar. Of course, in the initial years, they were absorbing the entire HDFC Limited's mortgage business into the books of HDFC Bank. And that's where some amount of struggle had to happen for those 2 years, I think, which is now over long back. The other thought that one was carrying, this bank has to invent itself on the digital side of the customer interface. That user journey has not happened, and that's a real worry, because if you are a large bank with 31 lakh crore AUM, second only to SBI in the universe in the country, and if your customers are large size corporate customers, if the product is such a strength that you have, why not, I think, the digital way of banking rule this particular area in a very systematic manner? I don't think that. I think that is something which we are experiencing, or even we are hearing from the bank, and that's a real cause of worry. Should they address this situation in any which way? Maybe I think the downside is definitely limited. One may see upside into the bank stock price, but subject to this particular implementation which we are talking about.
Okay. Let's also talk about beyond the secondary space, the primary market space also seems to be in fair action. In fact, we are going to be looking at, after July's action, about an August rush for IPOs also to continue. Over 24 companies are planning their debut next month. We are going to be seeing again some big ones coming in, like Manipal Health is going to be coming in as well. We are going to be looking at new age companies, Zepto, PhonePe, expected to lead the significant market activity there. What's happening in the primary market space according to you at this point in time? Again, is it going to be confusing a lot of investors there to pick and choose, or probably just participate in every IPO that keeps coming their way? How would you advise investors to look at this massive rush of IPOs that's going to be starting, and any top ones that are you busy with tracking at this point in time?
Well, I guess I think the spotting the investment opportunity is not so difficult out of the bunch of stocks which are entering into the market. The real big challenge is, after these stocks getting listed, who is following these companies from investment point of view? Only I think some of the smaller companies which are coming up with a market capitalization of such a small amount, they are being followed by all punters in the market, and that's where probably one is not so happy that the genuine investors, they invest, and ultimately I think the stock is traded by all the so-called small-time traders who are basically taking the opportunity of lower liquidity to drive the stock price up or down. That's a worry, and that's where probably I would have imagined that the regulators, before the catastrophe happens, I think could have possibly created a separate window for such kind of companies. So they may well argue that we have created SME window, but SME window is definitely, I think, one stigma that one would not like to discuss. These mid-sized companies, which are sub 10,000 crore market cap companies, they really require to be on a platform which is similar to OTC platform, so that over there you can possibly create some kind of a buying, selling liquidity depth that you can also provide through market makers, etc. But I don't see that approach is happening neither by the exchange nor by the regulators, and that's where probably one is disappointed that even if some of the genuinely good companies entering into market, one is prevented from investing into those companies because of these reasons of the stocks being played by the punters in the market.
Fair point. SBI Funds Management also, it's following the same trend. We've seen for billion-dollar IPOs coming in with strong anticipation, massive subscriptions. But post the listing, it's again slipping below its IPO price as well. Again, looking at disappointing the street. What is happening with this billion-dollar IPOs, and is there a trend that you're spotting there? Is there something wrong with the way they are approaching the markets, or what should investors be looking at? Because they're looking at these pedigree names, they're looking at these massive companies that have existed in successful businesses for last many years, and then they make an entry onto the D street. What is it that investors should look at in these billion-dollar IPOs?
No, they are good companies, frankly, established companies. That is why they are that value. And certainly, I think those investors who are looking at long term, for them, the investment opportunity could come in very right. I think at a price when the stock is available, say for example, below market price. So such kind of companies, I think, are definitely look good to buy into the portfolio during the corrective phase after the listing. Universally global, we have seen that I think post listing, many of the companies they do come down, largely because of the fact that I think there is a kind of a lacuna in the system, wherein most of the time you end up in providing the allotments to the institution investors who basically want to flip the IPOs in a limited period of time. And as a result of which, I think the genuine small-time investor suffers because they neither get the farm allotment, which institution investors do get, and institution investors having got the farm allotment, I think use this farm allotment for flipping purpose post-listing. So it makes sense to buy some of the large companies with a $1 billion plus market cap in the portfolio post listing when the market price offers an opportunity below the IPO price.
Fair point. I hope that this has given some sense to all our viewers who are looking at this big IPO rush coming in, getting prepared for that as to how to look at and gauge certain companies that are coming in. But let's shift focus back to the secondary markets and try and understand, what should be our approach there. Any particular pockets, according to you, Devin sir, that you are turning bullish on for the second half of the fiscal year, where whether or not the situation remarkably improves on the global stage, there is already a trend that's shaping up positive?
So, improvement in the global situation definitely is something which all of us are asking for, and that's a way to look for as well. But how soon, how fast it will happen and things would stabilize, very difficult to say at this point of time because we all were hoping that situation is getting normalized and in between again the war erupted. So from that point of view, nobody is confident about predicting the trend beyond a point. So that's where we say that individual stocks with the corrected valuations, they become an opportunity, not the overall market. Uh, and we feel that I think if that is an opportunity, then this particular period, the July to September period, could really be a good period to buy into some of the good quality stocks at a corrected valuations. And something which we talked about in manufacturing, something which we talked about in financials, we feel that I think they are the ones one can look into from considering the portfolios.
Devin sir, are you also looking at any favorable trends of the FIIs towards Indian market? Last couple of months, there have been many instances where we have seen all the, money that was chasing AI, tech, semiconductor stocks. That's also seen, sharp dips as well. And that's where the markets are already pointing out to maybe a valuation bubble or a peak, that may have reached after substantial flows that have taken place over the last 6 months or so. Are foreign investors going to be chasing the same kind of themes that India was missing on so far, or is it going to be again coming back to the fundamentals, broad economy names that foreign investors always chased India for?
So globally, certainly the leadership is taken over by the entire space which is belonging to the ecosystem of AI. Be it large language models, be it semiconductors, be it packaging of semiconductors, or even for that matter, application users of semiconductors, including companies like NVIDIA or some others.
Correct.
So obviously, the stage has been taken over by the new generation businesses. India certainly lags behind in this area of activity. We are creating the ecosystem for new generation of businesses. We will be adapting the new generation of the businesses sooner. But at the same time, I think today they are missing in the universe. And as a result of which, I think the money shifts outside the country from the global investors. Now, whether we are creating enough much of opportunity for them to come into the market, answer is yes and answer is no. Yes, more because some of the large corporates are actually putting across the larger plants, larger data centers, even
Yeah.
semiconductor facilities, etc. But not necessarily that I think they're inviting money from all these investors. They are probably funding these activities out of their own balance sheet. So to a greater extent, those investors, when they see the opportunity at a valuation, they will jump in from the global space. As of now, we don't count them as far as I think their presence in the Indian market is concerned.
Mm. Do you also see in India probably the proxy AI plays are better off to look at rather than hardcore AI focused companies, because we do not have any equivalent to Nvidias of the world or TSMCs of the world back home, rather than looking at that because you also alluded to how major companies are looking at setting up massive data centers now, as to the proxy demand that it will create for power, for electricity, for components there. Should one be really looking at betting on that?
Yeah, why not? I think if opportunity is around, some of these companies definitely hold the promise, because the key integration into some of the larger what you call AI related activities that the globally companies are experiencing. Some of the chemical companies which are powering, say for example, the requirement of gases and chemical, specialty chemical, which probably is required even in fabrication units in the global market in semiconductor space. Such kind of players definitely hold a good amount of merits, but they're far and few in between. So I don't think that one can generalize and keep putting our efforts on. In fact, market is becoming so crazy that moment I think they hear some of these companies catering to renewable energy, catering to battery storage, catering to the semiconductors, AI, etc. Market gives them a crazy valuation, and that's where probably one is not very happy about. So yes, I think you have to be very watchful, very selective about your portfolio investment at the same time.
Fair point. All right, Devin sir, time to thank you for being with us on the program today and for guiding all our viewers there on various of the segments and sectors we talked about today. Always a pleasure to have you with us on Business Today. Thank you so much. Viewers, we are holding on about 23,913 at this point in time on the Nifty. But to highlight for you, Patanjali Foods is in focus. There's news reports that are indicating that the company has been ordered to recall or has ordered to recall wheat flour batches over excess pesticide residue. Patanjali Foods has clarified the recall would not have material impact on its financial or operational activities, barring the value of the affected batch, and the shares are still holding up at this point in time. But that's the news that is keeping Patanjali Foods is in focus. There has been an order to recall a batch of wheat flour after tests have indicated that the detected pesticide residue in excess has been found in those wheat flour batches, and the order has been issued by the Office of Assistant Commissioner of Food Safety in Kottayam in Kerala after a batch was found to contain excess residue than the maximum toleration limit that was seen as far as pesticides are concerned. The recall order was dated July 20th and was received by Patanjali Foods on July 24th. The company has not disclosed the batch number, quantity of the flour affected, and the markets where all this batch was sold so far, but there is a recall in process. That's something that some reports are indicating. Right, viewers, we'll wrap it up on that note. Thank you so much for staying with us on What's Hot. But up next is our personal finance edition, Money Today, and today it's going to be all about mutual fund ka funda, and the topic that's going to be covered in today's trading session will be all the difference that you need to know between active and passive funds, and where should you as investors be focusing on in this current market. So stay tuned for that. Up next, a detailed conversation on active versus passive funds. how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
Hello and welcome. You're watching our new show Money Today, our personal finance show where we're going to be discussing today mutual funds ka funda. For decades, active mutual funds have been preferred choice for Indian investors. But over the last couple of years, we have actually seen a lot of passive investing through index funds and ETFs also gain significant traction thanks to lower costs and consistent benchmark linked returns that we've been seeing. So in case you are still confused about whether you should be looking at active funds or passive way of investing in the markets, we're going to be decoding everything that you need to know about active and passive funds and how do fund managers decide their strategies in both of them, what are the expense ratios and the differences there, and how should you as an average investor be looking at the entire scenario. We have Pooja Binde, our certified financial planner, as an expert from PP Investments joining in on the platform to decode the entire scenario for us. Pooja, warm welcome. Good morning to you. We'll start off with the basics. A lot of people keep asking you, I'm sure, that what exactly are active and passive mutual funds? What is the key difference there? And, the differences in the ways that these active and passive funds invest investors' money. So give us a broad sense, a simpler sense that a lot of our viewers can understand if they're just starting off with their mutual fund journey.
For having me on the show. And the mutual fund ka funda, as you said, active versus passive. I think, the moment any investor or a viewer decides that, okay, I want to start, investing in mutual funds, there are many questions. Okay, first of all, which route, regular or direct, then in, active funds or passive mutual funds. So, we're just simplifying it here.
Sure.
When we are investing in a mutual fund, we are investing, in a bunch of stocks. That stocks are actually, listed on a stock exchange, right? So that stock exchange is an index or a benchmark. We use these words to, simplify that it's a benchmark or an index. So passive, as the name suggests, that it is passive in terms of, the reaction or the strategy or the investment, funda, you can say. Basically just replicating the index, whether it is a Nifty 50 or a BSE Sensex or,
Okay.
Nifty 100, Nifty next 50. So whatever indexes or indices are there, it is just replicating that index as it is. The same proportion of stocks as in that index is replicated in an index fund. But when we are talking about active, as the name suggests, active. So, and when we know we've chosen a fund, like a mutual fund, which has a fund manager. So the
Correct.
fund manager role is actually, you can say active in active mutual funds, meaning it is their job to generate alpha or to generate more returns, beating the benchmark, meaning beating the index. So these are
Okay.
two clear differences between an active mutual fund and a passive mutual fund.
Fantastic. So active funds are those where you give your money to the fund manager, trust his instincts to select the stocks, on his own research and maybe beat the benchmark or the index in which you are investing. Say for instance, if you can invest in an index fund like a Nifty index fund, which will only replicate the returns of the Nifty for you in your portfolio, but when you invest in top 200 stocks or top 50 stocks of the Nifty, then you in fact ask the fund manager to go by his instincts, select the stocks that he believes can also beat the Nifty returns. That in simple words is active versus passive. Is there a massive difference, Pooja, between the expense ratio and the kind of expenses investors have to incur in between both of these kind of funds, and should it be a factor to decide which one should one choose?
Yeah, so I would say in terms of expense ratio, because obviously in passive funds it is just the replica. Okay, so the expense ratio might be in the range of 0.05 to 0.5, something
Okay.
like that.
Okay.
But we are talking about active mutual funds, because obviously the fund management cost and the expertise and everything is you can say also a part of the expense. So the expense that you can see in an active mutual fund can range from 1 to 2 to 2.5%, depending on the fund size, the AUM size, and everything. But when we are talking about deciding on the basis of expense ratio, I would not say that should be the only reason to decide कि चलो इसमें the expense is less, so let's go for this. Because you need to understand that if a fund manager is charging an X fee, okay, it is his job to generate alpha. So we need to see whether the fund manager is able to beat the benchmark returns in any active mutual fund while making selection. So again, when it boils down to the question, okay, then which should I invest? Then I would not say there is one direct answer that, okay, go for an active or go for a passive. I would
Okay.
say you should have a combination of both. When you are a first time investor, obviously there is some even if when we do a risk analysis, there is still some doubts about investing in stock markets, because when you're seeing the value on daily basis, it's actually a very
The
stressful
risk
activity.
appetite is low.
Exactly. So a passive fund can bring that kind of the stability in an investor's mind that, okay, I'm following the index, and whatever index companies are there in the index are all big short companies, and you don't have much of a difference there in terms of any kind of a you know good selection of stock or a bad selection of stock. The only
Correct.
difference in the return of an index could be a tracking error, which word we use as tracking error, meaning it should actually replicate the index.
Index
Sometimes
in terms of
it
return.
sometimes it might have a little tracking error. Maybe the fund manager might decide to hold a little bit in cash, so that could be the only tracking error. But when it comes to active fund management, there has to be a massive difference in terms of return generation, because if you're paying an additional fee to invest in an active mutual fund, it has to generate that returns. And we have seen there are funds, there are categories wherein time and again, whenever we do a selection of which mutual
Sure.
fund to invest, it is always the first thing we see is whether it is beating the benchmark. So definitely, I think a
Right.
combination of two, Sakshi, would work.
Absolutely. Let's talk about the big debate that comes around returns. Do active funds consistently outperform passive funds, or does the data tell a different story? Or are there particular markets where each of these funds perform better? Give us an understanding there, Pooja.
Yeah. So when I'm talking about returns, now I'm just giving you an example. Say, for example, Nifty 50 is, generating, this is an example, generating a 12%. Okay. Now, when we are investing in a passive, Nifty 50 index fund, the same 50 companies, everything same. But as I told you, there is a little bit of tracking error. So the return expectation would be in the range of 11.8 or, 11.6 or something like that. But when we are talking about an active large cap fund, which is in comparison to a Nifty 50, then the fund manager might go, overweight on stocks like banking or, defense or IT, manufacturing, and underweight on others, depending on what he thinks is, the momentum, or, whatever is the current trend, or whatever is the valuation of the company, everything, the P ratio, everything comes into consideration while making a stock selection. So if the calls go right, the fund can generate maybe 14-15% return. But if the calls don't work, it might go down to 9 to 10%. So this is the risk of 2% plus or 2% minus that we can expect in an active mutual fund, according to me. And to conclude this particular answer, I would say, when we talk about categories, Sakshi, like large cap, mid cap, and small cap, major so happens that passive funds have outperformed large cap category, because there's not much scope in large cap in terms of stock selection, you see.
Okay.
When it comes to mid cap and small cap, there is a lot of playground, you can say. There is a lot of stock pick. The have to have an overweight in particular stock, and to actually display the expertise of the fund manager in these categories. So we see if you see a ratio more than 85% active small caps or mid caps have outperformed their benchmark. If you see in 5-year or 7-year rolling periods, this is I'm talking about SIP. And in passive, when we are talking about large cap category, only 19% has beaten the benchmark in 5-year rolling SIP period. So this data clearly states that when we are making a 4 or 5 fund portfolio, instead of an active large cap, we can have a index, a Nifty 50, or a Sensex, or Nifty 100 kind of a indice in that particular area. And when we're talking about mid cap and small cap, you can opt for an active fund management style over there. Is what I feel we should be ideally doing.
Okay. Are there, like I was asking, are there any specific market conditions where active funds have a clear advantage and where passive funds tend to do better? If you could help us understand, say for instance, last 2 years, we are talking about constantly how the Nifty has given just near zero returns to investors. So in this kind of a market, when external environment has been overpowering, when foreign investors have stayed away, in this kind of a market, do you think active funds perform better?
I think so, because the fund manager can clearly, make a decision in terms of which sector would perform in this kind of a market. When you're talking about 2 years, wherein Nifty has hardly given any returns, but we do have certain active funds. Now, in this active fund, maybe not a small cap kind of a category, but you can also opt for a multi-asset category, or you can maybe opt for a multi-cap category where the fund manager has option to have large cap, mid cap, small cap, and the proportion selection. Like for say, in multi asset, the proportion in terms of a commodity in that particular portfolio, or in when you're talking about multi cap, more proportion to mid cap. So I would say a flexi cap, multi cap, multi asset, these categories would work well in an active fund, as I mentioned before. But when you're talking about market cycle, there's one more thing I would also want to highlight here, Sakshi, is when we are talking about cycles and the fund styles, there are few fund styles also which needs to be considered, wherein we are talking about whether momentum style or quality style, or for that matter value style, or maybe low volatility kind of strategy. So these kind of options we have in the index funds, wherein the investor can decide in terms of what market cycle am I right now. Say, for example, if it's a growing market, it's clearly momentum style, which we all know, or a growth style, wherein even if in that kind of a market, a passive might definitely give returns because it's a growing market, a bull market. Correct?
Correct.
When we are talking about a bear market, or the funds are not performing well, a value kind of strategy works here to pick pick which kind of stocks or which is a good valuation right now in this kind of a market. I think
Sure.
active will perform
Tend to
better.
outperform.
Yes, because the fund manager has the expertise at this point, wherein which is the stock or which is the particular sector that he is more positive on, which will perform in this kind of a market. And when it is a volatile market, obviously a mix of portfolio works. So I think there's a clear discrimination here when we are talking about active, passive, and the cycles here. It's just that for an investor, to make it a little simple, I think, 5 funds that you are having in your portfolio, you can have 2 passive and
Okay.
3 active. And at the same time, it should cover a broader base market, which we always talk about, which is, mid cap, small cap, large cap.
Fantastic. This is
Yeah.
what I was actually coming to, Pooja, that when you said initially that there should be a combination of both active and passive for every investor to be able to have both kinds of benefits in their portfolios. And when you say have 2 passive and 3 active, how should one be going about deciding what kind of categories of passive funds and what kind of categories of active funds should one have in their portfolio? So if you could break it down for say young investors who are starting off their investments, or maybe who have just started off in last couple of years, how should they be deciding that whether their entire portfolio is well diversified in terms of both active and passive funds?
Very nice. So Sakshi, this is a very common question when young investors start investing, and there is a lot of confusion, because if you see why this is important or why to have this understanding is important, because when you're talking about investments, many a times DIY investors will start only with small cap and start only with some sectoral funds which has given more than 50-60% CAGR in 1 year, and then they
Yeah.
feel okay, it's the right time to have that fund, but they should understand the fund has already performed. The returns are already generated. It's not necessary it will have the same cycle again. So, as you said, if I am creating a 5 or a 6 fund portfolio, 2 funds, passive category, we can have Nifty 50 and Nifty Next 50, wherein
Okay.
35% in Nifty 50 and 25% in Nifty Next 50. So, approximately 55% can go to a large cap kind of a market cap in the first time investors portfolio. Then we can have mid cap around 15 to 20%, small cap around 10 to 15%, and a flexi cap also can work here around 15 to 20%, which can have a little bit of combination of international stocks and a good value strategy kind of a small cap can work here. And the 6th fund, as I mentioned, can be a multi-asset which can have a little bit of gold, silver, and everything. And I think this much is enough. It will suffice. The only thing is continue with the SIPs. I mean, see, if you're selecting the portfolio, the most important thing is just that one day, don't sit on the portfolio, select the funds, and then just wrap it up. It is it is not in a way wherein you need to see the portfolio every day. It is in a way wherein every 6 months or 12 months, try to top up that. It's very important. And one important thing, I think, Sakshi, is very
Sure.
important. In last 18 months, people have, maybe stopped SIPs, and they've told me also,
Yes.
the returns are not showing. In fact, I would have put that amount in FD. I just tell them one thing, that when you are seeing your mutual fund, statement, also put a, the exact thing. Don't put your all attention on the returns, like the CAGR or the IRR in SIP. Put a little bit of attention on the units also. When you are seeing the units increase when the markets are down. If you see something increasing in the portfolio, it will be a relief to you that, okay, even if the returns are not showing right now, because when we signed up for mutual funds everywhere, we've just understood one thing: it's a long term story, it's not a short term story. So identify with the long term thing, identify the cash flow amount as we are speaking right now, 2 in passive, 3 to 4 in active funds, and an SIP. I think there should not be any reason for you to not have this kind of a portfolio. And without any doubt, you should be investing in mutual fund story. Yeah.
Absolutely. So, Pooja, one more important question that comes in, since you pointed out that there is a large trend that you are spotting, that people are stopping their SIPs too soon, thinking that the markets are not going anywhere, so one should not be investing, but not forgetting that, you know, in markets and mutual fund investments are for the long term, they're not for the short term. That's something that they need to find out. In fact, data pointed out that only 10% SIPs are seen continuing beyond 5 years consistently. That's the kind of quantity that we are seeing in terms of the continuation of SIPs for the long term, and that's where the key worry is. Let's try and understand, because you as a financial investor have also talked about always that one should have a goal-based approach when it comes to planning for finances. If somebody is investing in these top 5, top 6 categories of mutual funds you highlighted that they have in their portfolio, how should they be deciding which goal should go along with which mutual fund, and where will they make the maximum benefit as per their goals?
Very well, Sakshi. So, I think the only thing, the first or foremost thing to the answer is, you should be having a goal-based approach. Now, when we are talking about goal-based approach, clearly, segment it, or you can, have different kitties of short-term, mid-term, and long-term. And when we are talking about long-term, you can definitely have the active long-term funds wherein, mid-cap and small-cap can play a, good role in long-term goals. When you're talking about midterm, which is, maybe in the range of 5 to 8 years, you can have flexi cap, you can have multi-asset, this kind of categories for this kind of goals. And when we have a goal in the range of 5 years or something, then if you're opting for equity, seeing the risk analysis is also very much important here, Sakshi. A passive fund can work best. So I think there is no one particular fund or category which is the best. It's a combination. Just try to understand 2 or 3 passive indexes, okay, and remaining active funds which are different from large cap altogether, like mid cap, small cap, maybe multi cap, or a flexi cap. Yeah, so it should not overlap, because ultimately we have to understand overlapping does happen in a good 5 fund mutual fund portfolio also, because large cap is playing a bigger role. So when you're overlapping the same stock, same number of stocks, same stocks in the portfolio, it is not adding up anything additional here.
Sure.
And when we are talking about many people stopping the SIPs and stuff, I would just say one thing to them, that in last 1.5 years, if you must have seen your SIP returns or whatever returns, that must be not very great. Maybe, just single digit, or maybe negative, depending on what kind of active fund you have in your portfolio, or,
Sure.
maybe a sectoral or whatever. But in this 1.5 months, or 1.5 years only, sorry, if you see the portfolio of some other investor in past 5 years, like invested for 5 years, they are at good double-digit returns. There is no effect to their portfolio. So if you understand this, you need to understand that long-term story, mutual fund will give you returns, because ultimately it's equity, and ultimately equity is the only asset class which by its nature will give you returns, because we are going to use all these companies in our day-to-day life. So it is as simple.
Absolutely. Thanks a lot, Pooja, then, for being with us on the program and for guiding all our viewers there. Viewers, we hope that this has helped you understand the difference between active and passive funds, and what are the things that you should consider before investing in such funds, what kind of combination works best for your portfolios. And do remember that mutual fund investments are for long term, and have that patience, have that goal-based approach that Pooja has talked to you about, that will eventually definitely give you returns. So do not just get discouraged with near-term returns and pull out too early. You may be actually missing out on the golden opportunity to create wealth for your portfolios as well. Thank you so much, Pooja. Appreciate your time with us. We'll continue to get you on our personal finance shows that we've just started. And thanks a lot for watching this edition. Viewers, in case you have any questions, send us your queries on the comment section below. We'll be happy to address all those queries with our experts who join in on our personal finance edition. Thanks a lot for joining in.
Hello and a warm welcome on Business Today Television, ladies and gentlemen. Just as the global macro gets a little troubled because of this escalating conflict in the Middle East, oil tops $100 a barrel, US bond yield goes beyond 5%, and of course the rupee heads towards an all-time low. All this is sort of creating a negative impression on the market, and as a consequence, the Nifty is losing steam. This is happening at a time when large caps have not really performed over the last 15-20 days, and Q1 earnings, especially in the large cap universe, has not been up to the mark. To discuss what should be the strategy way forward and what are the kind of stocks as also segments you should be adding to your portfolio or subtracting them, we are now joined by Mr. Anshul Singhal. He's the founder at Sehgal Associates. Namaste and a very warm welcome, Anshulji. How are you reading the situation at this point of time in the market? It looks a little difficult as of now.
Namaste, Shalindraji. Pleasure to be with you as always. Yes, it is an unnerving, anxious situation for everyone. However, these things have a way of settling themselves out over a period of time. And our belief is that this situation will be no different. Although, we can't predict what's going to happen, but in general, the balance occurs over a period of time and you just have to be patient. That aside, our game is really not to predict the markets. Our game is to identify opportunities that will play in whatever market condition exists at a given point in time. What I mean by that is that given what is happening globally and in the data center world, artificial intelligence world, what we are seeing is that global hyperscalers, they're raising their capex targets in their respective geographies in artificial intelligence spends. Now, if that is a trend which bypasses whatever is happening geopolitically, then we can take advantage of it. And we can take advantage by playing into that theme, whether through power or through data center plays or anything which is concerned or related to that space. That is the theme, that is the game that we are trying to play rather than predict market levels and volatility in the markets.
Okay. So essentially you are saying that the top 5 or 6 FANG stocks that are there in the US are expanding their artificial intelligence data center facilities, their global customer support centers, and you're presuming that a large part or a decent percentage of that business will come to India, and therefore we play that theme via Dalal Street.
You can, I'm not trying to say that theme will translate into upside for India in general. What I'm trying to say is that there will be Indian companies which will be catering to that theme. And if there is so much spend globally, then these companies will also witness that kind of tailwind. And in that regard, we participate in those companies based out of India. One thing, there are other themes also. For instance, if there is geopolitically this tension which is playing out, oil is on the boil, you will see that sovereigns, and India in particular, is going to invest heavily in the oil and gas sector to ensure that we get energy security as we move ahead into the future. Because energy is really, as we all know, is really the basis on which an economy grows. And so there are plays in energy which you can take advantage of if you're here sitting in India and take advantage of that trend, which is a global trend. So that's really what I'm trying to say. Identify trends, micro trends, macro trends, and take advantage of those.
Two, two globally, which is the artificial intelligence play and of course oil. What other trends are there globally which you feel will have strong tailwinds in India?
See, oil has a ripple effect. Now, just to give you an example, when oil goes up, raw material for synthetic thread that goes up, raw material prices. And when that happens, prices of synthetic threads go up. Now, what is the replacement for synthetic thread? It is cotton thread or cotton yarn. Now, that has a ripple effect on cotton yarn, and cotton yarn prices move up. So, as a cycle, you benefit if you're invested in the cotton yarn cycle, and you take advantage of that. That is just a ripple effect of what's happening globally because of oil. In India, there are micro trends. For instance, in the last 2-3 years, the microfinance sector has been going through headwinds. And that headwind is on its way out as we speak. If you look at the last quarter's numbers, I'm talking about the fourth quarter of the last fiscal, you will notice that many of these microfinance companies witnessed a revival in their earnings after nearly 8 to 10 quarters of a decline in earnings. And their commentary for the future also looked quite robust. I was in a conference recently and I met with some of these companies. And the one question most analysts had for these companies was that if there is weakness because of geopolitical tensions and the war in Iran, will that affect their business? And most companies said that the impact on their business is minimal, if any, and in fact, growth is only going to catch pace as we move ahead. So this is a micro trend which plays out in the country because of something that happened over the last 8 to 10 quarters. These are the kind of trends one is trying to catch and take advantage of.
Okay, so microfinance is a micro trend. We have oil as a cross-sectoral play, and of course the global spend on artificial intelligence and whatever impact that we may be able to make out on the Indian subcontinent. Another worry coming up, Mr. Sehgal, is this Trump tariffs now, two sets of them coming into action, one of course on labor laws and the other on generic pharma medicines in 12 months and 24 months from now. How do you think that vitiates sentiment not only on these sectors but broadly on the Indian capital markets?
So, those, there are two parts to this answer. If you look at the pharma sector tariffs, I'm reminded of, a time, say 3-4 years back, when in US, you had a significant consolidation of distributors. Like distributors were in the range of 8 to 10, and they merged and consolidated to 3 to 4. What that did is that it gave significant leverage to these distributors to squeeze the final manufacturers on pricing. And the manufacturers had to reduce pricing quite materially. Over a 3-4 year period, their pricing went down in as much as double-digit year-on-year. Now, what that did is that it became unviable for most manufacturers to supply to the US. So, if you were speaking to some industry participants in US, they would tell you that for some medicines, racks were empty because there was no supply.
a very warm welcome, ladies and gentlemen, to the booming world of portfolio management services, a section that has grown immensely well over the last 7 years, with fabulous performances coming into the market from companies such as Incred Asset Management. Let's just take a broader view. There are about 495 SEBI registered PMS managers who manage somewhere like 8.37 lakh crore rupees, and amongst the upper super top quartile is Incred Asset Management with its pharma focused portfolio, which has given phenomenal returns. If you look at how the stock has how the portfolio has performed, it has handsomely beaten all exchanges, all indices, as well as the healthcare index by a very wide margin. In the last 3 years, the portfolio has appreciated 27% each year versus the 12% rise in the BSE 500 index, as also the 25% rise in the BSE healthcare index. To discuss the way forward into where markets are and how CIO Aditya Khemka watches the sector, we are joined by Mr. Khemka himself to discuss the broader markets as also his portfolio. Namaste Aditya ji, and always a very warm welcome. Phenomenal tailwind for pharma stocks and an incredible performance by Incred Asset Management. How are you viewing sentiment these days?
Thanks, Shelji, for having me, and thanks for the compliments. Sentiments from an investor standpoint, I think, is that of slight cautious optimism, I would say. I know it's a cliche to say cautious optimism, but investors are liking the valuations that the markets have come down to, but they're still scared of the global macro where things refuse to settle down. And also, when I say global macro, I imply geopolitics as well as where the interest rates and currencies are headed. I think these are the two uncertainties that globally investors are talking about. And whereas valuations, I think, in the local market seems pretty decent at this point to deploy capital. So there is optimism, but then investors are also scared about when and how much to deploy at this juncture. I think that's the key worry.
So, Aditya ji, you've been fortunate on two accounts. Of course, it does not take even a whit away from your phenomenal stock picking. Weakness in the rupee was very good for export-oriented pharma stocks, as also the fact that the broader market crashed and investors sought the safety of pharma companies where revenue and profit was more or less predictable. Plus, we have this very strong tailwind of hospitals as well as laboratory stocks doing very well. Now, given the popular trade that is in the market in the pharma space, how are you viewing your own mid-cap focused PMS portfolio in pharma companies?
So, Shelji, two things here. I think, the type of companies that we invest in healthcare, right? Our healthcare strategy. These companies are mostly importers. They actually don't benefit from a weaker rupee. They actually get hurt by a weaker rupee. So the outperformance of the sector that you have seen in the past 3 to 6 months is actually not much to do with a weaker rupee. It is actually got more to do with the non-discretionary nature of the consumption or non-discretionary nature of the business that these companies are in. So, if a Thyrocare, if we take for an example, they import their reagents, they import their blood analyzers, and all of these is imported in dollars. And the depreciating rupee does impact their capital cost, but it does not give them any benefit on their operating revenue or margins. And hence, Thyrocare does not really benefit from a weaker rupee. It actually is a higher cost. Given, however, why the sector has done phenomenally better is because the global macro is not so certain, the local macro is not so certain. So investors may be slightly, wary of deploying capital in lending businesses or autos or IT or, other sectors, which may be cyclical in their nature. And hence, maybe this sector is getting more flows from investors, given that the earnings in this sector are largely non-volatile. They're fairly secularly growing, businesses. And because of which I think sectors are getting sort of some confidence in this sector for the near term.
So at the moment, Mr. Khemka, you have about 2,000 crore rupees in this wonderful scheme that has outperformed the broader markets as also the pharma index. There are new plans as well to launch a broader vehicle for investments. How is that progressing?
So, Shelji, again, just a small correction. We at InCred Asset Management, our total AUM is 2,000 crores. Our healthcare PMS at this juncture has just crossed 1,000 crores. So, the healthcare, the size of the healthcare PMS is at 1,000, and our other products, which are small and mid cap and multi cap, put together is another 1,000. So, the total AUM is 2,000. Now, at this juncture, what we have done is we have launched an open-ended AIF for our healthcare strategy. This is on behest of investors who don't like to invest in PMSs because of the complications that come with a PMS investment. There is a demat needs to be opened in their account. There is a taxation that they need to go through every quarter. The AIF on that front is a fairly simpler vehicle to invest in, because the returns that you get on the AIF is post-tax, and the taxation is done at a trust level rather than at an individual investor level. So we have therefore launched this AIF, and this AIF is again open-ended, and the investors can apply and subscribe whenever they want, and they can redeem whenever they want, as and when convenient to them. There is an exit quote for the first year, but after the first year there is no exit quote as well for the investors.
At this InCred portfolio which is in front of us, we have the top 10 holdings right there on the screen, led by Healthcare Global. This is a very, very well-known hospital chain doing immensely well, and the stock has is now trading at 673. This is about 15% of the portfolio, Mr. Khemka, and unlike the multi-baggers that have graced your portfolio and performed phenomenally well, HCG has been a tepid sort of a stock. How are you viewing this as your largest holding?
So, Shelji, again, some context needed here. So, HCG, we bought, I think, first time in 2021. And at that time, the stock price, if I'm not mistaken, was around 150, 140 rupees. So from there, obviously, the stock has been a multi-bagger for us over the past 5 years. I think where you are right is the last 6 months, the stock has not done much. And probably the reason for that was because the stock ran up a bit too fast, a bit too soon in the previous year. So there is a bit of catch up that the earnings need to do with the stock price. And that is where I feel, LCG for the past 6 months has not been a great, return generator for us, but that's okay. As you know, markets are like a pendulum. They go from extreme optimism to extreme pessimism in no time. And HCG last year was in the extreme optimism bucket, and this year seems to be in the extreme pessimism bucket. But, markets do that to individual stocks and individual themes. And what we are more focused on is the earning growth. So last year also HCG reported close to 20% EBITDA growth, and this year also we are expecting the company to report a 20% EBITDA growth. Then how the market rewards or views that, we'll leave it to the market. We're pretty confident of the investment thesis in HCG. It is a company that in the near term, in our view, will consistently compound at 20% EBITDA, and that should eventually reflect in stock prices at some point.
Fair point. The other wonderful stock, which sadly has been a relative underperformer in the segment, is FDC. This is your third largest holding and is somewhere like 6.5% of your portfolio. Many buybacks and a fairly strong portfolio of drugs hasn't somehow helped the company. What keeps you bullish on FDC?
So, Shelby, FDC actually, had a phenomenal last year where their domestic business, which is about 85% of their top line, grew in high teens last year. And that created a very high base for the company last year. And hence, this year when the company is reporting earning growth in the domestic business, it is not looking very great because the last year base is phenomenally high, right? But let's all keep in mind that FDC is a company that has been able to create brands like Electrol, Enerzal, Ziffy, which are household brands today in India. So this is a company which knows how to create brands and has a legacy of creating huge household brands in the domestic pharma market. And we kind of view this company as the most structural story. Another angle where FDC has probably faltered in the last year was basically on the export side. So FDC had some issues with their facility from where they manufacture products for exports, and I think that facility needed some renovation, some things to be fixed, where they missed out on some sales last year. And these sales seem to be coming back beginning from the fourth quarter of FY26. They reported a very decent revival in their export business. And we expect FY27 to be a similar year like 4Q FY26, where the export sales will come back. And that will basically help the profitability of the consolidated entity for FY27. So we expect FDC to be a core part of our portfolio. And we expect this business to be really, really good for FY27 for FDC, because the FY26 results were adversely impacted by export business, which was disrupted due to some renovations they wanted to do at the facility level.
While a fund manager is hopeful for all the stocks that he or she picks up in the portfolio, but at this point of time, Mr. Khemka, given the last 6 odd months, which amongst your stocks in the top 10 are you most, how should I say, bullish about, and the one which has a bit of a concern in your mind?
Sure. So, Shailbhai, the way we do this is our highest conviction lies, it reflects in the weight that we have taken in the stock. So, if today, for instance, HCG is 15% of the PM's portfolio, that reflects my highest conviction. And that conviction may be over 12 months, 24 months, 36 months. We generally don't look at stocks from a 6 to 12 month perspective. We look at these businesses more from a 12 to 24 month perspective. So if you take that perspective, I think we are most bullish on HCG as we stand today. We are second most bullish on Thyrocare because that's our second largest position. And then we are third most bullish on FDC because that's our third largest position. So whatever we are most bullish on will reflect on our sizing in the portfolio, because that is how the investor makes the alpha. When we are bullish on something, you size it well and the stock performs well, you get a very decent alpha versus the index.
Yes.
Okay. The companies which are
coming back to the new launch, the AIF that, please continue.
Yeah. No, so you asked the question on, if there are any companies where we had some worries in the portfolio. And, there were a couple of such companies, but if you look at our last 12 months, companies where we tend to get worried or where companies are not delivering in line with our expectations due to reasons which we don't feel are transitionary or rather more structural, those companies we actually tend to exit from the portfolio. So we have done that in the last 12 months. A couple of companies which we earlier used to own, for example, Syngene, where we were bullish because of the entire CRO CDMO opportunity, but the business was just not delivering in line with our expectations. We exited the position in the company, and we have deployed that capital somewhere else where we believe the story is more structural and more sound at this point.
Correct. Mr. Khemka, coming back to your new launch, the AIF on healthcare, will it be a mirror image of this portfolio, which is already doing phenomenally well?
It will be a mirror image, Shailbhai, but with a few minor tweaks. In the PMS, I can do a 15% weight in one portfolio. SEBI legally allows us to do that. In a AIF, SEBI has a limit, a category 3 AIF, SEBI has a regulatory limit of 10% sizing in a given stock. So, by default, if I want to buy, let's say, SCG 15% in the AIF, I can't do that. I will have to take a 9.5% weight. And therefore, that extra 5-6% will have to accommodate in some other stocks. So while our PMS portfolio tends to be between 15 and 18 stocks, my guess is at this point, our AIF will be between 15 and 20 stocks because of the limit sizing, on individual names as per the regulations. Otherwise, it will be a mirror portfolio.
Okay. Mr. Khemka, this is a good thing going, and the best thing is to realize not to mess with a good thing which is appreciating. So let's keep the pharma business aside and let's look at the other two products, which is the multi-cap fund and the other product that you have within the broader umbrella of InCred Asset Management. What are the top picks there, and how have those two portfolios performed?
So, Shailbhai, these two portfolios were earlier managed by a different fund manager who left us in November of 2025. So, since then, the small and mid cap portfolio has been managed by me. And our multi-cap portfolio is managed by a gentleman called Gurpreet Singh Arora, whom we recently hired as a fund manager. So both the portfolios have new fund managers for the last 6 months. So the performance data that I would share with you would be for more last 6 months because that's the relevant window to talk about. So the small and mid cap in portfolio, which is managed by me, in the last 6 months, I think we have an alpha of about 8-9% versus the BSE 500 index. And the multi-cap portfolio, which is being managed by Gurpreet, in the last 6 months has an alpha of about 4.5% against the BSE 500 as an index. Now, both these portfolios have done better than the index in the last 6 months. Okay. And in both these portfolios, I think our overweights are healthcare, our overweights are lending businesses, our overweights are some consumption stories. We are again focused more on small ticket consumptions and some ITES companies. So we are not investing in IT services companies, but we are investing in IT enabled services companies and IT product companies like Coforge, like let's say a Pine Labs. These kind of companies form a significant part of our portfolio.
Let me just gather the top 2 or 3 stocks in both portfolios. Let's look at yours, the small cap one that you manage. What would be the top 3 in terms of names?
Yeah, so in terms of the small and mid cap portfolio, our top 3 names today are Arman Financial, KEC International, and CSB Bank.
KEC International, CSB Bank, and Arman Financial.
Arman Financial. Arman Financial is a microfinance institution.
And the other one, yes, of course, I am aware of that. And the second one that you mentioned, run by the other gentleman?
Yeah, so in Gurpreet's portfolio, I think it's best, we have this discussion with Gurpreet about the multi-cap portfolio because, he's the one who will be able to justify what he owns and how he owns.
Well, essentially means that we'll have one more person from Incred Asset Management gracing our studios. Mr. Khemka, I just broadly want to understand, there comes a time when a fund manager falls in love with the sector and the stocks that he tracks over a longer period of time. And it's a double benefit once the stocks start to deliver very well. You have this love for healthcare and pharma, which is a part of your legacy over the last 2 decades or so. It's been well founded and very well rewarded, but it's a popular trade now. Let me play the devil's advocate.
Sure. No, so I don't disagree with the fact that it is my first love, and I was a healthcare analyst before I became a fund manager. But if you look at my small and mid cap portfolio, so the healthcare portfolio has the mandate of investing in healthcare companies. So that's just going to continue because we can't deviate from the mandate. But if you look at the small and mid cap portfolio, our top 3 names, 2 of them are lending institutions, and one is a infra player, which is KEC International. So it's not that the affiliation to a sector overpowers everything. We deploy clients' capital where we feel that client can make most amount of money. So just to give you a flavor, Arman Financial is a microfinance institution, does SME loans, MSME loans, and some retail loans. Then CSB is a gold lender. Majority of its lending book is gold, and we are bullish on gold. So CSB kind of a proxy to play gold with the lending business. And KEC is the infra company. So given the government's focus on government capex, building more infra, KEC would be one of the largest beneficiaries after maybe in L&T because L&T is a giant. But beyond L&T, I think KEC will be one of the largest beneficiaries of government capex in our country. So we are very balanced in our approach when we manage different mandates. Having said that, we still believe that healthcare is a very secular growth pocket, and that pocket will continue. See, Shahir, one thing which I would like to highlight to you and your viewers is that our view is that inflation in India is going to go up, and we have had that view for the past 12 months. But now the view is becoming even more, emphatic. The reason being that rupee has depreciated, oil prices are up, and whenever this happens, India imports inflation, right? Now, when inflation goes up, one of the pockets in every capital market globally which does phenomenally well during a high inflation period is healthcare. Because healthcare demand tends to be fairly inelastic to pricing of the product or service. It is more the quality that drives the demand rather than the price point at which the service or product is available. So hence we feel that healthcare as a pocket, one as a standalone product as we have it, two, the fact that we are overweight on healthcare in our diversified products like the small and mid cap or the multi cap product should help us generate alpha for our clients as well.
Okay, fair point. The other stock, which is about 7% of your portfolio, is Jina Seco Lifecare Limited, now trading at about 566 rupees. We've seen good times here. 842 was somewhere in middle of September 2025. Mr. Khemka, what is also visible is a tilt towards diagnostics, towards hospitals, towards businesses where you are not dependent on pharmaceutical market tariffs. So these are immune to what Mr. Trump does. These are probably a little more predictable than the broader predictability of the drug scene.
Yes, so that is correct, Shailbhai. So we at InCred, we are bullish on domestic healthcare. We are very, very categorically clear about it. We do not want to invest in companies that one depend on US FDA for clearances, because the US FDA clearly has created an invisible barrier to trade, and pharma companies from India have struggled to remain compliant with US FDA for a long time now. It's been more than a decade that these companies have struggled now. Number two, with the American policy making being so uncertain on tariffs, being so uncertain on duties, which creates significant impact on bottom line of these companies over a period of time. So we don't want to take those risks unnecessarily. Right? And if you look at our positions of HCG or Jina Seco or FDC or Artemis, what we are focusing on is domestic healthcare. So domestic healthcare has none of these challenges. More importantly, again, when we look at data, what we observe is that as any country gets richer, Shailbhai, incrementally the GDP that the country earns, a substantial portion of that GDP gets allocated to healthcare. Because beyond $2,500, roti, kapda and makan is broadly done. So when you then earn more, GDP, you want to live longer, look better, live healthier, and that is where healthcare as an expense comes in. Now, Jina Seco, as you said, is one of the companies that focuses on wellness. It is unlike HCG, which is a curative sort of company, or FDC, which you take drugs when you get sick. Jina Seco you can go to just so that you don't fall ill, right? So it's a preventive healthcare company, it's a wellness company. And again, as your country gets richer, the cost of falling ill for the population will increase, and the population therefore will focus more on wellness projects or wellness expenses, where they ensure that they don't fall ill. And that is where I think Jina Seco is a leader, and hence we are focused on Jina Seco at this point.
Wonderful. So as is fairly evident, these are businesses, ladies and gentlemen, which are not only immune to the broader issues that we are facing in the economy. In fact, some of them might be indirectly benefiting to a large degree because of the broader pain that we are seeing in the economy as well as the market. Be that as it may, Mr. Khemka, a broader structure in your mind as to where we stand as far as the broader markets are concerned. Are you a little more comfortable with how prices are at this point than what you were 3 months ago?
Yeah, I am. So if you remember our last discussion, Shailbhai, I think in December 25, what we had discussed was that Nifty 50 historically trades at 3 times price to book, whereas in December 25, Nifty 50 was trading around 3.2, 3.3 times price to book. This is trading book value of Nifty 50. And hence we were saying that, look, if the earning growth doesn't pick up, then Nifty 50 will have a tough time yielding returns for shareholders. I think now that the book value has gone up, Nifty 50 is flat from December 25, but the book value of Nifty 50 keeps increasing every quarter that the companies report numbers. So now Nifty 50 has actually come to more like 3 times price to book, which is broadly in line with Nifty 50's 10-year and 25-year average trading multiple. So now we are getting more, comfortable with the broader market valuations. However, what we'll still love to see is the earning growth. As I said, if inflation goes up, as we saw WPI is at 9.9% last month, and if CPI starts to inch up towards higher single digit, remember, Shailbhai, Nifty 50 or BSE 500, no matter which index you look at, they will always have 70-80% weight in companies that struggle to pass on inflation to customer without hurting demand. So most of these companies will have to choose between growth and margins. The companies that increase prices will protect margin, but will kill their own growth because of affordability issue with the customer. The companies which decide not to increase prices will maintain growth, but will hurt their own margins because they have not increased price despite increase in raw material cost, or which is inflation, right? So I think a combination of so for a shareholder or an investor, the safe haven today lies in companies which can pass on the cost without hurting demand. And that is where, companies like Pine Labs, which is on the financial services side, or a Thyrocare or a HCG, which is on the healthcare side, these companies historically have exhibited those attributes to us, that they have been able to pass on the increase to the customer without hurting the demand of their product or service. And both our portfolios, small and mid cap and healthcare, are made of companies where we have noticed these, attributes over the past decade.
It's interesting that you mentioned Pine Labs second time into the conversation. This is a stock which recently got listed in November of 2025 and is now available substantially below its IPO price. What are the 2 or 3 things, 4 things that you like about Pine Labs at this moment?
So it's an ITES company the way we look at it, right? So no matter which payment system, which loyalty card, or which loyalty program you are participating in, Pine Labs has a play in that. Then Pine Labs also sells the POS machines that you must have seen while you swipe your cards. So it's a company that has basically got an annuity set of revenue from those machines. It is entering into newer, should I say, digital payment modes where it will be a beneficiary of the digitization of currency in India. And we see the digitization of currency as an accelerating trend. As UPI transactions are going through the roof, as you must have seen the data and the volume of UPI and the volume of digital transactions, including credit card transactions, debit card transactions, loyalty programs. So Pine Labs to us is a play on digitization of the Indian economy. And we see that as a very secular trend going forward, given the focus of the government on digitization. And as you said, the price of the stock has fallen significantly below where it listed. So now the valuation multiples are far better compared to what they were when the company listed.
Yes, absolutely. And it has a ubiquitous presence. No matter where you go, you will see that Pine Lab apparatus facing you when you are making a payment. Absolutely. The digitization of rupee is one of the biggest tailwinds that we are looking at. What, Mr. Khemka, what attracts you to the microfinance space, the NBFC space as such as of now? Is it higher liquidity? Is it the cycle which is turning for the better, or a combination of both? What attracts you to them?
No, so I think it's the latter. It is the cycle which is turning. So if you look at the NBFCs, no matter which NBFC you pick and choose, barring maybe a Bajaj Finance, because that tends to be a different animal. But if you just look at the other NBFCs at an aggregate level, I think FY26 was perhaps historically one of the worst years for these companies in terms of credit cost, AUM growth, the coverage, should I call it NIMS, right? And I think that is where things are starting to bottom out. 1Q FY27 so far, whichever NBFC or MFI has reported, they've reported significantly better numbers compared to 1Q FY26. And the valuation multiples have halved. So most of these NBFC MFIs were available at 2 to 4 times book in the past year. And today they are available at around 1 to 2 times price to book. So valuation multiples have halved, earnings are bottomed out. That generally tends to be our sweet spot as patient investors. We build a position, we sit on it, we wait for the macro or the P&L statement or cash flow statement to turn around, depending on the business. And when that happens, as an investor, we don't only get earning growth appreciation in the stock price, we also get a multiple re-rating. And that is the double bonanza we tend to target for our clientele. That it's not just the earning growth, I also want the multiple re-rating happening in the stock.
Right. Mr. Khemka, this is paucity of time and the fact that you come rarely. But again, thank you for your views, and as always, here's wishing you all the best for the new product, the AIF Cat 3 baby, and we hope to interact much more often with the broader InCred Asset Management team. Thank you for your time.
Always a pleasure, Shalva. Thanks for having me.
Yes. That, ladies and gentlemen, was Mr. Aditya Khemka, the CIO at Incred Asset Management, a PMS company that focuses mainly on healthcare and has done phenomenally well over the last 4.5 years, creating supernormal wealth for its PMS clients. Thank you for watching. I'll be back at 2 p.m.
Hello and welcome. You're watching Business Today. I'm Neetu Chandra Sharma, bringing you this earnings special on Dr. Reddy's. The company reported a challenging quarter with profits hit by lower lenalidomide sales and an unexpected semaglutide API issue. Even so, the company says its underlying business continues to grow in double digits. To discuss the quarter, company's growth drivers and what lies ahead, I have with me on the show M.V. Ramana, Chief Executive Officer, Global Generics, Dr. Reddy's Laboratories. Ramana, a very warm welcome to you. It's always a pleasure to have you on the show. So let me start off by asking you that your quarterly performance was impacted by the semaglutide API issue. So what exactly went wrong and what corrective measures have you taken? And when do you expect the supplies to return to normal?
Sure. So first, I think in terms of the quarter, what you would see that sequentially, if you take from the quarter 4 to quarter 1, you would see that we have grown, and largely it basically says that post the lenalidomide, the base business is going well and growing double digit across US, Europe, India, and emerging markets. So there is a strength in the base business. It is not only the growth in terms of the volumes, but also growth coming in because of new products. When it comes to semaglutide, we did have a write-off of about 240 crores. Most of it, the API that we had manufactured that we had to write off. As we speak, we have understood what is the root cause, why we have had this specification impurity issue, and how and what could be the countermeasures to overcome it. As we speak, the scientists are working on it. Should this go in the right direction, and we feel that we are on the right direction, we should be able to come back with the product in quarter 3.
Okay, so with the lenalidomide revenues moderating, what will be the biggest growth drivers for your company in the next 12 to 24 months?
Sure. So what also has been good is the fact that we have been working for both in terms of new products and moves across the market. So if I do take India, India has got moves around innovative assets, consumer health, growing of our existing mega brands. If you take Europe, Europe has got new products at the same time has got NRT business. If you take emerging markets, emerging market has been about leveraging the platform. We have present in about 48 countries, and we have field forces in many of them. And on top of it, what we have been able to do is to leverage all of the products that we have developed for US and Europe to bring it into these markets. So emerging markets with a good presence across Asia, Africa, Russia, CS, Latin America continues to do well. And then US has been, quarter 1 has been good in terms of the new products. We have been able to launch bosutinib, where for 400 mg, we have 180 days exclusivity. That product has done well. A complex asset in the form of nintedanib, that is also doing well. And we expect more launches as we come along. So it's a combination of working each of these markets and continue a set of new products that we would launch over the next couple of quarters should give us the confidence.
All right. So let us talk about some this GLP-1 space. So you have already entered the generic oral semaglutide space also. So how significant is this opportunity for your company in the coming 5 to 6 years, and how is it evolving?
Yeah. So if you see, when it comes to the GLP space, what we've seen in India is that there has been a significant unmet demand, and with let's say the positive opportunity that the patient and the doctors could get through the generic semaglutide, we've seen a good amount of traction and an increase in terms of the volume. And we do see similar opportunity exists in the other emerging markets where the patent is either not there or the patent has expired. We had logged in our dossiers in these markets. We expect to get the approvals, and as we start then to get back on track as far as supplies is concerned, this will continue to be a meaningful product for us, not only in this year, but in the coming years as well. But if you do look into the space of GLP, the kind of innovations and the kind of investments that are going in, I think this is a space in which you will see a lot of investment, either in the form of moving from once a week to once in 15 days to once a month, at the same time bringing in oral products that are effective. At the same time, companies are working to see how they could have products that would have lesser muscle loss and lesser GI side effects. So there is innovation happening in different spaces because this is something that the doctors and the medical community has found is a significant advantage to humanity, and hence we as a generic company will continue to bet on this space and ensure that we would bring in these opportunities both in the emerging markets as well as the developed world.
Okay, let me also talk about the oral semaglutide market. A lot of other companies are also, innovating in this space. In fact, the innovator company itself is coming up with, several other options. So, how do you defend your position here in the oral semaglutide space specifically?
So when it comes to oral semaglutide and injectable, at this point of time, there is obviously far more traction on the injectable as compared to the oral product. And of course, the innovator is bringing in newer dosage, I would say, strength in order to ensure that they would continue to deliver better benefit to the patients. And of course, as a generic company, we would look at ensuring that we develop and we bring in these products into the markets as it expires. So having both the injectable and the oral dosage form is important for a company. But I think what is also more important is to see how we're able to develop the ecosystem. What do I mean by that? It is clear that when someone is taking a GLP, there is a loss of the muscle mass, and hence it's important that we are able to offer a nutritional supplement with the right sort of ingredients in terms of whey protein and the micronutrients that would help in supplementing and reducing this muscle loss. That's something that we have done, and we are the first company to launch a product called Celvida GLP Plus that actually helps these patients and the consumers who are taking any GLP. And the second, of course, is how do you bring in this whole understanding of how to usage of GLPs, not only for diabetes management, for other diseases, and more importantly, obesity, so that we understand that obesity has to be treated and that the implications and the benefits of treating that. So that is where we're working with the clinicians around the world, as well as in India, to bring in that knowledge, to create the evidence so that we have a better understanding on how the GLP and the class of compounds can be useful to the patients over here. So having that ecosystem of the right knowledge, the right local clinical evidence, the right nutritional supplementation should help us in terms of this journey that we are taking as far as the GLP-1 is concerned.
So, Ramana, there is a considerable uncertainty about the US tariff proposals on pharmaceuticals, as you might have seen. So, how are you basically assessing the potential impact on your company, and what other steps are you taking to prepare for the different scenarios that might come up?
So, as you would have seen, we have seen the tweet from President Trump, and we would obviously wait for the official document to come through in order to understand how to read the implications of this proposed change. Indian pharmaceutical companies do have a presence in the US, also in the form of manufacturing. And obviously, looking into the cost-benefit ratio, we would evaluate all of the options possible because we do have a meaningful presence in the US, and we expect to continue to offer our products into the US market, and we will do it in line with the changes that we do see, but we would have to wait for the official document to come out.
All right, so let's talk about the India growth for this quarter. India delivered around 17% growth this quarter, outperforming the market. So, which therapy areas are driving that momentum for you, and how sustainable this growth is? How do you see it?
So if you look into the growth of India, it is a component of new products. It's a component of volume growth and price increases. And when it comes to the new products, it's obviously where we have focused to ensure that either we're bringing the innovative product into the market or we are bringing in the first generics into the market, especially in terms of our chosen spaces, whether it is in the area of oncology, whether it is in the area of GI, dermatology, and other spaces that we represent meaningfully as far as the Indian pharmaceutical market is concerned. So what we also see that the Indian pharmaceutical market is also having a healthy double-digit growth, and very few, I would say, markets have consistently having a double-digit growth. So this is a market that we'll continue to focus, and we are basically working on continuing to bring in innovation through partnerships, increase focus on consumer health. This is something that we have done through the Nestle JV, and we are also working on a couple of our brands that have the OTC potential to move from OTX to OTC, and that is something that should help us in terms of the growth. And third, of course, we have a good number of mega brands. How would we continue to do the product management, bring in the line extensions, and continue to be relevant in the core as well as in the adjacency? So this is a core market. This is the most important market for us, and we'll continue to ensure that we move towards our aspiration to be in the top 5.
So you are also investing in peptides, biosimilars, and innovative assets. So when do you expect these investments to start contributing meaningfully to the business, and which area is likely to lead the way?
Sure. So as far as the innovative assets are concerned, this is where we license the product, and I do see that they are already starting to contribute to India, and then would start to do the same as far as emerging markets is concerned. And what you would see is one of the recent successes that we've had as far as toripalimab is concerned, where within 2 years' time, we have been able to do about 100 crores for this product. So innovative assets has already started to contribute meaningfully. When it comes to biosimilars, I think the big product that we are all working for in terms of launch that should see meaningful revenues for Dr. Reddy's would be abatacept, for which this is a product that is relevant in US, relevant in Europe, as well as emerging markets. US, we have already put in our dossier. Recently, we've had the US FDA inspectors give us the observations, and we have addressed all of those observations. We have logged in our dossier for Europe and several of the emerging markets. And I would say that while we have several products in the markets, but the next meaningful product for us would be abatacept, and that would be followed by Pembro, daratumab, and others. And that's as far as the biosimilars is concerned. Coming to peptides, this is the space that we definitely are putting in the investments, both in terms of our ability to manufacture the product, but also the fact that today we're able to leverage the platform that we have both in emerging markets, US and Europe, to bring these products to the patients who need them. And also we have a set of partners who are also collaborating with us. So what you would see is you would start to see the impact of that as we get back onto semaglutide and we start to make an impact in the current and the future years. There are other set of products that we're working on in peptides and biosimilars. You should start seeing meaningful revenue when we do launch abatacept.
All right, Ramana, thank you so much for joining us and sharing your perspective and speaking with Business Today. Wish you all the very best for the next quarter, and we hope to speak with you soon.
Thank you so much. Thank you for having me.
Hello and a warm welcome, ladies and gentlemen, on Business Today Television. We continue with our coverage on different asset classes, in particular the commodity space. Fresh highs coming into the market of oil. As you can make out, prices have topped $95 a barrel. Not only one, but the second straight out of the Middle East is also closed, and that is adding pressure to oil prices, now well above $95 a barrel. This is the highest since June 11th. Gold and silver continue to languish, but oil is the new pain point as far as Indian markets are concerned, as also rising bond yields and a weakening rupee. Be that as it may, let's take a temperature check of what's happening in the commodity space. And joining us on the show is Mr. Kunal Shah, a very, very well-known market analyst in the world of commodities. He heads the research team at Nirmal Bang Securities. Namaste Kunal ji, and a very warm welcome. War clouds are gathering, and the supply of oil is now getting constrained on both straits. How are you looking at oil now at $95 a barrel?
I think it's really unfortunate, and the way after Strait of Hormuz, this new Strait of so near Yemen, this strait, I mean, I'm not able to pronounce it rightly. It's called Mandab Strait, okay, Babel Mandab Strait, and that strait is basically.
This is the one parallel to the other end of Saudi Arabia. So one side you have Hormuz, which is in a cut.
Yemen, Yemen and Ethiopia between that. So on one side there is Ethiopia, on one side there is Yemen, and if you go inside, then comes the Saudi Arabia. So now what is going to happen? The Saudi Arabia is going to find difficult to export oil. So on one side, the Strait of Hormuz is closed, which is affecting roughly 20 million barrels of flow. And now with this Babel Mandab, another 5 million barrels of flow is at question mark. So total 25 million of barrels, it's a market of 105 million barrels per day, and out of which 25 million barrels is out of market. And out of that, US, Japan, China, all of their inventories are at all-time low. I mean, US inventories are at 50-year low. So if this get prolongs, it is an unthinkable scenario for the world. World is not in a position to absorb this kind of energy shock, and the prices, the only way prices can come down is just with a glimmer of hope, nothing else. Until there is any positive solution between US and Iran on this ongoing matter, if it doesn't take place, then I think it's a nightmare for the global financial market and even for the energy market. The world is going to have a very difficult time if this continues.
Okay, perfect. So, worst case, what are we looking at? 3 digits is very near.
So we are already at 3-digit shell buy, and I think most important thing here to watch out is what is happening with the product side. So all the refineries. So I would like to explain the severe scenario which is happening right now. On one side, the Russian refineries are operating at 50% level, and there is a shortage of diesel. There is a shortage of petrol. The refinery which are operating right now are having a margin of 70%. So the margin which used to be 8%, 10%, that is the margins have shot up to this extent. But there is a problem at the straight level, both straight level, and there is a problem at the refinery. So end product, the finished products, which are basically the one on which everyone is depending. So the finished product market stock scenario is even far worse than what is happening in the crude oil market. So this is not good. I think this should get solved as soon as possible. Otherwise, the world at a stage when it is having the highest debt, and at that time, if the inflation goes up, it's a nightmare.
So you didn't give me an estimate where oil could go.
Yeah, so I think oil should go up in such kind of scenario. oil should go up, sir, because I mean, if anybody is giving you sell call, it's just a hope that the things will get sorted out. Otherwise, there is no pressure of sell call, sir.
No. Kunalji, I know oil will go up, but you are the guy who's the analyst who will give us an idea where it will go up to.
Sir, your voice is breaking out. I'm not able to hear clearly, sir.
Kunalji, I'm saying that even I know that oil will go up, but you are the person who are analyzing the markets in great detail. You are the top analyst. I am asking you till where it can go.
Okay, sorry, my bad. I could not hear that part because of the voice was breaking. So I foresee oil, if this condition persists for another 3-4 days, oil is definitely heading towards $105 to $110. Right.
Okay, fair point. Now, because you analyze all asset classes and nearly all of them are linked, one goes into the other, we see rotation of money because money is finite, so it's moving into oil. Where is it coming from?
So I believe that if this condition, so the highest beneficiary right now is the oil and gas sector. That's where the money is going right now, and I think the energy prices, the crude oil, the people are having an exposure towards crude, having exposure towards aluminum now again. With both this trade close, even the aluminum prices can go up. Commodity will remain top asset class going forward in this kind of scenario. So I would say commodities looks much better, and the defensive sectors also will continue to do well. But I think the energy sector and even the metal sector would be the big beneficiary of whatever is happening right now.
Okay, fair point. So we get another potential commodity which might rise further, which is aluminium. I'll request the PCR to kindly show us the charts of Hindalco and National Aluminium. The stocks have corrected fairly sharply, and you just might see an uptick coming into both National Aluminium as well as Hindalco. So please show us the 3-month charts or the weekly chart. This is today. Let's see a 3-month chart if possible. Yes. See, this is what I'm talking about. In the last 3 months, at least a 10% correction in Hindalco has happened. In fact, it's much higher. And similarly on National Aluminium, you have a 20% correction. Now, this could reverse because aluminium prices may look up because of a supply constraint. Okay. Kunalji, that's enough on oil as well as aluminium. Now let's come to precious metals. We've created a lot of weekly charts for you as well as monthly charts. Let's start with gold. There is a fairly strong fall that has also happened on gold prices. Now are below 200-day moving average on the daily chart. Kunalji, why this weakness?
I am very optimistic about the outlook on gold. These are the buying opportunities, whatever you are getting right now. Because I believe that whenever oil prices goes up, the fear of interest rate hike comes, and at that time, suddenly we see a taco trade. Suddenly Trump will come and say, now we got a deal with Iran, or we did. So every time I see a gold prices falling, it's an opportunity for investors or for somebody who wants to allocate in gold or somebody who wants to diversify. Because the fundamental of gold is very bullish with whatever is happening right now. So I think these are good opportunities. 1,42,000, 43,000 in India, great buying levels. And again, prices, can shoot up to gradually around $4,400, $500 in India, 1,55,000 to 1,56,000.
Okay, fair point. So these are gold prices, gold monthly, gold weekly, gold daily, and you can see that the year-to-date performance has been terrible, and the metal has corrected very sharply from 160, 170 all the way down to 145, much lower. So these are different kinds of charts which can give you a visual representation of how gold prices have moved. A view on silver, similar fall, and now well below 200-day moving average. Kunalji,
I think silver also very interesting. A fall from here would present a buying opportunity. 54, $55 seems to be the bottom. 58, 57 and a half is a good entry zone. In India, if you ask me from the Indian exchange point of view, I would say 2 lakh, anything below 2 lakh 20,000 is a good buying opportunity.
Okay. What are the physical markets of gold and silver telling you?
It's very tight. Physical market is very tight. 1.5 months back, the markets were running in a big discount. A discount of 3,000 rupees, 4,000 rupees in silver, and discount of 2,000 rupees in gold. Today, all of this discount is gone. Gold is available in Mumbai, roughly minus 100 rupees, minus 50 rupees premium, minus 50 rupees, not premium discount, minus 50 discount, which was earlier somewhere at 1,500 rupees or 2,000 rupees 1.5 months back. So the markets are tight. The metal is not coming, gold and silver, because of the restrictions which have been imposed, and the previous inventory which was there in January, February, March, whatever we imported. On basis of that, I think the sales are taking place. But going forward, the physical scenario of gold and silver in India is likely to remain very tight because we are ahead of the festival season, and at that time the imports are scanty. So we believe that the physical market will continue to remain very tight going forward.
Okay. Is that true only for Maharashtra and Mumbai in particular, or are you
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers your specific stock queries on the program. Over the next 45 minutes, we're going to be addressing all the questions that you send our way. In case you're here for the first time, the WhatsApp number is on your screens. Send us your questions here along with your name, location, and your contact details, as we can give you an opportunity to speak live to our top market experts who join in on the program with us. You can also write in to us on our YouTube platform. If you're watching our show there on Business Today, go to Daily Calls Live, use the comment section there to send me your questions. I'll be happy to address that with our top market experts who join in on the program as well. Let's quickly welcome our guest on board. We have Mr. Kranti Batini joining in, Director of Research at Wealth Mill Securities, to be with us on the program today. Welcome to you, Mr. Batini. Good to have you with us as always. Where the markets are finally coming out of those 5 days of losses that we saw last week. It was, very, very volatile one, despite all the stock-specific action that we saw. We're back above 23,950. Again, the cue is from external environment, falling crude prices, calmer, environment when it comes to both the US and Iran in the Strait of Hormuz. But will the markets continue to hinge on what's happening globally, and therefore what are you advising investors to do?
Short term, definitely we are observing the developments in the Middle East and also how the crude is behaving. That is extremely crucial for the market as an external factor. Definitely the crude impact is it's going to have on Indian markets and Indian economy. By and large, markets, if you see the texture of the market in the medium to short term, it's a buy on dips and sell on rally kind of a market in the medium to short term. Decisively, if we get a signal of cooling of crude oil signal, that's where we'll be going, initiating the longs in the medium to short term, and that's where we'll be holding the positions for a longer term perspective. Medium term, the pressure of crude is going to impacting the sentiment of Indian markets in the medium to short term. So closely observing the moves of crude oil, how it's going to be in the next couple of weeks' time, that is extremely crucial. And coming back to the domestic events, domestic macros have been quite good. The result season has been decent till now. We don't have absolutely any no negative surprises. And crude oil, if you see last 3 4 months, the average crude oil basket is coming to $104 per barrel. And during this time of average crude price of $104 per barrel, Indian markets have posted very good, decent returns by and large in the last Q1 quarter is concerned. So the average of $100 per barrel is extremely crucial for India. If at all the average crude oil price comes below, at least for a couple of months' time, around 70 to $80 per barrel. That's where the positivity, the bulls get charged during that time. So by and large, just waiting for the crude oil prices how they are going to behave, and we are also tend to see very stock specific action and sector specific action in the medium to short term. Definitely, it's a buy and dips kind of a market at this point of time. And the positive signal where we'll get for Indian market is Nifty decisively closing above 24,500. That's where the key resistance level. It can be technically or it can be the geopolitical events are concerned. Sakshi, last 4 5 months, as and when the Nifty is going to the range of 24,500, somewhere some unforeseeable risk has been hampering the sentiment of the market and creating some kind of a selling pressure in the medium to short term. So markets are in a range bound at this point of time. 23,800 in the bottom and 24,500 at the upside. This is the typical level the markets are consolidating at this point of time. This is purely because since we are interacting on a weekly basis, this is the range we need to see for the short term.
All right, Mr. Batini, let's kickstart by taking some questions now from our viewers. We have a lot of our viewers joining in. We have Rishikesh, Raghu, Jatin, Vinita joining all early on the YouTube platform. Welcome to everybody. We'll start taking your questions. Rishikesh question first. He wants to know about one stock which is VAML. He says, let me pull up this share, VML. Currently Vedanta Aluminium he's talking about, and 437 is the current price of Vedanta Aluminium at this point in time, about 0.5% higher. He says he already has this stock in his portfolio, Mr. Batini, and he says he wants to move his capital from this company right now. Would it be advisable to shift out of Vedanta Aluminium and probably be looking at Lloyd Metals instead? He wants to know, so within the metals pack itself, he wants to shift out from one stock to the other, from Vedanta Aluminium to Lloyd's Metals and Energy. Any suggestion?
Actually, Lloyd Metals have been rising in a vertical move, and the last 3 months, the stock went from the range of 1,300 to it touched a range of 2,000 at this point of time, almost all. Vedanta is a decent company. If you want to create any kind of a position, he can probably book some profit around 50% and move to Lloyd Metals, given the kind of price momentum is concerned in the medium to short term. But Lloyd Metals are concerned, just wait for the results. The stock has been rising vertically, and buy and dips kind of a strategy he can make. Whenever there is a rally in Vedanta Aluminium, he can shift 50% to Lloyd Metals. That is the strategy he can do. Or if he want to hold the position and create a new position in Lloyd Metals, he can do that.
Okay, let's take the next question. This one is from one of our viewers. This is Jatin Dave. He says, hi Sakshi, good afternoon. My question is on Kernex. I have this stock at 22.15 in my portfolio. My quantity is 300 shares. I have a 3 months horizon. Could you please get me a target and stop loss for this? Mr. Batini, he only has a short term view on Kernex. He's already invested here. But for the next 3 months particularly, any kind of a suggestion as to how will the stock move?
Actually, the stock has moved vertically, very strong performer in the railway signal space is concerned. The stock has witnessed a strong rally. June quarter results have yet to come. He can keep a trailing stop loss around 2,000 level, and he can hold the position for a medium to short term perspective.
Okay. Taking the next one then, this one is from Raghu. He says, hi Sakshi, I have Apollo Microsystems in my portfolio at 457. What can I do in the current situation? Should I hold on or sell? What is the advice that Mr. Batini can get me? Okay, Apollo Microsystems for you, Mr. Batini, and 457 is his purchase level. It slipped now below his purchase price.
Sakshi, he entered at almost a high peak of the um, uh, price of the stock. Whenever any stocks goes to those kind of levels, some kind of a consolidation is normal. For a medium to short term perspective, 400 is the level that seems to be the strong support zone for the market in the medium to short term. That level has been the stock has violated. The next level he need to keep is 350. That's where he need to keep one trailing stop loss in the medium to short term. But the stock results are yet to come. There was a strong momentum in this aerospace and defense sector is concerned. So he can hold on to the position. It's a decent stock. But one thing is his entry level is at a higher level. That's where the medium to short term market knee-jerk reaction has been creating some kind of a pressure on the stock. Otherwise, he can hold on to the stock.
Okay, let's move on to the next question then. Vinita asked the next question. Deep Industries is what she has a question on, Mr. Batini. Deep Industries she has at 520 levels. What is the outlook on this stock and how should she go forward from here? Any suggestion?
Sakshi, after the rise of these crude oil prices,
Yeah.
the oil drilling and oil exploration companies have been going up, especially the oil drilling companies are concerned. There are a couple of oil drilling companies, whenever crude oil prices rises, we tend to see some kind of a uptick in these companies. To create any kind of deep industries, the valuations looks attractive at this point of time, Sakshi. But the one thing is, how many days these high global crude oil prices are going to sustain. That is the crucial thing. Whenever there is uptick in the crude oil prices, like stocks names like Jindal Drilling, Deep Industries, in these kind of companies, some kind of a activity we tend to see. In a medium to short term perspective, Sakshi, just wait for the results to create any kind of a position and look at the high crude oil prices impact on the company earnings. That's where one can create the position in deep industries. Till the time, it's just a pure trading play in the medium to short term.
Okay, fair point. I hope that this has helped you out too. Let's move forward and take the next query. We have a lot of our viewers joining on our WhatsApp as well. We'll take the question now from Satyan. He says, I want to know about LIC Housing Finance. I bought this stock in the month of May at 590 levels. May I know if there is any way that it could recover in the near future, or is it better to shift out from the current position in LIC Housing Finance, maybe to HDB Financial Services or Geo Finance for the medium term? Any suggestion here, Mr. Batini?
Sakshi, slowly the NBFC stocks have been coming up right now. Majority of these NBFC stocks are doing well, but the pure plays like the housing finance companies are languishing at this point of time. LIC Housing Finance is concerned, the stock has been in a long consolidation phase, Sakshi, in the medium to short term. In terms of the valuations are concerned, Sakshi, the stock looks very attractive. It is trading below the book value. So if the investor has some sort of little bit medium to long term horizon, he can hold on to the position. Or else in the medium to short term, if he is looking only for the short term, he can exit on rallies.
Okay, fair point. I hope that this has helped you as well. Let's take the next question. This one is from one of our viewers on our YouTube platform that we have, Satya, who says, hi Sakshi, thanks to your show, I have actually been getting into the right set of stocks, and I want to now understand about Mostrip Technologies at 245. I sold this stock last week. Please ask if I can re-enter also into this stock for the short to medium term. and whether anything can be seen on a positive trajectory here. So thanks a lot for writing in, Satya. Yes, you do say that, as per the guidance shared by you on the platform, you have made profits here. Let's try and understand whether on the same stock you should now take a re-entry at all. Mr. Patini, Mostrip Technologies, do you advise a re-entry?
Sakshi, in terms of the valuations of this stock is concerned, it's a very highly expensive stock. But this is in a right space at this point of time. The revenues are yet to realize in terms of the key revenue parameters are concerned. Last quarter has been a disappointment quarter for this company, but the semiconductor chip design, this company has been investing their focus for with respect to the semiconductor theme is concerned. So we need to look at Mossip as a thematic stock for a longer term perspective. Short term, these kind of aberrations do come for the stock. Some kind of a speculation also there in this counter. Until unless the investor is a have the high risk appetite, this stock is suitable. If you don't have that high risk appetite, there are many better stocks are available in the space, and also with the relative valuations are concerned.
ओके, आई होप दैट दिस हैज एडवाइज्ड यू वेल। मनोज भाई कपाड़िया का सवाल नेक्स्ट हम लेते हैं। लिखते हैं, क्रांति सर नमस्कार, मेरे पास गॉडफ्री फिलिप्स के 25 शेयर हैं, 2900 के भाव पर मैंने खरीदे हैं। क्या इस शेयर में एक मूव अप देखने को मिल सकता है? प्लीज़ मुझे गाइड कीजिए। गॉडफ्री फिलिप्स
GPI गॉडफ्री फिलिप्स इज कंसर्न साक्षी। स्टॉक जीएसटी का न्यूज आने के बाद स्टॉक में एक गिरावट देखा है, एक कंसोलिडेशन फेज देखा है हम मीडियम टू शॉर्ट टर्म में। एक गुड क्वालिटी मैनेजमेंट है स्टॉक में, बट लेकिन जैसा फोर स्क्वायर और टोबैको बिजनेस में जो गवर्नमेंट का जीएसटी का फैसला आया है, वो स्टॉक को मीडियम टू शॉर्ट टर्म में सेलिंग प्रेशर क्रिएट किया है। स्टॉक एक कंसोलिडेशन फेज में है। निवेशक होल्ड कर सकता है पोजीशन को। ये क्वार्टर का रिजल्ट्स बाकी है गॉडफ्री फिलिप्स इंडिया में, बट लेकिन ये वैल्यूएशंस में पोजीशन को होल्ड कर सकता है। निवेशक का भाव नेक्स्ट कपल ऑफ क्वार्टर्स में आने वाला है।
Okay, I hope that this has also helped you. Let's take the next question. This one is again from one of our viewers on our YouTube itself. A lot of new people are also joining in. Kamlesh Narkere, he says, please advise me, Kranti sir, on Centrum Electronic and Card Trade Technologies for the long term. Should I enter at the current levels, or what level should I enter into at the current levels as far as these stocks are concerned? Let's take Card Trade Technologies first. This one is among the top movers today as far as the broad market movers are concerned. There's a smart uptick here. Card Trade Technologies. Any suggestion here?
Sakshi, these stocks are new age companies. So whenever the new age company comes onto the market, the valuations is the key concern for a medium to short term perspective. We tend to see some kind of a spikes, and the stock also getting into consolidation also we tend to see. With respect to the results are concerned, the last quarter results have been decent for card trade. That is the reason we tend to see a uptick in card trade technologies are concerned. It's a buy on dips. One can play with the momentum. Building a investment position, still I need to see some kind of a strong earning commentary and strong earning sustainability. That is key for card trade technologies are concerned. Otherwise, in the medium to short term perspective, it is a pure momentum play for the stock is concerned, Sachi. With respect to Centrum, the other stock, what the investor have asked is, the stock is in uptrend. Centrum is concerned by and large, they are into electronic ESDM business is concerned, electronic systems design and manufacturing is concerned. The stock has witnessed a strong uptick actually. So buy and dips is the strategy one can implement in Centrum Electronics Limited is concerned, Sakshi.
Okay. Fine. Let me take another question as well. Let's take this one from Sumit Ghosh from Kolkata, who says, I want to know about L&T Finance for at least for 1 year time frame. How is this stock for a portfolio for 1 year time frame, L&T Finance?
It's a buy and dips kind of a stock, Sakshi. The stock was in a consolidation phase in the last couple of quarters. And buy and dips kind of a strategy one can need to have. L&T Finance Limited is concerned. Decent stock, quality management. One need to look at L&T Finance as a long-term perspective.
Okay, let's take the next one, and this one is from Jatin, who says, Kranti sir, good afternoon. Please advise me. Okay, we have already taken your question. Thanks a lot, Jatin, for writing in. Sumit Ghosh has the next, Ratna Prabha has the next question. This one is on precision wires. She says, I want to know about my average price is 419. Could you tell me your view on precision wires and how is the stock likely to perform for the long term?
On a longer term perspective, Sakshi, the stock has been delivering decent in its numbers and the top line and bottom line is concerned. The investor have entered the stock at a high price, but given the kind of the earning growth story and the earning growth the stock has been witnessing, it's a buy and dips kind of a stock. The investor can hold on to the position for a medium to longer term perspective.
Okay, let's take this query now from Ankur, who says, hi Sakshi, hope you're doing well. I'm very well. Ankur, thanks a lot for asking. He has a question on the retail space, Mr. Batini, talking about Trent, Vishal Mega Mart, Aditya Birla Fashion Retail. Amidst these key stocks, which one looks good for the long term? And or any other stock from the same space, the retail space, what would you advise here?
One thing, Sakshi, the valuations are the key concern to make any kind of serious investments in these companies. But by and large, Trent looks attractive to me despite of the higher valuations. The stock had witnessed a strong pullback rally recently, and also with the recent high of 3,400, the stock corrected to the range of 3,000 now, available at below 3,000 now. He need to have a strategy of buying on dips, kind of a strategy for Trent is concerned, and also he also look at for a longer term perspective. DMart also as a investment play in terms of the retail space is concerned, Sakshi.
Okay, fair point. Let's take another query coming in again from our YouTube viewers. Swati Jain asks me, she says, hi, this is a great show. Thank you so much, Swati, for writing in your warm words. She says this show truly helps her make the right set of decisions. And today she's come out with a question on Imami paper. And she wants to know, how do you see this stock today? And is there any kind of a review that you can share on Imami paper? Now, interestingly, within the paper stocks today, there is a contrast. The Asia Sai paper went up about 11% odd in session today, whereas Imami paper declined by about 5% odd. So curious to know if you already have this stock in your portfolio, or are you looking at this dip to enter? I would have preferred to see more details in your question about Imami paper. These paper stocks also have been out of the visible range for some time now, Mr. Batini. Your suggestion?
Yes, actually, as you rightly mentioned, these stocks were out of the visible range. And Imami paper is concerned, the Q4 results, the Q1 results have been good for the company, and that is the reason we tend to see a sudden uptick in the stock performance. The stock went up 20% upper circuits a couple of days time consecutively, and there onwards we tend to see some kind of a profit booking. So if the investor want to make any kind of a serious investment position in paper stock, JK paper looks attractive to me. These are all have the seasonal perspective in terms of the stock performance is concerned. One can add on dips these stocks for a medium to longer term perspective, actually.
Okay. Taking the next query then, this one is again from one of our viewers who's joining in again on our YouTube. Sapna writes in, says, good afternoon Sakshi and good afternoon Kranti sir. I want to know, is Gandhar oil refinery good to accumulate at the current levels? Again, this is the same kind of story. We did see the stock rally quite a bit in the recent while, and today it's down. In fact, in the last couple of sessions also, it's seen some profit taking on Gandhar oil. If we look at the last 5 days, it's up by 4%. Last 1 month, there was a 36% kind of a rally. In fact, the stock went up from 179 levels all the way up to 281 levels, and thereafter it was some kind of a consolidation that played out. Gandhar oil refinery for you, Mr. Batini.
Yes, actually, the stock have witnessed a strong uptick in the recent past. Last 1 week and all, the stock is up in a vertical way. And the results are concerned. The main trigger is the Q1 results. Look at the growth in the top line and the bottom line. The profits are went up around 300% for Gandhar oil from a to the net profit of around 264 crores. So it's a buy and dips kind of a stock, Sakshi. After the stock witnessed a strong uptick, we tend to see some kind of a profit booking at this point of time. Investor can accumulate the stock in a staggered manner given the kind of the strong momentum the stock is witnessed.
ओके चलिए एक हमारी हिंदी स्ट्रीम से भी जो व्यूअर्स का क्वेश्चन आ रहा है वो ले लेते हैं. हरजीत हैं जो लिखते हैं, सर 700 शेयर्स हैं आईटीसी के 319 पर. व्हाट इज़ द फ्यूचर आउटलुक? प्लीज एडवाइस. आईटीसी एट 319. वी डिस्कस गॉडफ्री फिलिप्स, नाउ इवन आईटीसी इज कमिंग अप.
Stock is a strong, fundamentally strong company, Sakshi. On a longer term basis, ITC tend to both outperform करता है, but लेकिन medium to short term में जैसा GST का issues आया है, so एक pressure create किया है margin पे, but लेकिन long term के लिए ITC को hold कर सकता है साक्षी जी.
ओके नेक्स्ट करते हैं क्वेश्चन, और ये हमारे पास सवाल तपन का कोलकाता से आया है. लिखते हैं, सर आई एम होल्डिंग CIE ऑटोमोटिव एट 472. शुड आई कीप अक्यूमुलेटिंग एट करंट लेवल्स?
एक जोरदार डाउनटिक हम लोग देखा है CIE ऑटोमोटिव्स में. स्टॉक एक कंसोलिडेशन फेज में है साक्षी जी. रिजल्ट्स का हम लोग देखें तो ठीक ठाक रिजल्ट्स है. टॉप लाइन अच्छा ग्रो हुआ. बॉटम लाइन देखे तो एक 15% का अपटिक हम लोग देखा है बॉटम लाइन में. मीडियम टू लॉन्ग टर्म के लिए जरूर स्टॉक को एक्यूमुलेट कर सकते हैं साक्षी जी.
ओके नेक्स्ट क्वेश्चन ले लेते हैं, और ये सवाल हमारे पास आया है एक और हमारे दर्शक का, और ये सवाल है व्हाट्सएप के जरिए हमें मिला है. रवि कालरा का दिल्ली से हैं ये. लिखते हैं, हाय साक्षी, हाउ आर यू? आई एम वेरी वेल, थैंक यू सो मच रवि फॉर आस्किंग एंड आई होप द सेम फॉर यू. PC Jewelers पर इनका क्वेश्चन है, मिस्टर बतीनी. ही इज होल्डिंग a large quantity, 60,000 shares at 9.5 levels. Now he wants to know, can he continue to hold on for next 1 year on PC Jewelers? He's held on apparently approximately the similar price. It's slightly cooled off from your own purchase level, but let's try and understand whether there is any outlook if you can share here, Mr. Batini, for next 1 year.
ऋषि जी, एक चीज है, पीसी ज्वेलरी स्टॉक में काफी कॉर्पोरेट गवर्नेंस इश्यूज लगातार रहता है. सो इसलिए ऐसा स्टॉक्स हाई रिस्क एपेटाइट इन्वेस्टर्स को और जो निवेशक थोड़ा सा स्पेकुलेटिव एक्टिविटी करता है उनको सूटेबल है. बट लेकिन लास्ट क्वार्टर रिजल्ट देखे तो काफी अच्छा है पीसी ज्वेलरीज का. अगर लगातार ऐसा ही क्वार्टर का रिजल्ट आया तो जून क्वार्टर में भी स्टॉक में रैली देख सकता है. बट लेकिन पीसी ज्वेलरीज जैसा स्टॉक्स में बहुत सारा स्पेकुलेटिव एक्टिविटी रहता है, वो चीज ध्यान पे रख के पोजीशन बना सकता है.
ओके let's take the next query then. This one is from Vinod Chaudhary. लिखते हैं, hi Sakshi, hi Kranti sir, thank you so much for this show for the retail investors like me. I need your guidance, Kranti sir, on 2 stocks. One is Avanti Feeds and the other one is Quality Power Electricals. I have a 2 to 3 year time frame. Please guide me if I can continue to invest in multiple entries into these stocks, Avanti Feeds and Quality Power Electricals.
Avanti Feeds, abhi filal, he can hold on to the position, Sakshi. In fact, he can buy at this price range also, Avanti Feeds, for a medium to longer term perspective.
Okay.
One thing is the trade tariffs also impacted the stock sentiment in the medium to short-term perspective, but this is the range you can accumulate on the feeds for a medium to longer-term perspective.
Okay. Let's take Rohit Jain's question next. IRB Infra is on his radar. He says he bought this at 28. What is the outlook on IRB Infra?
So actually, all these infrastructure related companies are concerned. They are in a consolidation phase, and they have been underperforming the broader indices. Majority of these infrastructure companies are concerned. He can hold on. Probably we can expect some kind of a rally in the next couple of quarters. By the budget, the infrastructure spending might go up. Normally, in the monsoon season, the infrastructure companies tend to underperform. So he can hold on to the position.
ओके नेक्स्ट हम लेते हैं एक और सवाल और ये हमारे पास आया है एक और हमारे दर्शक का जो कि लॉरस लैब्स के ऊपर आपसे पूछना चाहते हैं। नाम तो इन्होंने अपना नहीं लिखा है, लेकिन इस पर आपका क्या ओवरऑल व्यू है ये आपसे जानना चाहते हैं। लॉरस लैब्स
काफी आउट परफॉर्मिंग स्टॉक है साक्षी। लास्ट पिछले 2-3 क्वार्टर्स में स्टॉक 100% ग्रो हुआ है। बट लेकिन एक चीज है, लास्ट क्वार्टर का रिजल्ट्स देखे तो काफी अच्छा है रिजल्ट्स। बट एक चीज वैल्यूएशंस का हिसाब से देखे तो it is fully priced in Sakshi. So, but the stock is outperforming. He can book some profit from the table at this point of time. At least book 50% profits from the position. That can be good thing to do. Given the kind of the current valuations, the valuations look stretched at this point of time with the 90,000 crores market cap for this company for this revenue.
Okay. Next query हमारे पास मनोज गुप्ता की है। He says, I live in New Delhi and I want to know about IDFC First Bank. The company has been receiving a lot of buy recommendations from brokerage houses with higher target prices. Do you think it is a good time to make a fresh entry at the current levels? And what would be your own expected target price for the next 6 to 12 months onto this stock? You're right, IDFC First Bank came out with strong Q1 earnings, and we've seen many brokerage houses come up with fresh targets onto this one as well. Mr. Batini, from the opening highs, we've seen some profit taking, but stock is still holding up above 5.7% higher in the session. It's been, again out of vicinity kind of a stock, but suddenly things are improving for the better as far as fundamentals are concerned. Do you think this can carry forward in terms of stock price performance as well?
Yes, actually, the stock, after a very long gap, we tend to see some kind of a uptick in IDFC First Bank is concerned. The valuations looks very attractive for a medium to longer term perspective. So one can buy on dips kind of a stock, but it has been testing the patience of many investors from quite a long time. But the present quarter results have been good. If the company could able to replicate the same kind of a performance in the coming quarters, then it can sustain the current move in the market. So for a longer term perspective, definitely it's a buy on dips kind of a stock.
Okay, let's take another query. This one is from Ravi, who says, sir, what about United Spirits? I have 1474 is my buying price. What should I be doing right now on United Spirits?
Sakshi, the stock is in a consolidation phase, and we tend to see some kind of a uptick in the recent past. The last 2 months, the stock price performance is concerned. The last quarter results are out. We tend to see some kind of a downtick in the revenue performance is concerned, but the bottom line is concerned, the profitability has went up, Sakshi. At this point of time, he can hold on to United Spirits for a medium to longer term perspective.
Okay. Next, we have this question from one of our viewers, Sri Hari Krishna from Hyderabad. He says, hi Sakshi and Kranti sir, good afternoon. It's so thankful that I can get connected with Kranti sir on this channel. Thank you so much for writing in. Mr. Batini, your fan, and of course he wants to ask you about his own current positions in IDBI Bank today. 500 shares at 102 levels, and also grow shares at 210. So he wants to know, he's in losses right now. What should he be doing on both these stocks? IDBI Bank, he bought at 102. Grow, he bought at 210.
For IDBI Bank is concerns actually whenever the disinvestment news that do comes, we tend to see some kind of heightened activity in IDBI Bank and rallies, and these rallies get fizzled out after some time. So the same thing, we need to see how this disinvestment is going to take place. Most probably, we can expect by end of this March, a decisive, concrete decision would be taken with respect to IDBI disinvestment is concerned. So hold on to the stock. With respect to the grow is concerned, the stock is almost touching the 52-week high. It is right now at 200 is the level the stock is trading. He can hold on to the position, but grow is concerned, Sachi. The valuations look structured for me. So it is a sell and rally kind of a stock.
Okay, next we'll take a query coming in from one of our viewers again. This is from one of our viewers, Ravi from Gujarat. He says, hope you're doing well, very well. Thank you so much, Ravi, for asking. And he says, this is a great show for investors and traders. Thank you so much for getting the expert views on the program. Thanks a lot, Ravi, for writing in. His question is on Piramal Pharma. He bought this stock at 173. And he says the stock is up by almost 6%. Will it be a continuous run from here on? What can he expect on Piramal Pharma, PPL Pharma?
Sakshi, after a short brief of consolidation, the stock is going up right now. So the current quarter results are due. If the current quarter results are up to the mark, and if we see some kind of a uptick in the profitability, then the rally can sustain. So wait for the results, and since he was looking for a short-term perspective, 175 is the level he need to have a trailing stop loss for a medium to short-term perspective. Otherwise, hold on to the stock.
Okay, fair point. Taking the next question then, this one is from Venkat. He says, hi Kranti sir, I bought Canara Bank at 126. What is your view on Canara Bank if I want to hold for short term?
Short term is slightly difficult, Sakshi, for a stock like Canara Bank is concerned. The peer group of banks with respect to the public sector undertakings are concerned, they have posted strong set of numbers. For a fundamental perspective, Canara Bank, he can hold on to the stock. I can give a long-term view, medium to long-term view. He can hold on to the stock. The stock is trading around the book value. The valuations looks very attractive with respect to Canara Bank is concerned, Sakshi.
Okay, got that. Let's take the next question. This one is from Bhaskar from Hyderabad. He says, Kranti sir, please advise on Clean Science Technologies. A fresh entry I want. Over the next 2 to 3 years, do you expect this stock to do well?
In terms of the valuations are concerned, Sakshi, Clean Science looks attractive at this point of time. The results are scheduled on 1st of August. At this point of time, he can add Clean Science in this price range.
Okay, let's take the next one. This one is from one of our viewers, Subbu, who says, sir, please advise on Goldium International. I have this stock at 358. Please advise when to average and what kind of targets do you expect in the long term for this stock?
In terms of the Goldium International is concerned, Sakshi, stock tend to have some kind of a speculative activity in the counter. We tend to see some spikes and some kind of a downticks in the stock. Last quarter results are flattish kind of results. To make any kind of a position in these stocks, wait for the results, and he can make a position in Goldium International, Sakshi.
Okay, we'll take one last question, and this one is from Rishabh Agarwal, who says, hi Kranti sir, please advise your views on V-Guard. How do you see this stock for the long term? V-Guard.
V-Guard is concerned, Sakshi. The stock is in a consolidation phase at this point of time. All these electrical equipment stocks are in a consolidation phase. Last quarter results have been decent. If the investor is looking for a longer term, definitely he can buy at this point of time for a medium to longer term perspective.
Okay. And I hope that we've taken most of the questions today. But Mr. Patini, anything of fresh coming in onto your radar that you want to advise to our viewers where to keep their focus sectorally or specific stocks as well if something is showing you some smart ticks on the higher side?
Sakshi, as I recently mentioned to you, the aerospace is the sector that looks very attractive. Many of the companies are entering into this space, but investor need to identify which segment these companies are entering. Many of the auto ancillary stocks, which have a strong set of fundamentals and strong set of skills to enter into aerospace, these stocks are qualifying. Investors, one can add these segment of stocks in their portfolio for a medium to longer term perspective. This space has been right now is the limelight. It's in the limelight at this point of time. One can buy these stocks for a medium to longer term perspective.
Okay, fair point. I hope that viewers, you've taken a lot of suggestions from Mr. Batini on the program, and this expert guidance might help you out in designing your portfolios right. Thank you so much, Mr. Batini. Appreciate your time with us on the program. With that, we are going to be wrapping up this special edition on Daily Calls. But up next, we have earnings conversations coming in soon. So viewers, stay tuned. We will have Ramakrishna Forgings, come up next, the management, to talk about what has gone behind the 297% kind of a rally that we've seen for the company's profitability in Q1. And of course, what's the guidance going forward. So stay tuned. Coming up next, Ramakrishna Forgings.
Hello and a warm welcome on Business Today television, ladies and gentlemen. The markets seem to be coming under pressure for various reasons. It could be rising oil prices, it could be a log-jammed parliament, as also a weak rupee, but the Nifty sort of consolidates around 24,000, and this is a space where the bulls are defending with all their might. What are the broader structures of the market telling us? Where is momentum and where is pain? To discuss this and a lot more, we are joined by Mr. Prashant Shah, founder and CEO of Define Edge Securities. Namaste Prashantji, and it's always a pleasure to host you, sir. Prashantji, ladies and gentlemen, specializes in a very niche market, which is point and figure, but his young frame does not tell us the kind of experience and the cerebral strength that he brings to the table. He is also an author of a number of books and has a very, very strong command on point and figure. With that background, Prashantji, let us begin. First, tell us, what are the broader macro structures of the market? The Nifty vis-a-vis bonds, the Nifty vis-a-vis precious metals, and the dollar.
Okay. If we look at the Nifty overall, my approach is usually a top-down approach. So we can start by what Nifty is doing, as you rightly asked, vis-a-vis dollar, vis-a-vis other asset classes. So right now, if we look at the overall Nifty trend, my take is on a broad level, from very short-term perspective, it is doing nothing as such. I mean, it is in a very tight consolidation range, where, technically we call it squeeze. It's a very tight squeeze. Nothing much is happening. But from a medium-term perspective, it is outperforming other asset classes, and it is still, kind of showing the strength. But if you ask me about momentum, the momentum is not in large cap. The momentum is in mid cap, small cap, micro cap. The stocks are doing much better than what Nifty is doing right now. So from trading and investing perspective, I guess the focus should be stock specific, and right now that should be the strategy in general.
Okay. Now, when you say that large caps are underperforming, that's easily visible. There is little or nothing happening in the private banking universe after Saturday's earnings, as also there is pain in Reliance, L&T, is below 200-day DMA. Similar stories are bounding in the likes of ITC, so on and so forth.
Yes.
So what should be, let's look at the two parts here. What should be the momentum strategy for quick gains, and what should be the investment strategy?
Yeah, great. So if we talk about strategy, my approach is, so you said short-term strategy from short-term perspective or from medium-term or long-term perspective. As I said earlier, my approach is top-down. So we talked about Nifty, and then next comes what kind of sectors are moving, which space is doing good. So first of all, from short-term and medium-term perspective, I think auto is doing extremely good. They are the charts are good. It is the relative strength chart. So auto index versus Nifty and the other indices, it is at almost all-time high, and the chart setups are really great. There is a nice horizontal breakout formation. So that's a great setup out there. So I would say auto stocks one can look for from trading perspective and from investing perspective also when it comes to momentum trading or investing. As at the same time, consumption, consumer durables, chemicals, defense, these are
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. This is the earnings special conversation that we're going to be having with Ramakrishna Forgings, the company that's reported a near 300% year-on-year jump in the consolidated profit after tax to 46.88 crores from 11.8 crores that was reported in the same quarter last year. The revenue from operations have also risen by nearly 20% to 1,216 crores. We've also seen the EBITDA increase by 46% to 222 crore rupees for the company. Even the margins have expanded to 18.2% as well. So it's an all across, all the parameters and metrics have shown an improvement for the company. In fact, now the company is focusing on approving 170 crore rupees capital expenditure to further plan and strengthen the company's manufacturing capabilities and to deepen its presence in the passenger vehicle segment, as well as the investment is going to be used to set up a 4,000 metric ton press line and create additional capacity for manufacturing passenger vehicle components as well. So we'll get started in conversation with Mr. Lalit Khaitan. Now he's the CFO of Ramakrishna Forgings. Welcome to you, Mr. Khaitan. First up, congratulations. Strong set of numbers coming in for Q1. We've seen the stock price also react pretty positively after these numbers. Give us and our viewers an understanding of what this near 300% jump in profitability is being contributed by, and whether this kind of a performance will be sustainable even for the rest of the financial year.
Thank you, Sakshi. Certainly, this profitability, what we see in the current quarter, is a normal profit. I will say the profit what we are comparing for the earlier year were little disrupted due to the tariffs and then the little bit impact on the sales demand side. That was on Q1 last year. Domestic demand were also not that great. So all these factors have improved, and I will say geopolitical situation, though West Asia continues, but still it has improved. And that's led to the improvement in top line, and coupled with the improvement in mix, I will say export also improved, and other value add product also, I will say, has contributed to this performance. And this is a sustainable performance, and going forward we will like to improve upon this performance in the future quarters, and it will continue like this.
So, sir, when you talk about your top line as well, that's also grown strong. Which are the end markets? You are talking a lot about passenger vehicles, but which of these segments, commercial, passenger, railways, or maybe even industrial and exports, have contributed most to the quarterly's performance when it comes to the top line?
So, if you look at the top line, passenger vehicle is yet to start. So this is we have just foray into the passenger vehicle, and contribution will come after 2 to 3 quarters from the passenger vehicle. But commercial vehicle, export markets, and other small market, including railway, all has contributed in bits and pieces, and cumulatively you can see that impact. If you want to single out anything, there is nothing as such. But yeah, in all the area we have seen the improvement, and which contributed to this kind of growth.
You've also announced this another round of capacity expansion. If you could give us an understanding of how are you looking at the total planned investment here, what capacities are being added, what is the expected timeline for commissioning, and what is the contribution to the overall books that you will see in eventually how much time?
So see, this capacity expansion at a capex of 170 crore. This is mainly for the passenger vehicle and forging capability of 4,000 ton press. So passenger vehicle capability will be in place in this financial year, and 4,000 ton forging capacity will be in place next financial year. Overall, these two together line will contribute about 250 to 300 crore of revenue to the top line. And certainly the EBITDA, what we are doing, it is EBITDA accretive, and maybe 18 to 20% EBITDA we will be able to make from these both the lines together.
Okay, and how confident are you about the demand visibility, sir? You did say that from last year, last year, same quarter, there was a lot of demand destruction that was taking place because of tariffs and other issues. How is the demand scenario panning out right now? And, is the expansion that you're looking at also backed by the firm customer commitments, order wins as well? What is your overall outlook on future demand?
Certainly, the demand scenario looks much better than what we have seen last year. And quite a good traction both in domestic as well as export market. Apart from that, certainly what we are adding the capacity, it is always backed by the order. We have the discussion from the customers, and they have already given us a 4-year, 5-year, multiple-year contract. Then only we move ahead with the capacity putting up. So that's no challenge in terms of demand and even utilization of the new capacity. We are quite confident there.
Okay. With global OEMs also looking to diversify their supply chains, how are you looking at tapping that kind of a demand? Is it coming, are incremental opportunities being seen at this stage for domestic players like yours? Or which are the geographies that are driving more export inquiries from you?
No, so this is happening for last 2 years since Ukraine war. That global supply chain, people were looking at to move to India more and more. And we are getting benefit of it continuously, though it had not been seen in the last 1 or 2 years due to market conditions. But if you can see our order win in last 2 years, it's quite healthy. And all this will result in the top line in the upcoming period. So certainly we are getting benefit of this global supply chain shift, and we'll continue to get that.
If you could detail for our viewers, how is your order book split between domestic as well as exports? How much of it currently is coming in from both these areas, and what is the total current order book, and what's the visibility for financial year 2027?
So Sakshi, we don't have a firm order book any time. We always get scheduled from our customers from domestic as well as export market. And on the basis of that, and we get the forecast from my customers. On the basis of that, we work and we foresee how the market is going to bear. We always have a long-term contract. So we have a 4-year, 5-year contract. But demand can vary because that's the commitment to supply. But if market conditions are better, we have to supply more, or it's deteriorated, we can supply less. So there is no as such firm order book.
Okay. Give us an understanding, sir, when it comes to the raw material price volatility, that was something that was hurting a lot of OEMs. We have been seeing over the last couple of months how series of price hikes are taking place because of the kind of raw material prices have impacted a lot of OEMs. Give us an understanding of how are you looking at the scenario on the raw materials, and on your margins also, what is your expectation, sir?
For raw material side, it's a pass-through for us, so it doesn't impact us. And so we are not seeing any impact of raw material price hike. And overall margin, certainly in percentage term, it will not have a positive impact, little bit negative impact. But overall, considering the demand scenario and increased production and sales, we see an improvement in margin in upcoming period.
Okay. So also give us an understanding when it comes to your overall
EV business outlook? How is that shaping up? Because we are looking at large, shift in preference of customers because of the recent, issues with either ethanol or the sharp rise in fuel prices. All of that is shifting preference of consumers to electric vehicles. The government is also focusing all their attention into making sure that more and more customers are tuned towards EVs. How are you looking at your EV book also shaping up, sir, right now?
Certainly, it is improving, Sakshi, but we are right now very small in EV, and we are just getting traction out of this sector. And we certainly will have significant share of EV in upcoming maybe 1 or 2 years. Right now, we are only maybe 1 or 2%, but certainly we are going to move to 5 to 10% of sales on this.
Okay. So also, since you talked about your capex, could you give us an understanding of with any kind of fundraise be required at your end? Are you looking at that, or will it be funded through internal accruals right now?
No, we will do it from internal accrual only. There will be no fundraise on this.
Okay. And what about the current debt situation, sir, on the books?
So we have already highlighted on the con call we have about 1900 crore of debt as on date, which is a little bit down from the last quarter or year by almost 100 crore. And we have given a guidance of reduction of 500 crore of debt for the full year. And we are on track of that, and we will continue with that.
Okay, fine. So give us an understanding of looking ahead. What are going to be the big opportunities for FY27 for you that you are going to be tapping on? And if there are any risks that investors should watch out for?
See, we are well on track to whatever guidance we have given for FY27. And we have already given a guidance of almost 20% growth year on year for FY27. And right now, what we are seeing in the both domestic and export market, it gives us quite a good confidence. Yes, we will comfortably achieve that, or even we may overshoot that target. Looking at certainly we need to closely monitor this West Asia conflict. It is taking a toll on the cost. And though there was a temporary halt 1 month back, now again it's flaring up. So we need to certainly look at geopolitical issues because it increased cost, and then certainly we need to watch close watch on the tariffs also. All these are certainly there needs to be taken care.
Okay. So give us an also understanding, so far and how the scenario is developing. Are you looking at more components per vehicle also to be tapped onto? Are you increasing the number of products that you can contribute to per vehicle?
Certainly, this is again continuous process for us. We keep on adding parts and even see number of parts for each vehicle for each customer vary. Suppose I have for one customer maybe 10 parts, for other customer 30 parts. So how I can make that customer from 10 to 30? These kind of things helps in improving the share of business, and this is the part of the normal business process, and that's the constant process at RKFL.
Okay. So since you talk about a 20% growth rate for FY27, if I have to ask you to give us a long-term vision of next 3 to 5 years, what is your internal aspiration when it comes to the top line and bottom line, and what's your overall vision for the company's growth from the current levels?
So we are always looking for 15 to 20% CAGR growth, and that we will continue to achieve over the period of 3 to 5 years.
Okay, fantastic. Thank you so much, sir, for being with us on the program and for guiding all our viewers there. All the very best for the coming quarters, and we'll be, of course, happy to have you back in the next quarterly results to also share with us the updates. Thank you so much.
Thank you.
All right, viewers, you heard from the top management of Ramakrishna Forgings. Strong results coming in. They're confident of maintaining a strong top-line growth of 20% for this year. And, of course, they're tapping on demand improvement both domestically as well as exports, which is leading to healthier order book as well, and the pipeline that remains strong. And they're confident of that as well. Thank you so much for being with us on the program, and keep seeing all these exclusive chats that we keep on bringing to you from the earnings season this time around. And of course, the markets coverage will continue on the other side. Thanks a lot for tuning in. Hello, on
welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Money Today. And today we're going to be talking about your tax filing guide. Filing your income tax return is now more than just an annual compliance exercise. It's in fact an opportunity to get your finances right. But every year, taxpayers always face same questions. Which tax regime to choose? Which ITR form applies to you? What deductions can you truly claim to reduce your tax outgo? How do you avoid the mistakes that can delay your refund or even trigger a tax notice? So whether you're a salaried employee, a freelancer, an investor or a first-time taxpayer, we will simplify the entire ITR filing process and answer all the tax-related questions that will help you understand and simplify the process this time around with you. And we'll now welcome our guest on board. We have our tax expert, Gauri Chadha, with us on the program. Welcome, Gauri. Good to have you with us. Well, I think this is the busiest time for you in the season. And, last about 10 days odd when the entire rush truly comes in to file the taxes. But the biggest dilemma every year taxpayers face is choosing between the old and the new tax regime. And because there are always every year in the budget some or the other tweaks that keep happening on the old and the new tax regime, the questions keep coming and people still do not know which regime is better for them. First of all, help them understand that now that they're going to be filing the ITR for the previous season, is there still time for them to choose between old and the new tax regime? And because the new tax regime is now a default option, does it also automatically make it a better choice?
Definitely, Sakshi. First of all, I think this year is a little different. There's slight relief for us because from this year onwards, the ITR filing date for non-business people, basically salaried and people who have income from house property and maybe other sources, is 31st July. And the people who have any kind of business income, and that includes F&O trading or any intraday trading, they have time till 31st August. So now coming to your question, the dilemma is, of course, there to choose between old regime or new regime. And I feel that mostly people now have shifted to new regime for two reasons. One is that they were making unnecessary investments or claiming unnecessary deductions and, making expenses just to save taxes. So now the new regime has such lower tax rates that without making those investments or expenses, they are able to save more taxes. Secondly, new regime is very simple and the chances of getting a notice are negligible if you are filing it correctly because there's no chance of tax evasion because technically you are not getting any deduction or exemption. Whereas in old regime, if we'll see, there are a lot of notices coming since last 2-3 years. Clearly, the income tax department is not promoting old regime. And now if you will see the forms are also asking for a lot of additional details. For example, if you will see the HRA case, HRA was the most misused section. In HRA, now you have to mention the relationship with the landlord because a lot of people were giving rent to parents or parents were giving rent to their children. So in that case, you have to mention the relationship with the landlord. And if you are giving any donation to any political party or any charitable institution, you have to mention the reference number of the payment made. So it is not very easy to claim deductions in the old regime. Now, if you have opted for new regime, in your declaration to the employer and employer has given you Form 16 as per the new regime, you can definitely change the regime while filing the income tax return. There is no restriction on switching the regime while filing the return until unless you have business income. So if you have business income, in that case, you can't switch every year. Once you can exit, but if you don't have any business income, you can change your regime any and every time, but make sure that if your employer had the knowledge of new regime, he has given the Form 16 as per new regime, and you are opting for old regime, make sure all the deductions you are claiming, all the exemptions you are claiming are genuine. You have all the documentation because you may get a notice to clarify. I'm not saying you will, but you may get. The chances are quite high.
So first of all, there are very important 3 points that you've marked out for our viewers, Gauri, that yes, the new regime is much simpler now. There is no chance of any tax evasion. Therefore, you are safe from getting any kind of tax notices in the new tax regime. In the old tax regime, the cases have been pronounced over the last 2 to 3 years. More and more tax notices were being brought in because there was some tax evasion happening. People were misusing the deductions by claiming fake claims of these deductions. And that's something that was leading to a lot of notices. So viewers, in case you do not have all the deductions that you want to take the use of in the old tax regime, better you shift out to the new tax regime. And any which ways, your tax outgo will be lower because the tax slabs are lower in the new tax regime. Second of all, importantly, in case you've told your employer that you have opted for the new tax regime, at this point in time, if you're switching to old tax regime while filing your ITRs, you will need to have all your documentation right as well. That's another very, very important point that Gauri is really marked out for all of you. Thirdly, remember, in case you have any business income, July 31st is not the last date for you to file ITR. You can file your ITR till 31st of August. If any F&O trades that you have taken in the last financial year will be counted as business income. So for all our stock market investors, know this thing. These are the 3 very important points that Gauri has marked out. Now, Gauri, walk us through real life examples of which are the cases that you believe are sure shot to assume that new tax regime is the best for them. In case you can break it up in terms of the tax slabs, that above this or below this, it absolutely makes sense to go for you. No brainer. Go for a new tax regime. You will also save a lot of your time and effort in arranging the documents, etc. And you save yourself a lot of hassle there.
Actually, no-brainer is 12 lakhs. If your income is below 12 lakhs or say up to 12 lakhs, you have to opt for new tax regime because you will get full tax rebate and you won't pay any taxes. In old regime, the rebate is still up to 5 lakhs. So 12 lakhs is a no-brainer. Once you cross 12 lakhs threshold, you have to analyze the deductions you have. Suppose you have a lot of like heavy deductions. For example, you have HRA component or you have huge EMI outgo of your residential property, your house or your commercial property. In that case, probably if you club these deductions with your ATC, your ATD, or maybe NPS, and cumulatively, if you see it becomes a substantial amount, in that case, you can opt for old regime. But before opting for old regime, you have to match both the regimes. For that, you can use the online calculator, which I always mention. It is very easy to use. Online, there are a lot of calculators available. You don't need any guidance for that. Just go on that calculator, enter your income, just see what taxes are being calculated under old regime, what are being calculated under new regime, and you will get a fair idea. Maybe old regime can be made even better if you add on to any deduction. For example, you have HRA, you have LTA, you have ATC, but you missed out on NPS, which was not planned. And maybe if you make those investments, NPS is basically additional 50,000, which I'm talking about, that you can just club with that and maybe you end up saving taxes in the old regime. But above 12 lakhs, also I feel that, it will make more sense to opt for new regime for most of the people. Only when a lot of deductions, and I really mean a lot of deductions are there, and you are willing to take that risk also to respond to the notices, if any, you should opt for old regime. Otherwise, I think just move to new regime if you're not, saving any taxes. Secondly, if you are just making these investments and deductions, expenses just to save taxes, I feel you should not be doing it because ultimately, if your take home is better, in case you are not making those expenses or deductions, and by paying little extra tax, you can take home more salary. I think that is still better any day. But of course, it is your call. And once you have analyzed both the regimes, you can choose the same.
Okay, I think one question that a lot of people will ask you is that, say, for instance, if there are very young professionals, salaried employees who have just started out and their salaries are below 12 lakhs, so there is no tax component at all. Do they have to file the ITR? And plus, the second category is the retirees who have no income whatsoever at this point in time. Do they also have to file ITR? These are the two most common questions that we get.
In this case, you'll have to see if you're falling under any other category. For example, if your income is exceeding the basic threshold limit, which is say 4 lakhs or 3 lakhs in old regime, you have to file your income tax return irrespective of the taxability. You may not be paying any taxes. Maybe there is no TDS which has been deducted. Maybe the employer didn't deduct any TDS, but you are legally required to file your income tax return. Secondly, suppose your income is below the threshold limit and you are legally not required to pay taxes, file your return, but because there was some TDS, of course you want that refund, right? If suppose you just have any FD income and 10% has been deducted and there is no other income, but when you file your return, only then you will get your refund back. Thirdly, there are few conditions. If you fall under any of these categories, even though there is no TDS deducted, even though your income is below the threshold for that particular year, you will be liable to file your return. These conditions are that if you have paid for any foreign travel for yourself or any of the family members, and that foreign travel was for more than 2 lakh rupees, you fall in this compulsory category. If your electricity bill was more than 1 lakh, you fall in this compulsory category. If your cash deposits in the savings account was more than 50 lakhs or in current account it was more than 1 CR, in that case also you have to file your income tax return. Now, if you see these amounts are substantial amounts, so the government assumes that if you have this kind of money and you can spend so much money on your foreign travel, on your electricity bill, or you have so much cash lying with you, then definitely there is some source of income which you have and you must declare that.
Okay, fine. And now a lot of people also believe that only if I have deductions should I look at old tax regime. But those who still have a lot of tax saving planned to use deductions are now looking at new tax regime. Are there still any benefits available, or is there no deduction absolutely at all? There's often this misconception that there are no deductions at all in new tax regime.
See, technically there is no deduction because if you talk about the famous HRA, famous ATG, ATE, ATC, all of that is not
Mediclaim,
there. But standard deduction is still there. In fact, standard deduction is higher in the new regime. So you get 75,000 of standard deduction, for which you don't need any expense bills. You don't need any proof. That is something which everybody is getting. So that 75,000 is there. Apart from that, 80CCD one is there where the employer is contributing to your NPS, of course within the limits, but it is there. So that would be allowed in the new regime. Apart from that, I would say some retirement benefits are there. When you retire, you get gratuity VRS if you are taking, or you get your any other retirement benefit that is still exempt. Provided that falls under that category, because every retirement benefit which you get has a certain calculation involved to it. Within that limits, it is still exempt. So these are very few deductions which are available in new regime. But I feel that is the whole charm of new regime, because there are no deductions, the rates are easier, lesser. So the return filing becomes easier, and of course the chances of getting notices decrease. So the ease of filing, I suppose, is much higher than the old regime.
So since you talk about the ease of filing, Gauri, what would you advise to investors who don't have much complications in terms of various sources of income, if they're only salaried employees and they have a very straightforward return to file here? Can they look at filing the returns this time on their own? Are the return filing processes simplified enough that they should be taking this, upon themselves? In which categories do you recommend investors or taxpayers to go forward and file taxes themselves, vis-a-vis in cases where they should be taking a professional help?
Really depends on how aware you are about your own finances. Talking about my own experience, because I deal with a lot of people on daily basis, what I've realized is that people think that this is the only income which is there. But when you check their AIS, and they in fact refuse that we don't have any such transaction. But when you check their bank statement or any other document, that transactions are there. So these people don't even know what happened all throughout that year, and they get confused. Now, if you're filing your return on your own and you're aware that this is the only income I have, and you are sure, you check your AIS, you check your 26AS, you check your bank statements thoroughly, you have little knowledge about finances, you can definitely file your income tax return on your own. There is no harm in it. But if you feel that you know everything about your finances and you end up filing your return on your own, and ultimately, after a few months you get a notice. Then don't be surprised because there are a lot of transactions which you may not know. I'll give an example which is quite trending these days. If we talk about the foreign assets, there are a lot of people who don't declare foreign assets, and the government is, I think, quite strict since last 2 years. The focus has been on foreign asset disclosure. They've given this a nudge campaign twice. In the budget, there was a amnesty scheme, and now the income tax department has been advised to, within 90 days, they have to put up the foreign assets of all the SSC data they have. Now, there are a lot of people who are not disclosing their foreign assets. Either they don't remember, like students who came back from their after completing their graduation or post-graduation, they had bank accounts in the foreign country. They haven't closed it yet, and they're not disclosing it. Now, the income tax department is coming and telling you that, listen, we have this information, and you haven't reported. So these are very important details which you have to disclose in your income tax return. Maybe you don't end up paying any taxes, but disclosure is equally important because that is where you can get notice. So, to answer in short, I think if you are very confident and you don't have much income, file it on your own. Otherwise, do take professional help.
A lot of people also assume that if the TDS has already been deducted, then they don't need to file an ITR. How common is this misconception, and how would you advise people?
Provided they don't want it back, it is their money. so I think if you are aware that your TDS has been deducted, in fact, you should be filing your return legally as well, and otherwise also. See, it is your money, and I'm assuming there's no other taxable income, and suppose only 1 lakh interest was claimed for, say, FD, and 10,000 rupees TDS was deducted. Now that 10,000 rupees is your money. So unless you file your return, you verify your return, you won't get that 10,000 back. So getting TDS deducted and not filing return is not related. If your TDS is deducted and the income is even below the basic exemption limit, you have to file your return to get your refund back, and otherwise as well.
So even in the new tax regime, is it possible that people can apply for refunds, and in what scenarios can people apply for refunds? That's a very common question that people would have, that yes, TDS has been deducted, but in what cases they can look at refunds?
See, in new regime, I think more refunds would be coming. See, if your income, say, is 12 lakh rupees and your employer didn't deduct any TDS, but you had some FD interest, you had some other income where your TDS was deducted. So your income, because it's below 12 lakh rupees, when you file your return, you will get full rebate for the taxes. So the balance which has been deposited in your PAN will be given to you as refund. So in this is first case. In second case, if suppose your taxes, you have paid more taxes, suppose your employer deducted more TDS, or suppose you fall under 5% slab rate or 10%, less than 10% slab rate, and your employer deducted TDS at 20%, or your bank deducted at 10%, or being an NRI deducted at 20%. So the balance also will be refunded to you, because see, the TDS rates, standard rates, the person deducting the TDS doesn't see the slab you are falling at. So the TDS rate being standard will definitely be different for everybody. So in few cases, there will be tax payable. In few cases, there will be tax refund. And in very few cases, it will be equal to what you were supposed to pay. So in new regime also, in most of the cases, you will get refund if extra TDS was deducted from your income.
Okay. Now, if somebody has switched their jobs during the financial year and they've also earned interest from multiple bank accounts, or they've taken up, say, freelance work as well, what extra precautions should they be taking while filing the ITRs this season?
Sakti, in this case, I think the impact will be higher if you fall under the highest tax slab. And why I'm saying this is, when you switch your jobs, in most of the cases I have seen, the employee doesn't disclose the previous employer's salary to the new employer. So what happens is, both the employers either may not deduct your tax, or if they are deducting the tax, they will deduct on the lower tax slab rate, because according to them, you fall under the lower tax rate. Secondly, when you file your return, you have to club all the income during that year. So your employer income will be included, your employer 2 income will be included, and any other interest income will also be included, where the TDS will be deducted at just 10%. So basically, in such cases, you should be aware that you have to file your advance taxes. Suppose your total taxability during the year is more than 10,000, then you have to file your advance tax. If you are not filing your advance tax, then while filing your return, you will end up paying a lot of interest as well. And in case you file your belated return, then the penalty and interest will be a major amount. So if you are switching jobs, either you disclose the previous employer's salary to the new employer and make sure the TDS is deducted accordingly, or if you are not doing it, then pay your taxes, advance taxes as installments in June, in September, in December, and then in March. So that way you will save your interest.
Okay. And lastly, Corey, what you alluded to also earlier, we have talked about, receiving a tax man's notice is a nightmare for everyone. And therefore, to avoid that, what are the common mistakes, that people end up doing, should not do? If somebody has not yet filed the ITR, or if they end up making a mistake while filing an ITR themselves, what should they be remembering, that, how to deal with a tax notice and how to prevent receiving any tax notice?
So first would be, if you are missing out on anything which has been reported in your AIS and 26AS, I think you will definitely get a notice. That will be a mismatch notice. So first is that. Second is that if you have claimed excess TDS which was not reflecting in your 26AS, because some people manually put that amount thinking that the other party will get it deposited, and that doesn't happen. So that way also you may get a notice. Apart from that, there may be some cases where the department is sending you a notice in case of old regime, asking for some additional information in case you have claimed a lot of deductions. So in that case, you must have your supporting documents with you. And then there are few cases where I think you can't, really avoid the notice, where you are getting a scrutiny notice, because these scrutiny notices are sent on particular case basis. And if you get a scrutiny notice, then everything is checked. And if you have everything proper in place, there is nothing to worry about. So if you have done everything properly, you filed your return, you have e-verified your return, which is very important, because if you forget to e-verify your return, the return is treated as invalid. It's very necessary. Then secondly, if you are, entering all the details correctly and filling in all the columns, because if you're not filling in all the columns, you might get a notice of defective return. Okay. So if you have done everything correctly, I think there is nothing to worry about. And one thing I would like to add is that when you file your return, when you verify your return, after that after a few days, you get an intimation, which is called, which is section 143 intimation. Now that 143(1). So that intimation is not a notice. Many people get scared when they get to see this intimation from the department. This intimation mostly is to let you know that your return has been processed. In few cases, there will be refund. No, few cases there will be refund, which is good for you. In cases there is any additional tax, then that will be mentioned to you. So in most of the cases, if you get this intimation, there is nothing to worry about because this is not a notice.
All right, fair point. Well, there could be many more questions coming in, and we'll keep doing this more often with you, Gauri, to help all our viewers understand everything about tax filing season this time. But thank you so much for all your insights there. I'm sure this has truly helped our viewers understand how to really look forward to choosing between the old versus the new tax regime. What are the pros and the cons in either cases? And of course, looking at various aspects before filing your ITR, so that you are, of course, preventing yourself from receiving any kind of notice, not making the common mistakes that people do, and eventually also looking at scenarios where you must also receive your own refunds if you are entitled to get that as well. Thank you so much, Gauri, for your time. All right, viewers, we'll wrap it up on that note. I hope that this has been a comprehensive understanding of the tax filing season this time. In case you still have a lot of questions, send us your queries on the number that keeps flashing on your screens, and of course on the comment section as well. We'll be happy to get you another viewpoint as far as the tax season is concerned.
Hello and a warm welcome on Business Today, ladies and gentlemen. We continue with our coverage of quality earnings in the first quarter and are now joined by the management of Sagility Limited, which is in the business of providing process management services to the healthcare and insurance industries in the US, Jamaica, Colombia, as also India. It offers claim and cost containment management services, enrollment benefits plannings to top US insurers, and has provided a stunning set of numbers. Sales has risen year on year by 28% in the quarter gone by to 1,963 crore rupees, and net profit has surged 53% year on year to 217 crore rupees. However, these numbers are down over the fourth quarter, but that's a seasonal trend that we've always seen in the business of Sagility. To discuss the first quarter earnings and the way forward, we are joined by Mr. Srinivas Mattapalli, Executive Vice President and Group CFO at Sagility. Namaste and a very warm welcome to you, Mr. Srinivas. Very strong performance year on year. What drove both sales and profit higher to this extent?
First of all, thanks for having me on the show, Mr. Metkar. Glad to join here. I think we had an extremely strong quarter. Across the spectrum of our clients, we have seen high volume requirements, and combined with our operating efficiency, combined with our focus on ensuring cost optimization, I think we have delivered a very good top line and a bottom line in this particular quarter.
Okay, would you care to explain why top line surged 58% and sales rose 27%?
Yeah. Obviously, our revenue in constant currency grew about 15.2%, and organic was about 15% in constant currency. In INR terms, we grew 27%, and I think it's basic on the background of some extremely strong client-related volume growth, where the demand for our services has remained quite strong over the last 1 year, right? Year-on-year growth has continued to. Sorry, Did you ask something? Sorry, I missed that.
Hello.
Can you hear me clearly?
No, please continue.
Yeah.
Yes, Mr. Srinivas, you're loud and clear. Please continue.
Yeah. One of the things I do want to clarify from a quarter-on-quarter perspective is, as you said, our seasonal revenues typically are much stronger in the second half of the year. So if I remove the seasonal impact, we continue to grow about 5% even quarter-on-quarter on an organic basis. And as I said earlier, it's continued good volume, demand from our top customers that is continued to drive our top line here.
Okay. Now let's get into the earnings as such. You've purchased a company called CareSeed and added clients. I think 27 new clients from the insurance space have been added. So this is obviously a higher top line. Would you be able to share with us how much you paid for CareSeed and what is the revenue stream that you hope to get from CareSeed?
Yeah, so CareSeed is a company founded about in 2012, headquartered in Kansas City, and it's basically in the analytics, healthcare analytics kind of a space. I think what we are looking for is combining their technology with our healthcare operations and our services. I think we'll be able to deliver a end-to-end the analytics kind of a continuum for our clients. We have the total consideration, as we have disclosed in our numbers, is about 30 million, up to 30 million, combining about 18 odd million upfront and another 12.5 million contingent payment based on the way the revenues grow. Their revenues in calendar year 25 was approximately 5.1 million. And obviously combining with our numbers, we expect to continue to grow that. They have about 30 clients, of which 26 clients are net new clients for Sagility.
So actually the 27 new client additions came via the acquisition.
Via the acquisition. 26 clients came via the acquisition. We also had one addition organic growth.
Is this a profit-making company?
Yes, these margins are actually good, and they are actually higher than what Sagility is at. Their last year EBITDA margins were about 31.4% against our 24% margins. So it's actually accretive from an EBITDA perspective.
Okay, fair point. What is the concentration of top 5 clients within Sagility? Has this number reduced?
First, a little background. Given the kind of US payer market where we get 90% of our revenues, they are concentrated in terms of their, in the market in the US itself. So, by the nature of our business, there is going to be a little bit concentration in our top clients. That said, our top 3 client concentration has reduced over the last 3 years from about 72.5% to around 60% today. And we have added, we had about 35 clients again 3 years back. Today we have over 100 clients, including the 26 clients that we added from CareSeed. So we do continue to, broaden our client base, while at the same time continuing to grow our revenues from the top clients. Our important point to note is our top clients continue to grow at 9, 10, 11% year on year. And, obviously there is a broad-based growth from the other clients also. So it's not that they are stagnant and we depend on other clients for growth. These clients after 18 to 20 years still continue to grow well with us.
Fair point. What is the state of margins at this point of time? Obviously, you would be deploying a lot of AI at your service end to not only reduce costs but to also improve efficiency. How is that process going on? You have a basic net margin of about 5.9%.
So first, I think our what we normally declare is our EBITDA percentage, which is we continue to guide to 24 to 25% EBITDA for the year, adjusted EBITDA for the year. In quarter one also we had about 24% EBITDA in line with what we had last year quarter one. Our adjusted PAT is about 13% of revenues. again broadly in line with what we delivered last year also. So from a margin perspective, yes, we have a little headwind from the minimum wage increase in Karnataka and Telangana, but we are continued to guide and retain our margin guidance of about 24 to 25% for this year after absorbing that increase also. And you also talked about AI. So from an AI perspective, I think we have been maintaining this consistently. For us, AI is not considered as a disruptor, right? It continues to be a force multiplier as an enabler to get higher growth. In the long term, yes, there is about 1 to 2% of cannibalization because of AI. But overall, I think we are best placed to deliver AI, inbuilt AI as part of our solution and provide those services to the client. Given our domain expertise, given our operational excellence, given the need for the US pay market to reduce the cost, I think we continue to be in a very strong position in terms of being able to embed AI into our services and deliver this to the clients.
Okay. What are your clients telling you in terms of the kind of disruption that the US insurance industry is facing on its own because of AI?
See, again, I think in our results also we talked about a little bit of that. We did a survey along with Everest, and it's been very clear that while 70% of the US payers, our clients, have actually incorporated AI into the operations, approximately 10% have seen actual results emitting from it, right? So again, given our domain expertise, I think the view is how do we change AI adoption to AI outcomes? And I think, as I said, given our domain expertise and given our operating excellence, our ability to incorporate AI into our operations, I think we are in a strong position to enable AI solution based delivery to the clients.
Okay. What about plans to add new clients? What's the pipeline looking like?
I mean, a large chunk of our growth does come from our existing clients. I mean, we do have a lot of white spaces within existing clients, which gives us enough room and opportunity to grow. But as a part of our strategy, we do continue to look at mid-market clients. We have started penetrating more. And if you see the number of clients that we have for the last few 2 to 3 years, even outside the CareSeed acquisition, we have continued to add clients. As I said, again, from 35, we have grown about we have added about 70 odd clients, including the 25 clients from CareSeed. So as part of our strategy, we do look at penetrating more and more into the mid-market US payer market and adding them as clients. We do believe that, we start small typically. Most of these clients are under 1 million in terms of our revenues for us. But over a period, we have, grown them into bigger clients, which has also resulted in our top client share also reducing, from 91, 92% again 3 years back to around 83, 84% today.
Okay, perfect. Mr. Srinivas, what is the bench strength that your newly acquired company has? How many people come on board?
Yeah, it's a technology-based company, so the number of people that's there in that company is about 14 people, which we have observed into our operations. So I think it's a more of a technology platform kind of a company, which is what we are using to incorporate, combining it with our own delivery and to deliver, an end-to-end quality-related metrics, what we call HEDIS scores, which is what we help our client measure and enhance.
Okay, perfect. Now, what ahead in terms of sales and profit guidance? What looks good?
So we are continuing to guide, to a 10 to 12%, low double digits kind of a growth. We are continue to maintain that guidance for this year. And we are also committed that, by end of Q2, once we start approaching the open enrollment season, we will relook at that guidance and see how we can guide better. But the 10 to 12% in constant currency is what we continue to grow. Guide from a growth perspective, and from a margin perspective, as I said earlier in the show, we continue to reiterate the 24 to 25% adjusted EBITDA guidance.
Okay. The list of clients under $1 million per year in annual revenue is now 71. This is a clear addition that came in from Clear Seed, right? 71, 45 goes up to 71.
Yes. 26 out of the 27 new clients, 26 come from the Clear Seed acquisition. So those are all small, below 1 million at this point of time. We do see opportunities in some of those clients for growth, definitely.
Yes, absolutely. That's more or less a given. Are there any more acquisitions on your radar where you would like to grow inorganically?
I mean, we continue to generate good amounts of cash, right? I mean, we do have about 100 crores of cash on our balance sheet. We are, we have an extremely strong balance sheet. We continue to look at, investing for growth. And if there is good inorganic targets that we can acquire from a capability perspective, we'll continue to look at those. But obviously, in terms of capability improvement, investing for growth, keeping the balance sheet flexibility, that's all top priorities from a capital allocation perspective.
Perfect. And my final question, a debt of 800 crores, any chance you want to wipe it out, if at all?
Yeah, and I think we talked about it in your last quarter. We are on target to
we did.
Pay this off by end of fiscal 27. So maybe in the last quarter of FY 27, we would become a debt-free company.
Okay. On that very hopeful note, Mr. Srinivas, we'll call it time. And let's hope Sagility gets more and more of insurance business from the US for its Indian shareholders, and he's wishing you all the best.
Thank you for having me on the show, and we do remain confident on our progress. So thanks again.
Right. That, ladies and gentlemen, was Mr. Srinivas Mallapati, the CFO of Sagility. Thank you for watching. Hello and a warm welcome on Business Today Television, ladies and gentlemen. We continue with our coverage of quality earnings coming out of corporate India for the quarter gone by. We are now joined by Mr. Dinesh Agarwal, founder and CEO of B2B online market space, IndiaMark India Mesh. We'll just show you the earnings right there in front of you. An 11% uptick in sales at 414 crore rupees, and net profit rose 12% to 172 crore rupees. The stock, however, is available at its lowest level since September 2020. Lots of interesting things have happened within IndiaMart Intermesh. Let's get Mr. Agarwal's view in on many of these. A warm welcome, Mr. Agarwal. Would you explain to our viewers how come sales and profit rose by a similar amount, 11 and 12% respectively? What were the drivers?
See, in our business model, the collections are the front line, and collection is a combination of number of customers and average collection per customer. Since the number of customers have not grown or have declined a little bit, it's most of the growth has come from average revenue per customer. And all of this flows into the deferred revenue. And from the deferred revenue on a daily basis, it is being recognized as the revenue over the period of the subscription, because many of the customers pay us for 1 year subscription or for 3 year subscription.
So it's more or less a steady quarter in which margin has expanded. You've also seen rising annual revenue per paying subscriber. Let's get two or three basic things first. Why was this subscriber churn happening in the first place? Paid suppliers have gone down by 2,000 quarter per quarter to 2,18,000. Why did this happen? Is this a trend or is this a one-off?
No, I mean, last almost 4-5 quarters, we have not been able to create a growth in this paying subscribers. Few quarters it has been 2,000 up, few quarters it has been 2,000 down, and last 2 quarters it has been down by 2,000 each. So our business has 3-tier subscription, entry level subscription at silver, and then TrustSeal subscription at gold, and then premium listings at platinum. Almost 50% of our current subscriber base are gold and platinum, which account for about 75% of the total revenue. However, over the last couple of quarters, we have not been able to retain the silver subscribers who come and join us on the platform, while the ones who get retained, they are upgrading to gold and platinum, and that's where the most of the growth is coming from. So to improve the bottom of the funnel, we need to improve the churn, and we are working on that using multiple initiatives. Let's see which one works out.
Yes. Mr. Agarwal, just a very quick word on how has the average annual revenue per user for the top 10% of your clientele moved?
Yeah, I mean, so out of the 2,20,000 customers, the top 10% means 22,000 customers. So 22,000 customers account for almost 50% of the revenue. And their annual revenue per customer is about 3 lakh rupees something, I can tell you.
The number that we have is 69,000?
The 69,000 is the total annual revenue per customer. The top 10% would be about 3 lakh rupees.
Okay, fair point. Has this number moved appreciably in the quarter gone by versus Q4 as also the year ago number?
Yes, so over the last many years as well as the last many quarters, this number has gone up by 8-9% every quarter. So last 4-5 quarters, it has been going up by 8-9%.
So fair point. So your highest paying customers are paying you more, and that's a very welcome development. Mr. Agarwal, would you want to comment on the competitive intensity of the Indian online B2B market space? There has been heavy investment coming in from global majors, local names, all of which are very familiar to online shoppers. But your views on this one would be of material significance.
Yeah, so SME and B2B are a very wide subject, and everybody, addresses some part of the business. So, for example, you can go to Google and search for any particular business as a search engine, and Google business model is that it displays you certain ads on a pay-per-click basis. On India Mart, the advantage is that we have the seller behavior as well as the seller trust profile. So we actually categorize them into proper category and proper with the seller verification tier, like a TrustSeal tier. Then there are transactional marketplaces like Moglix or Udaan or Off Business. Those are more like transactional marketplaces. So trading plus lending blended into it. While the Google and India Mart and Just Dial and Facebook, they are mostly advertising-led marketplaces. So this is more or less is the spectrum of the B2B and SME businesses in India.
Okay, fair point, sir. When you look at the new plans you have in the pipeline, a finance company, which will probably reduce the time that the customer takes from choosing a product to finally paying for it. You also have about 3,000 crore rupees of cash on your balance sheet. What is the game plan for the next 1 year, 18 months for this finance unit?
So this finance unit is to, as you rightly pointed, is to ensure strengthen little bit of the marketplace proposition. So we will try and see how to increase the stickiness of the buyer and seller on the marketplace for short-term transaction financing. I do not think we should look at the balance sheet and the finance business together. Balance sheet has a very different nature and very different purpose. The financing is going to be mostly either partner-led or at best maybe some very, very short-term pay later kind of things. So we have just applied for a company name, and then as the as the business model unfolds, we will know what works and what doesn't.
This cash on the balance sheet, somewhere like 3,500 crore rupees, contributed about 102, 103 rupees to the total profit via the other income component, which is about 60%. Is this getting a bit too higher on the percentage size? I mean, it's also hurting shareholder returns. Either maybe there should be a shareholder dividend or maybe a buyback. Is there a better utilization for this cash?
Yeah, so see, there are about 2,000 crore rupees is the customers' advances, and they need to be kept because the customer has to be serviced over the next 20 months period. Now that leaves us with about 1,000 crore rupees of cash, and every year we generate about 500 crores of profit or 600-700 crores of cash flow from operation. And we have been returning cash to the shareholders by way of buyback as well as dividend. The recent one we had returned 360 crores. So in the last 5-6 years alone, we have returned some 1,600 crores to the shareholders. So I think we are taking a balanced approach there. Most of the cash is the customer advances, which need to be serviced over the next 18-20 months period.
Fair point. When you talk about stagnant buyer numbers, or at least in the silver segment facing a lot of churn, are there any AI-led enhancements that you're working on to either reduce those churn or even maybe turn them around for the better?
Yeah, so earlier many things that we were doing manually had its own human limitations. Now with the newer technology, many things are possible and many things are being tried currently. So for example, voice listening and voice generation is a completely new era that is there. We are now able to serve almost 1 lakh buyers per day using our AI-based call agent. Secondly, I think the categories are in the B2B are enormous. If you see our investor presentation, you will find a variety of the categories from chemical to electrical to machinery to different kinds. And it is almost impossible for a human being to be able to be aware of all the categories and aware of all the products. So whereas AI helps there, and it can do a better product aggregation, product classification, and detect anomalies in the content. So that is one area. So in the auditing and aggregation also, it is going to be helping. And given that technology has moved very, very fast in the last 2 years, I think it will take years for the actual companies to adopt that much of the technology and keep improving their products and their offerings.
Mr. Agarwal, is there something that you could have done better in the 3 months gone by, something that your competitors caught you off guard with, something that could have improved this top line of 414 crores?
Yeah, of course, if we could have added net customer addition, I think that would have definitely helped. In terms of renewals and in terms of upsell, that's not always a good way to look at it. But, that's what is our day-to-day operation, and that's what we have been doing for 30 years. So every day you could have done better, and we will try to do better every day.
Is there a competitor that you admire?
Is there a competitor? Unfortunately, in our case, there is no competition, direct competition that you face on. There are some smaller size companies like Trade India, Export India. There are some tangential people like Amazon or Google or Meta or Just Dial. But there's no like-to-like 1:1 direct competitor as you will see in Swiggy versus Zomato or in Blinkit versus Zepto. That kind of competition is not there. And good and bad both for us.
Well, let's look at some good parts of your business. The return on capital as well as the return on equity is very, very strong, 29% and 22.5% respectively. Anything that you can do to improve this further, or is this the peak?
No, I mean, we don't look at it from the return on capital employed because most of our business is the zero capital business. It is a negative working capital business. So effectively, if you see, there are no fixed assets and there is a negative working capital. So, if you take out all the cash, because the cash has to be there for servicing the customer, if you take out all the cash, the return on capital is infinite. So, we can't look at it that way. We have to look at it, how do we grow the buyers and sellers, and how do we make it easier for them to discover each other and do business with each other. And in that whole process, they are willing to give you some referral fee. And that piece has very little cost, direct cost to it. If you look at our investor presentation, you'll see that almost 75% gross margin business.
Ji. And my final question, Mr. Agarwal, is on this. Any plans to raise funds as such, or you're fully happy with what you have as of now?
No, I don't think we are requiring any funds to raise at this point. Last we raised was in 2020-21. That is the time we raised, and we deployed that capital in accounting business. We acquired Busy Infotech and we acquired Livekeeping, as well as we invested in Vyapar and Real Books. And that segment of our business is also started to do well, is now almost 15% of our revenues.
Mr. Agarwal, my final question is that your PE has less than halved to 22, actually more than halved to 22, and your price to book has also come down substantially. What is the market missing?
See, I am not a share trader and I don't understand most of these terms. I do not hold any direct shares other than IndiaMart, maybe one company long time back. But otherwise, I'm a normal SIP mutual fund investor. So I didn't understand when the PE went to 100 and I don't understand when the PE goes down to 20. So I can't comment on that.
Fair point. We'll leave it at that, Mr. Agarwal, and we hope to meet you every quarter. And let's hope that the churn in the silver segment stops and that customers in the gold and the platinum segment continue to pay more and more per year to IndiaMart Intermesh. Thank you for your time, sir.
Thank you so much.
That, ladies and gentlemen, was Mr. Dinesh Chandra Agarwal, the MD and CEO of IndiaMart Intermesh. Thank you for watching. Please be with us on BTT. Warm welcome on Business Today Television, ladies and gentlemen. The markets are now in fine shape. 24,200 is what the bears have very, very strongly defended despite a weakening rupee as also strengthening oil prices. The first half of calendar 2026 went by in pain, and in the second half, thanks to strong Q1, there seems to be a build-up of good sentiment as also strong quality stock picking taking root in the market. What are the game plans for professional fund managers? Where are they pouring in money? What kind of investments they are making? To answer this and a lot more, we are joined by Mr. Ashish Chatramotha, Managing Director for the PMS business at JM Financial Limited. Namaste Ashish ji, as always, such a warm welcome. It's always good to host you. Your sentimental view of the market at this point of time, how are you seeing changes on Dalal Street?
Thank you, Shelji, for inviting me on this show. So as far as broader markets are concerned, we have been making it a point that in our markets at this point of time, small and mid cap, because of the kind of earning growth, delta which these companies are showing, we are seeing a very, very strong traction for this space. But if you look at the large cap space, some of the very, very strong theme, even let's say for example, a lot of large private banks, despite trading at a very, very reasonable valuation, maybe a decadal low valuation for some of the banks like HDFC Bank, we are not witnessing very strong traction, because if you look at the concerns related to deposits and kind of CD ratio, these companies.
Hello and a warm welcome back on Business Today Television, ladies and gentlemen. We continue with our top-notch coverage on quality Q1 earnings coming out of corporate India, and under focus or spotlight is DCB Bank. This is an old world private sector bank where the lender has posted its highest ever quarterly profit, 213 crore rupees, which is up 36%. Net interest income is up about 18% to 684 crore rupees. Anything and everything that could go right has, and the stock has responded in sync. The counter is up about 2.5% as of now to 190 rupees, 4.6 rupees higher. But early morning it went all the way up to 204 rupees, which is the highest since January 2020. So it's a 6-year peak that DCB Bank has touched fairly recently. This is a way undervalued asset. It's trading below book. 0.9% is the price to book, and the PE is 8. To discuss what went right and what could possibly be the trajectory of the future, we are joined by Mr. Praveen Kutty, MD and CEO at DCB Bank. Namaste and a very warm welcome, Mr. Kutty. You and your team should be very thrilled with this highest ever profit after tax. Tell me, where are the celebrations this evening?
To do. I mean, we're just seeing the beginning. What is so exciting, what we're really excited about, the team and I, is that this is the 4th consecutive quarter where we have hit the highest ever. So, before Q1 it was Q4, before that it was Q3, before that it was Q2. So there is a good, nice momentum running in. And my belief is that such kind of consistency gives us the ability to be more predictable, to be more confident in our predictions, and it builds sustainability over a period of time. So yeah, all in all, happy, really happy for the kind of results that you put in, but excited for the future.
Okay, perfect. So let me just elaborate on the numbers that you've just mentioned. Somewhere in December 2024, the tide turned for the better, and the numbers started looking up from June of 2025, when year on year and sequentially the bank has reported higher and higher profits. So that's something to be looked forward to. Let me just share with our audience some other numbers that have come in. Net interest income rose 9.4%, operating profit was up 5.25%, and you've had a strong growth in net advances, 17% higher. Total deposits increased 20%, and the credit to deposit ratio stood at about 80.5%. Let's look at, Mr. Kutty, the internals of the bank. Where are you seeing this growth coming in from?
So, if I were to look at Q4, when the West Asia problem, imbroglio, started, we took a call, a slightly contrarian call, saying that this is a time to stockpile liquidity. We really intensified our liability growth. So in Q4, we grew 21%, and in Q1, again, we grew 20%. So that's one part of it. We also did some IBPC sale during the quarter, during quarter one, which is because our idea was liquidity would be important. We also were slightly pessimistic, expecting the repayment to be problematic given the inflation, but happy to say that none of it really materialized. The portfolio quality continues to be good going forward. So Q1 was primarily about gold loan, was about mortgages, secured lending, growing its part. So 17% growth came from our traditional secured lending platform itself. Now with increased liquidity in hand, the quality of the portfolio really reflecting not only in GNPA and NPA, which are at historical lows, but also in terms of bounce rate, new vintage sourcing, delinquencies, slippage ratios. It gives us an opportunity to really ramp up assets in quarter two and quarter three. It will still continue to be mortgage driven. It will be loan against property driven. It will be agri lending driven. There's good demand there, good quality repayment. So that's where we are seeing how the next few quarters are going to evolve.
Okay, fair point. Now, the broad picture is clear in front of us, ladies and gentlemen. There is a higher trajectory of credit growth. Money is easy to get in terms of fixed deposits. NPAs are falling. And this is a win-win situation for a banker when liquidity is also supposed to improve over the next 3 months or so, given the FCNRB that is coming into the system. Mr. Kutty, how are you looking at the next 6 months given the tailwind that you have in the previous 4 quarters?
See, one of the things about the bank is it's more of the same but slightly better. So we are in the retail SME space. So marginal improvements and incremental movement over time is what we look at. There is very little, sudden movements which happen in our portfolio. Everything is trend based. So we would see NIM improving going forward. We are already 15 bips up over same quarter last year. Our core fee income has gone up from 135 crores to 175 crores over the last 12 quarter on year YOY. Our cost to average assets is at a historic low of 2.42. We intend to keep it within that particular level itself. And I would tend to imagine that given the kind of front-end flows that we're seeing, the credit quality would be on an improving trend. So on all the matrices, we'll see slight improvement quarter after quarter. One of the guidance that we've given is that our ROE for the year is going to be 13.5 or above. As you can see, quarter one, our ROE was 13.61, well above the guidance. So we are holding on to that, and there's no reason to believe that the growth target and the profitability target will not be met during this particular year. We've also given a forward-looking guidance of 14.5 for next year. I think the platform is well built for delivering that.
Okay, fair point. Let's look at the NPA trajectory. This is something to be really appreciative about. It's a 50% year-on-year decline in provisions for the NPAs, and this has been one of the major drivers for the kind of earnings trajectory that you've seen in the last 4 quarters. Now, the run rate for the NPAs is somewhere like sub 60 crore rupees per quarter, 57 to be precise. Is this something which is going also into the next 3 quarters, or will this number improve?
See, while the guidance has always been 45 bips to 55 bips, the model suggests that. We come with 26 bips for this particular quarter. I would tend to imagine that somewhere around 40 bips is what the ideal sustenance for the segment that we are in. We if you look at last year, we were at 40 bips. That's the kind of area we will be in. But like I said earlier, there is every reason to believe, if you were to look at the bounce ratios and the new vintage sourcing delinquencies, that one can be optimistic about that. We should be coming under 40 bips definitely.
Okay, ladies and gentlemen, this number, which is 57 crores in the quarter gone by, this is the NPA provision, was 115 crores in the same quarter year ago, and this is the single biggest driver of this growth in profit and profitability that you are seeing at DCB Bank. Mr. Kuti, you would be the right person to comment on how gold loans have performed. The reason why I say is that in the last 6 months or so, gold prices have corrected fairly sharply, and it's reflecting very well on jewelers. But I was just trying to understand what has been the learning trajectory of gold lenders, gold loan lenders.
So I'll talk about it from a DCB Bank perspective. We have 2 separate streams of gold loans. We have a co-lending book, which is about 12.5%, and we have a organic gold loan, which is about 7%. So that's what makes our gold loan book. Reserve Bank had made this change where to certain segment of customers, you could give up to 85% loan to value. We, however, kept it conservative. Even today, if you were to walk into our branches, the maximum LTV that you can get is 75%. So we've been conservative, and we've been growing to the level that you've seen, growing both in Q4 and Q1. So I think there is a market where getting, India, as you see, private gold holding is really high. So the demand that we see on the gold loan continues, even though we are giving 10% lesser than the maximum permissible loan to value ratio. So that momentum is continuing, and I see that going forward also. You will see that momentum going through in the gold loan. We expect our asset book to grow by 18 to 20%. Gold loan book probably will be growing by about 23 to 25%, slightly higher than what the bank book is growing.
Okay, fair point. Mr. Kuti, is there a particular geography or a particular sector, maybe an industry, which is showing a paranormal growth?
Not really. There is demand coming in. There's sufficient demand is coming in there. When we saw the petrol price increase happening, 15 rupees in a couple of months' time, we had expected a inflationary risk coming into the portfolio, but nothing seems to suggest anything in terms of the repayment capability for the segment that we serve. We don't see any geographical stress coming through. The collection ratios are pretty much, you see similar kind of improvement across multiple geographies.
Okay, fair point. What about stress in the salaried class? Is it there in terms of loan repayment?
Honestly, that's a segment which is a very, very small slice of our pie. So the answer to that is no. But honestly, probably DC Bank is not the right bank to comment on the salary class performance.
Fair point. Now coming up to fundraising, there was a QIP in the works. How do you see fundraising and requirement of funds over the next 1 year or so? We are headed towards an era where liquidity will be easier for lenders.
As far as capital is concerned, I'll just give you two metrics. Our Tier 1, as far as March 31st was concerned, was 14.26%.
Okay.
Now in Q4 was 14.26%. In Q1, that 14.26% has become 14.9%, despite the growth that we see. So clearly, our CRIR has gone up to about 17%, 17.06%.
G.
But as you know, banking is a capital intensive industry. So we would be requiring capital at some point in time. What we are relying on is if we can pack up a few more consistent quarters, the likes of which we saw over the last 3-4 quarters, if we can pack it up again, then you'll be able to raise capital at a better rate than what it is currently. But having said that, the board will decide the timing, the quantum, and the mode of capital raising. I personally think late Q2, early Q3 could be a time when we could take in additional capital.
Okay, fair point. How about the CASA ratio? While it's substantially better in terms of what it was a couple of quarters ago, still this is below the industry peer set for your own old world private sector group. Is there a chance of improvement further?
Yeah. So one of the areas where we're really focusing upon is the CAR growth within the CASA, the CAR. So our CAR has grown only by 5% YOY, which I think definitely we can improve. And SA has grown by 13% YOY. My belief is that from a cost of deposit reduction strategy, what we've done very well is bring down the cost of term deposit. You know, between Q4 and Q1, we got a 14 bips improvement in our cost of funds and cost of deposits. And this is following a 2 bips improvement in Q4. So 2 bips improvement in Q4, 14 bips improvement in Q1. And all the while, we've grown by 20% plus. And we also kept the granularity same. Our top 20 ratio still continues to be below 7%. So you're able to do this, bring the cost of deposit down without, in a scenario where CD ratio, CASA ratio is looking negative. Okay, so we are not going to push the envelope on savings account because savings account, especially at the higher end of the spectrum, comes with a higher cost. But definitely, one of the areas where the bank can improve going forward is improve the CAR growth rate, and we are focused on that.
Okay, for the uninitiated, CA is current account and SA is savings account. So CASA ratio put together is the borrowing metric for the bank. The higher it is, the better the bank feels. Mr. Kuti, I again come back to my final question, which I ask every quarter. A very, very strong tailwind, yet the bank continues to trade below book value, 0.9 to be precise. PE is 8. It's an MNC tag, and it's a 6-year high on the bank. What is the market not looking at? You know, your market capitalization is 6,100 crore rupees. You know, something which is the quarterly profit of a large private sector bank. Maybe they just buy you out.
Yeah. So, look, what is in our control very, very clearly are two things. One is the performance. So we keep repeating this time and time again, right? At some point in time, the fundamentals will get its value that it deserves. The second is a narrative in terms of being able to put out in the market and predict what we want to be and where we want to be, and then just keep at it quarter by quarter. It's a question of triumph of will, whose will will prevail. If we keep on doing this for a few more quarters, which we're very confident of, at some point in time, you know, usually we come to know first, the market comes to know later. So in the meantime, keep at it, bring in these kind of consistency in performance, and who knows, you know, we'll be having a kind of different conversation a few quarters down the line. I hope it's earlier than later.
Yes, they always say, look at the brighter side of a dark cloud or a silver lining. Your price to book was 0.73 some time ago. It's now 0.9, so at least somebody's noticing. This is a multi-bagger stock, ladies and gentlemen. In the last 5 years, each year it's compounded 13%. Be that as it may, we live with
look
what...
At this way.
Yeah.
Look at it this way. Our ROE in 2024 was 12.05. In 24-25, 12.05 became 12.30.
Yeah.
Last year it was 12.77. We've given a guidance of 13.5 for this year and have done 13.61 in quarter one.
Yes.
And we've also given a guidance for 14.5 next year. Let's see. I mean, if these guidances become a reality, people will look at it differently.
Mr. Kuti, I am looking at the shareholder list and it's every single sensible small cap fund is here. So we can't really blame the market at not looking at it. And in fact, many of them have raised their stake sequentially, of course, year on year as well. So maybe, you need to do some kind of a puja or something to get the viewers, to get the analysts, to get the retail investors to start looking at this very wonderful bank where everything seems to be clicking and we are waiting for somebody to happen. But it will. It most certainly will.
Thank you very much.
The
You're
markets,
very generous. Thank you very much.
Yeah, the markets are always in the long term. They only rise on earnings. Earnings are rising, and one day this too shall pass. Thank you, Mr. Kuti. Always a pleasure.
Thank you very much.
That, ladies and gentlemen, was Mr. Praveen Kuti, the MD and CEO at DCB Bank, where numbers are fantastic, not only for the quarter gone by, but also for the previous 4 quarters, yet the market refuses to acknowledge them. Be that as it may, thank you for watching. Stay glued to BTTV.
Hello and welcome to Business Today Television. I'm Sakshi Batra. This is our personal finance show, Money Today, and today's topic is insurance. Then this is the edition that focuses on your insurance masterclass. Everything that you need to know about insurance, every doubt that you have will be answered on this program. So you can obviously write into us on our live programming that you're watching on the show on our Business Today YouTube platform, and we'll be happy to take up some of those questions. But insurance, to begin with, is one of those financial products that often you buy only after you realize that something has gone wrong. But the right insurance can actually protect your family's finances from the life's biggest risks, be it a medical emergency, an untimely death, a road accident, a damage to your home, or even an unexpected crisis while traveling. So today on the show, we're going to be cutting through all the jargons and talking about top 5 insurance policies that almost everyone should consider. And we're going to be discussing all of that on the show to find out how much cover is enough, who needs it, what are the common mistakes people make while buying insurance. All of those things will be discussed as well on the program. We're joined by Amit Chabra, the CBO of Policy Bazaar, to decode the insurance masterclass for all our viewers today. Welcome to you, Amit. Good to have you with us. We'll start off by trying and understanding why insurance in the first place is still something that is underpenetrated in a country which is the most populated country in the world. And to try and help all our viewers understand that usually we think of insurance only once something wrong has happened, and then we come to know that in case we had the insurance, we would have saved ourselves some financial trouble. So give us an understanding of why insurance in today's day and age is an absolute imperative to have.
Well, yes. See, if you look at the macro factors, right? One, India is a large country. There are large diversities of income. There are people who don't have a lot of means in case something goes wrong, And the sad reality is somewhere the social security is also not there.
Correct.
So, or it's getting there, I would say, if I say it positively, I think it's getting there where, we are slowly moving towards a world where there is universal healthcare in the country. We are slowly moving towards a world where, over time things will become easier. People will have free education in case something goes wrong to the earning member of the family. There will be jobs maybe at some point for in case the earning member of the family passes away. But the reality is that is not there right now. So think of it like this: if there is a family which earns about 50,000 rupees a month, which is, I would say, still quite high by Indian averages, and the earning member of the family passes away. Now what happens? Who takes care of the family? Who pays for the rent, for the groceries coming in every week? Who pays for the school fees? There is, people don't have an answer to that question. The only answer that is logical and should be is insurance, right? In case something happens to the earning member of the family, the person passes away, the person has a health condition because of which, lakhs and lakhs of rupees are spent on their health care, or the person has a accident and because of it there is disability. Now these are things which are not unreal. This is not, it's not a once in a lifetime. These things happen to everybody, unfortunately, and that is the reality. But people somewhere in India are not yet prepared fully for a contingency of that kind. And that is where insurance comes in and saves the day. So insurance is basically saving you from death, disease and disability, so that at least your finances, your family's lifestyle or basic income needs are met, so that your child's education, your family, your rent, your family's expenses are taken care of. That is what insurance is all about. The sad reality is that, a lot of India is still not prepared for it.
एब्सोल्युटली, आपने बिल्कुल ठीक कहा अमित, और बहुत सारे दर्शक हमारे जो हैं इससे आइडेंटिफाई भी करेंगे कि एक तो पहले जान लीजिए कि इंडिया में कोई ऐसा सोशल सिक्योरिटी प्लान नहीं है जो अमित ने बताया, जो कई कंट्रीज़ में, डेवलप कंट्रीज़ में होता है कि अगर आपके साथ कुछ अनटुवर्ड इंसिडेंट हो जाता है, आपकी जॉब लॉस हो जाती है, अनटाइमली डेथ हो जाती है, तो आपके फैमिली को कोई सपोर्ट नहीं है और इस तरीके का कोई सोशल सिक्योरिटी प्लान नहीं है कंट्री में जो कि आपको प्रोटेक्ट करता है इस तरीके की इवेंचुअलिटीज़ में। और इसी लिए जरूरी है कि इंडिया जैसी कंट्री में आपके पास इंश्योरेंस इसलिए होना चाहिए कि मुसीबत जो है वो कभी बताकर नहीं आएगी, और अगर वो आएगी तो उसके बाद आपके परिवार वालों को उसका जो बर्डन है वो ना फेस करना पड़े। इसके लिए आपको इंश्योरेंस लेना बहुत जरूरी है। अब इंश्योरेंस कौन सी लेनी चाहिए, किस किस तरह की इंश्योरेंस अवेलेबल हैं, कौन सी इंश्योरेंस आपके लिए बहुत जरूरी है, इन सब के ऊपर भी हम बात करेंगे। विल स्टार्ट ऑफ विद लाइफ इंश्योरेंस और टर्म इंश्योरेंस फर्स्ट। अमित, जैसा कि आपने बताया कि जो अर्निंग मेंबर होता है, अभी भी आपने बताया कि इंडिया में बहुत सारी ऐसे फैमिलीज हैं जहां पर केवल एक ही सोल ब्रेड विनर है फैमिली का, जिसके ऊपर पूरे फैमिली का बर्डन है, अपने स्पाउस का, बच्चों का, ओल्ड एज पेरेंट्स का, उन सब का बर्डन एक ही पर्सन के ऊपर है। और अगर वो सोल ब्रेड विनर की लाइफ को कुछ भी होता है, अगर अनटाइमली डेथ हो जाती है, परमानेंट डिसेबिलिटी हो जाती है, ऐसा एक्सीडेंट हो जाता है जिससे कि जॉब्स चली जाए, तो आप उस सिनेरियो में क्या करते हैं। और इसलिए लाइफ इंश्योरेंस का महत्व बढ़ता चला जा रहा है। आज भी अगर हम देखें तो इंडिया में बहुत कम परसेंटेज ऐसे हैं जो लोग लाइफ इंश्योरेंस या टर्म इंश्योरेंस लेते हैं। तो सबसे पहले तो ये बताइए कि लाइफ इंश्योरेंस लेना क्यों जरूरी है, किस तरीके की लाइफ इंश्योरेंस अवेलेबल है मार्केट में, और क्या ध्यान में रखना चाहिए, किस किस को लेना चाहिए लाइफ इंश्योरेंस।
बिल्कुल, देखिए, लाइफ इंश्योरेंस के दो पार्ट्स हैं। पहला, और आई वुड से द मोस्ट कॉमन रिक्वायरमेंट इज हैविंग अ टर्म लाइफ इंश्योरेंस।
ठीक है,
बहुत सिंपल प्रोडक्ट है। इसका मतलब ये है कि अगर जो पॉलिसी होल्डर है उनकी डेथ हो जाती है किसी भी कारण, नेचुरल, एक्सीडेंटल, किसी डिजीज की वजह से किसी भी कारण उनकी डेथ अगर हो जाती है, तो उनके जो डिपेंडेंट्स हैं, जो उनके नॉमिनी है, जो जनरली पेरेंट्स, बच्चे या फिर स्पाउस होते हैं, उनको एक लमसम अमाउंट मिल जाता है। इट इज़ एज सिंपल एज दैट। बहुत सरल प्रोडक्ट है। अगर पॉलिसी होल्डर की डेथ होती है तो उनके नॉमिनी को एक लमसम अमाउंट मिल जाता है। इसकी ज़रूरत क्या है, जैसे कि हमने बात करी, देखिए, पहला डर किसी भी आज एक मिडिल क्लास फैमिली के लिए होता है डेथ ऑफ द अर्निंग मेंबर ऑफ द फैमिली। उस केस में टर्म इंश्योरेंस आपके काम आता है। तो बहुत एक आपको ये डिसाइड करना जरूरी है कि आपको कितना सम एश्योर्ड लेना है, कि आप 50, 1 करोड़, 2 करोड़, 5 करोड़, कितना सम एश्योर्ड लेना चाहते हैं। इसका मतलब यह है कि अगर अर्निंग मेंबर की डेथ होती है तो आपको उतना अमाउंट मिलेगा, नॉमिनी को उतना अमाउंट मिलेगा। वो अमाउंट आपको डिसाइड करना होता है। और आपको दूसरी चीज ये डिसाइड करनी होती है कि टिल व्हाट एज डू यू वांट दिस टर्म इंश्योरेंस फॉर, लाइक क्या आप अपनी अर्निंग एज तक चाहते हैं, विच मीन्स लेट्स से 60 इयर्स तक चाहते हैं, या आप और आगे तक की कवरेज चाहते हैं, जिसका मतलब है कि यू वांट टू गेट कवर टिल लेट्स से 70 और 80 इयर्स ऑफ एज.
ओके.
These are the two things which you have to decide when you're buying your term insurance policy. It is a very simple online process. You can buy online. You can buy on EMIs so that you pay every month. So it is easier on your pocket as well.
Okay.
The most logical way of looking at what sum insured to buy is you understand your current household expenses. आपका आज कितना खर्चा है आपकी फैमिली का. अगर आप देखते हैं तो कितने पैसे उन्हें चाहिए होंगे कि उनका खर्चा चलता रहे. इसको आप एक रूल ऑफ थंब मान के अपना कैलकुलेशन कर सकते हैं. एक आसान रूल ऑफ थंब ये माना जाता है कि 10 to 20 times योर एनुअल इनकम इज हाउ यू शुड लुक एट योर टर्म इंश्योरेंस सम इंश्योर्ड. सो मान लीजिए अगर आपका 10 लाख रुपए का आपका एनुअल इनकम है तो आपको 1 करोड़ 2 करोड़ के बीच में सम इंश्योर्ड लेना चाहिए.
अच्छा, ठीक है. तो सम इंश्योर्ड का मतलब हो गया कि कितने की आप पॉलिसी लेंगे, उसके हिसाब से आपका प्रीमियम ऑफ कोर्स डिसाइड होता है. लेकिन अगर आपके सालाना खर्चा या सालाना इनकम आपकी 10 लाख रुपए की है तो उस हिसाब से, रेशियो के हिसाब से आपको 1 से 2 करोड़ का टर्म इंश्योरेंस लेना चाहिए, क्योंकि आगे जाते हुए ये जो आपके जो कवरेज है, जो आपकी मंथली एक्सपेंसेस है उसे कवर करेगा, कोई भी फाइनेंशियल डेट है उसे कवर करने में हेल्प करेगा, कोई भी फीस जानी है उसको कवर करेगा. तो डेफिनेटली आपको उस हिसाब से अपना सम एश्योर्ड लेना है. कई लोग कम ले लेते हैं तो उसका बेनिफिट नहीं होता है. प्रीमियम में ज्यादा फर्क नहीं आता है, थोड़ा बहुत 400-500 रुपए का फर्क आ जाएगा, लेकिन आपको लॉन्ग टर्म के हिसाब से एक अच्छा बढ़िया सम एश्योर्ड लेना है जब आप लाइफ इंश्योरेंस लेते हैं. लेकिन अक्सर जो लोग कंफ्यूज हो जाते हैं ना, आजकल बहुत सारी कंपनीज इस तरीके से भी प्लान्स बेचते हैं कि आप टर्म इंश्योरेंस ले लीजिए, एक टाइम के बाद आपको कुछ पैसा वापस भी मिल जाएगा. कुछ एंडाउमेंट प्लान्स, यूलिप प्लान्स अक्सर चलते हैं. तो यहाँ पर फर्क बताइए कि लोगों को डिसाइड कैसे करना है, क्योंकि अक्सर जो माइंडसेट है इंडियन इन्वेस्टर्स का, वो ये सोचते हैं कि मैं खाली पैसे वेस्ट करने के लिए नहीं देना चाहता, मुझे कुछ रिटर्न में भी चाहिए. तो वो जो मानसिकता है उसको कैसे टैकल करें, क्योंकि इंश्योरेंस लेते समय अक्सर वो ये पूछते हैं कि इतना प्रीमियम मैं दे रहा हूं, मुझे वापस कितना मिलेगा. तो वो ये समझ नहीं पाते हैं कि आप जो पैसा दे रहे हैं अपनी लाइफ को और अपनी फैमिली की लाइफ को प्रोटेक्ट करने के लिए दे रहे हैं, इसमें से रिटर्न शायद लेना जरूरी नहीं होना चाहिए.
बिल्कुल बिल्कुल सही बोला आपने. आज मार्केट में प्लान्स हर तरीके के हैं. ऐसे प्लान्स हैं जो लाइफ लॉन्ग भी चलते हैं कि आप मान लीजिए अगर पॉलिसी होल्डर 100 साल तक जिए तो 100 साल के बाद भी उन्हें पैसे मिलते हैं. एक टॉप प्लान भी आता है, टर्म रिटर्न ऑफ प्रीमियम, जिसका मतलब ये होता है कि अगर जहाँ लेट्स से पॉलिसी होल्डर ने 60 साल की उम्र तक का प्लान लिया है तो 60 तक अगर उनकी डेथ नहीं होती है तो उन्होंने जितना भी प्रीमियम दिया है उतना वापस भी मिल जाता है. ऐसे प्लान आते हैं. लेकिन द राइट एडवाइस इन दिस केस इज कि आप प्रोटेक्शन और इन्वेस्टमेंट को अलग रखिए.
ठीक है.
टर्म इंश्योरेंस, बेसिक टर्म इंश्योरेंस का एक ही ऑब्जेक्टिव है, एक ही मुद्दा है कि कैसे अगर अनटाइमली डेथ हो जाती है पॉलिसी होल्डर की तो उनकी फैमिली को पैसे मिल जाए. तो आपको टर्म इंश्योरेंस को अलग रखना चाहिए. इन्वेस्टमेंट के लिए मैं आपको ये रेकमेंड करूंगा, जो कि अब हम आते हैं दूसरी तरह की लाइफ इंश्योरेंस जिसको हम गोल बेस्ड सेविंग्स प्लान बोलते हैं. तो मान लीजिए आपका अभी यंग बच्चा है, लेट्स से 2-3 साल का आपका बच्चा है, अभी पैदा हुआ है, और आप उनकी पढ़ाई के लिए पैसे इकट्ठे करना चाहते हैं. मान लीजिए आप 18-20 साल बाद बच्चा बाहर अगर पढ़ने जाएगा तो उसके लिए आप लेट्स से 50 लाख या 1 करोड़ रुपए आप इकट्ठे करना चाहते हैं. तो उसको गोल बेस्ड सेविंग्स प्लान बोलते हैं, जिसमें कि आप हर महीने या हर साल आप पैसे डालते हैं और वो पैसे एज द स्टॉक मार्केट्स ग्रो या जिस भी तरह का आपने प्लान लिया है, एज दैट एसेट वैल्यू इंक्रीजेज वो वैल्यू भी बढ़ती जाती है. तो ये एक डिसिप्लिन्ड सेविंग्स प्लान होता है. इसी की तरह रिटायरमेंट प्लान्स भी आते हैं. इसका मतलब है कि आज मैं 40 साल का हूं और मैं लेट्स से अगले 20 साल काम करने वाला हूं, तो मैं एक रिटायरमेंट प्लान आज लेता हूं जिसमें कि मैं हर महीने पैसे इन्वेस्ट करता हूं और 20 साल बाद या 30 साल बाद जब मैं रिटायर होऊंगा, एट दैट पॉइंट मेरे को एक एन्युटी मिलेगी. मतलब इसका मतलब है कि हर महीने या हर साल मेरे को एक इनकम मिलेगी उसी
पेंशन की तरह. हाँ,
पेंशन की तरह, बिल्कुल. तो ऐसे प्लान्स भी आते हैं. इसके अलावा अगर आप मार्केट्स में इन्वेस्ट करना चाहते हैं तो यूनिट लिंक प्लान जैसे आपने बोला वो भी आते हैं, जो बहुत ही लो कॉस्ट होते हैं, उसमें कोई लोडिंग नहीं होती है ज्यादा, और वो स्टॉक मार्केट्स में भी इन्वेस्ट करते हैं. सो तरह तरह के ऑप्शंस हैं. मैं यही बोलूंगा कि इंश्योरेंस और प्रोटेक्शन और सेविंग्स को अलग अलग रखना चाहिए.
ठीक है.
प्रोटेक्शन है टर्म इंश्योरेंस, जो कि डेथ बेनिफिट प्रोवाइड करता है, उसको आपको अलग से देखना चाहिए। और ये आई वुड से कि इज अ वेरी वेरी इंपॉर्टेंट और बेसिक नीड फॉर एनीबडी जिन पे एक डिपेंडेंट परिवार है। इन्वेस्टमेंट आपको गोल बेस्ड करना चाहिए। इसका एक बहुत बड़ा बेनिफिट ये होता है जो गोल बेस्ड लाइफ इंश्योरेंस सेविंग्स प्लान होते हैं, वो ये है कि अगर मान लीजिए, क्योंकि काफी लोग इसको म्यूचुअल फंड से कंपेयर करते हैं कि भाई
हाँ, बिल्कुल
कर सकता हूँ और मैं एक रिटायरमेंट प्लान में भी इन्वेस्ट कर सकता हूँ। इनका जो एक बहुत बड़ा डिफरेंस होता है वो ये होता है कि मान लीजिए आप हर महीने 1000 रुपए या 2000 रुपए म्यूचुअल फंड में डालते हैं, वैसे ही आप एक रिटायरमेंट या चाइल्ड प्लान में भी अगर डालते हैं, अगर अर्निंग मेंबर की डेथ हो जाती है मिडवे ड्यूरिंग द प्रीमियम पेमेंट, तो म्यूचुअल फंड तो वहीं पे रुक जाता है, बिकॉज म्यूचुअल फंड तो उतना ही पैसे डालेगा मार्केट में जितने कि आप डाल रहे हैं। सेविंग्स प्लान में एक वेवर ऑफ प्रीमियम का कॉन्सेप्ट होता है। इसका मतलब यह है कि अगर अर्निंग मेंबर की डेथ हो जाती है तो आगे का प्रीमियम वेव ऑफ हो जाता है। तो एक ये बहुत बड़ा बेनिफिट है जो कि मिलता है एक सेविंग्स प्लान में, जो गोल बेस्ड सेविंग्स प्लान होते हैं, कि अगर अर्निंग मेंबर की डेथ हो गई तो वो प्लान चालू रहता है, कंटिन्यू रहता है, इंश्योरेंस कंपनी आपके बिहाफ पे इन्वेस्ट करती रहती है।
ये भी एक बहुत अच्छी बात आपने बताई है। एक तो टर्म इंश्योरेंस हो गई जहां पर डेथ का बेनिफिट फैमिली को मिलता है, एक लमसम अमाउंट आपके फैमिली को प्रोटेक्शन के तौर पर जितने की भी आपने पॉलिसी सम एश्योर्ड लिया है उतना मिल जाता है। लेकिन दूसरा है लाइफ इंश्योरेंस में जो सेविंग प्लान्स है, मान लीजिए अगर आप अपने परिवार के लिए कुछ लगातार इन्वेस्ट कर रहे हैं और गोल बेस्ड इन्वेस्टिंग करना चाहते हैं कि एक सालान 20 साल के बाद पढ़ाई के लिए या 25 साल के बाद उनकी शादी के लिए एक लमसम अमाउंट इकट्ठा हो जाए, तब आप इन लाइफ सेविंग ऑप्शंस के लिए जा सकते हैं जहां पर प्रीमियम वेव ऑफ हो जाएगा, लेकिन आपके बच्चे के लिए जो भी आपने गोल तय किया था उसका जो भरपाई है वो आपकी तरफ से जो ये इंश्योरेंस कंपनी है वो करती है और लगातार आपका वो जो सम है वो आपको आगे जाते हुए मिल जाता है। तो ये दो तरीके के प्लान्स हैं जिनके बारे में आपको डेफिनेटली पता करना चाहिए। अब करते हैं हेल्थ इंश्योरेंस की बात। हेल्थ इंश्योरेंस हम लगातार देख रहे हैं कि मेडिकल इन्फ्लेशन बहुत ही तेजी से बढ़ रहा है। एक बार अगर आपको हॉस्पिटलाइज होना पड़ जाए तो लाखों रुपए का खर्चा हो जाता है और इमीडिएटली फाइनेंशियल बर्डन आ जाता है। इसलिए हम चाहते हैं कि हेल्थ इंश्योरेंस तो सबके लिए बहुत ही जरूरी है, जो ऑलमोस्ट हर एक को लेना ही चाहिए। इसमें कोई टू वेज होना ही नहीं चाहिए, क्योंकि आपको नहीं पता हेल्थ क्राइसिस कब आ जाए। तो ऐसे में सबसे पहले तो ये बताइए कि हेल्थ इंश्योरेंस कितनी लेनी चाहिए, उसमें क्या बातों का ध्यान रखना चाहिए, ये बताइए।
बिल्कुल, देखिए हेल्थ इंश्योरेंस सबसे बेसिक और पहला प्रोटेक्शन प्रोडक्ट है जो कि हर इंडियन को लेना चाहिए। इंडिया में अगेन मोस्टली हम लोग प्राइवेट हेल्थ केयर पे ही डिपेंड करते हैं, सरकारी अस्पताल नहीं जाना चाहते हैं हम लोग, वहाँ बेड्स नहीं मिलते हैं, क्वालिटी ऑफ ट्रीटमेंट उतना नहीं है। तो ऐसे में अपना खुद का हेल्थ इंश्योरेंस होना बहुत ज़रूरी है। इनफैक्ट जैसा कि आपने सबसे पहले बोला था कि किसी भी आप इन्वेस्टमेंट प्लानर के पास भी अगर जाते हैं तो पहला प्रोडक्ट जो हर कोई रेकमेंड करता
वो
है
हेल्थ इंश्योरेंस है। बिल्कुल,
इन्वेस्टमेंट से पहले हेल्थ इंश्योरेंस, बिकॉज हेल्थ इंश्योरेंस होगा तभी आप अपनी इन्वेस्टमेंट को प्रोटेक्ट कर पाएंगे।
बिल्कुल,
क्योंकि देखिए बीमारियां, हॉस्पिटलाइजेशन इज वेरी कॉमन एंड अनफॉर्चुनेट रियलिटी इसकी और बढ़ता जा रहा है आजकल। इनफैक्ट काफी यंग लोगों में बहुत हेल्थ कंडीशंस आ रहे हैं, कैंसर, हार्ट प्रॉब्लम बहुत कॉमन हो गया है। तो एक हेल्थ इंश्योरेंस पॉलिसी होना बहुत ही इंपॉर्टेंट है। अब कौन सी हेल्थ इंश्योरेंस पॉलिसी होनी चाहिए सबसे इंपॉर्टेंट, तो पहली चीज है सम इंश्योर्ड। इसमें भी सम इंश्योर्ड बहुत इंपॉर्टेंट है कि कितना कवर आपको लेना चाहिए
जी।
ये दो चीजों पे डिपेंड करता है। पहली चीज ये कि आप किस शहर में हैं और किस तरह के अस्पताल में ट्रीटमेंट कराना चाहेंगे। मान लीजिए आप किसी बड़े शहर, दिल्ली, गुड़गांव, मुंबई, बैंगलोर, हैदराबाद, चेन्नई, ऐसे किसी बड़े शहर में रहते हैं और आप चाहते हैं कि आपका ट्रीटमेंट अच्छे से अच्छे प्राइवेट हॉस्पिटल में, प्राइवेट वार्ड, प्राइवेट रूम में हो, तो ऐसे में आपको एक कॉम्प्रिहेंसिव हेल्थ इंश्योरेंस प्लान लेना चाहिए जिसमें कोई लिमिटेशंस ना हो। दूसरा, आपको कम से कम 20 लाख रुपए का सम इंश्योर्ड लेना चाहिए। अगर मेंबर ज्यादा हैं तो और ज्यादा, लेकिन कम से कम आपको 20 लाख का सम इंश्योर्ड तो लेना ही चाहिए।
ठीक है,
आपको बताता हूं क्यों। आज से 5 साल पहले 5 लाख 10 लाख सम इंश्योर्ड काफी होता था,
लेकिन इन्फ्लेशन बढ़ गई है।
बिल्कुल, मेडिकल इन्फ्लेशन काफी बढ़ गया है, महंगाई काफी बढ़ गई है। एक 10 दिन की हॉस्पिटलाइजेशन का खर्चा आराम से आजकल 10-12 लाख रुपए आ जाता है। तो ऐसे में आप ये नहीं चाहेंगे कि आप हॉस्पिटल में हैं और आपका सम इंश्योर्ड खत्म हो गया। ये काफी प्रॉब्लमेटिक सिनेरियो बन जाता है। और एक्स्ट्रा कॉस्ट ऑफ बाइंग, लेट्स से 10 की जगह 20 लाख अगर आप सम इंश्योर्ड खरीदते हैं तो थोड़े ही एक्स्ट्रा पैसे देने पड़ते हैं, लेकिन आपका कवरेज डबल हो जाता है।
ठीक है,
तो किसी बड़े शहर में रहते हैं तो आपको 20 लाख रुपए सम इंश्योर्ड लेना चाहिए। दूसरा, अगर मान लीजिए आप किसी बड़े शहर में रहते हैं लेकिन आपका इनकम उतना ज्यादा नहीं है, आप उतना खर्चा नहीं करना चाहते हेल्थ इंश्योरेंस पे, तो आपके पास कुछ और ऑप्शंस आ जाते हैं। पहली चीज, आप एक ऐसा प्लान ले सकते हैं जो कि लिमिटेड नेटवर्क है। इसका मतलब यह है कि मान लीजिए अगर आप दिल्ली गुड़गांव में रहते हैं तो आप मेदांता, फोर्टिस मैक्स जो सबसे बड़े हॉस्पिटल्स हैं आप उनमें नहीं जा सकते, लेकिन उनके अलावा काफी सारे मीडियम साइज के हॉस्पिटल्स, छोटे हॉस्पिटल्स हैं, वहां पे आप जा सकते हैं। इससे कॉस्ट ऑफ हेल्थ इंश्योरेंस काफी कम हो जाता है।
अच्छा, ठीक है।
दूसरा तरीका, आप ये बोले कि मैं सिंगल रूम में जाने की मेरे को जरूरत नहीं है, मैं तो एक वार्ड में भी अपना ट्रीटमेंट करा लूंगा। वार्ड बुरा नहीं होता, उसमें बस एक बड़ा रूम होता है और उसमें कुछ 6 बेड लगे होते हैं।
ठीक
है।
तो
अगर और खर्चा बचाना चाहते हैं तो आप ये बोल सकते हैं कि मेरे को ऐसा प्लान चाहिए जिसमें कि वार्ड में ट्रीटमेंट हो जाता है।
ठीक है।
अगर मान लीजिए आपके पास कॉर्पोरेट पॉलिसी है और उस कॉर्पोरेट पॉलिसी में 2 या 3 लाख या 5 लाख का सम इंश्योर्ड आपके पास ऑलरेडी है, तो आप ये बोल सकते हैं कि मैं एक डिडक्टेबल ले लूंगा। डिडक्टेबल का मतलब है कि फर्स्ट, लेट्स से मान लीजिए आपने 1 लाख का डिडक्टेबल लिया अगर अपनी पॉलिसी में, तो पहला 1 लाख रुपए आपको खुद देना है। उसके बाद का सारा अमाउंट आपकी हेल्थ इंश्योरेंस पॉलिसी देगी। जैसे कि गाड़ी के क्लेम में क्योंकि ये काफी कॉमन चीज है कि पहले 1000 या 2000 रुपए आपको देने होते हैं, उसके बाद का सारा पैसा इंश्योरेंस कंपनी देती है। वैसे ही जो भी आप डिडक्टेबल अमाउंट चूज करते हैं, आप 10,000, 20,000, 50,000, 1 लाख, जो भी आप डिडक्टेबल अमाउंट चूज करते हैं वो आपको देना है। वो आप अपनी किसी और पॉलिसी से भी दे सकते हैं। तो पहले 1 लाख रुपए आपने,
ये बहुत अच्छी बात है।
उसके बाद का सारा अमाउंट आपकी खुद की पॉलिसी दे देगी। ये सब करते करते आप अपना प्रीमियम को 50 से 60% डिस्काउंट कर सकते हैं।
क्या बात।
तो इसमें अफोर्डेबिलिटी हो जाती है, और अगर आपके पास बहुत ज्यादा पैसे नहीं है फिर भी आप एक अच्छा हेल्थ इंश्योरेंस प्लान खरीद सकते हैं। अब मैं आगे बढ़ता हूं। अगर मान लीजिए आप किसी टियर 2, टियर 3 शहर में रहते हैं, अपार्ट फ्रॉम दिल्ली, बॉम्बे, बैंगलोर टाइप शहर, तो वहां पे भी कम से कम आपको 10 लाख रुपए का सम इंश्योर्ड तो लेना ही चाहिए। बट लेकिन सबको मैं यही रेकमेंड करूंगा कि देखिए, सम इंश्योर्ड जो है वो 10 लाख से 20 लाख से 50 लाख करने में बहुत एक्स्ट्रा पैसे नहीं लगते हैं। इनफैक्ट आजकल प्लान है जो अनलिमिटेड सम इंश्योर्ड देते हैं जिसमें कि कोई लिमिट ही नहीं है। तो हेल्थ इंश्योरेंस एक ऐसी चीज है जिसमें मैं कहूंगा कि हमें कंजूसी नहीं करनी चाहिए। सम इंश्योर्ड अपना ज्यादा से ज्यादा लेना चाहिए, ताकि कल को अगर कोई भी दिक्कत हो, परेशानी हो, तो एटलीस्ट फाइनेंशियली आप सिक्योर हैं।
बिल्कुल। तो चलिए, अब हेल्थ इंश्योरेंस को भी कवर कर लिया। अब आ जाते हैं तीसरे इंश्योरेंस पे, और वो है होम इंश्योरेंस। और ये शायद सबसे ज्यादा इग्नोर्ड है एज अ प्रोडक्ट। बहुत लोग इसको 90% लोग शायद अपने होम्स को कवर नहीं करते होंगे। लेकिन क्यों ये जरूरी है और कितने छोटे प्रीमियम से ये शुरू हो जाता है, इसलिए क्यों जरूरी है, ये बताइए अमित जी।
बिल्कुल, देखिए, होम इंश्योरेंस में थोड़ा आपको ग्लोबल बैकग्राउंड दूंगा। इसमें होम इंश्योरेंस पूरी दुनिया में जितने भी डेवलप्ड देश हैं वहां पे हेल्थ इंश्योरेंस के बाद सबसे कॉमन कैटेगरी ऑफ इंश्योरेंस है जो कि लोग खरीदते हैं। इनफैक्ट कुछ देशों में यह भी है कि अगर आपके पास होम इंश्योरेंस नहीं है तो आपका क्रेडिट स्कोर गिरा देते हैं, बिकॉज आपका रिस्क बढ़ जाता है काफी। इंडिया में अवेयरनेस काफी कम है होम इंश्योरेंस की, जो कि हमने देखा है, जिसकी वजह से जनरली होम इंश्योरेंस नहीं खरीदा जाता। अब मैं आपको समझाता हूँ होम इंश्योरेंस में क्या कवर होता है। 2 चीजें कवर होती हैं लार्जली, एक है स्ट्रक्चर और एक है कंटेंट। तो स्ट्रक्चर का मतलब है कि जो आपका घर खड़ा है, उसकी जो बिल्डिंग है और जो पूरा एक स्ट्रक्चर है कंक्रीट का, उसका कवरेज। कल को अगर अर्थक्वेक आ गया, फायर हो गई, एक्सीडेंट हो गया, तो जो स्ट्रक्चर ऑफ द हाउस है वो प्रोटेक्ट करता है ये पार्ट ऑफ होम इंश्योरेंस। अब अगर तो आप किसी बड़ी सोसाइटी, कॉन्डोमिनियम, अपार्टमेंट में रहते हैं तो वहां पे स्ट्रक्चर इंश्योरेंस आपका बिल्डर ऑलरेडी लेता है, तो वो आपको लेने की जरूरत नहीं है। लेकिन मेजॉरिटी ऑफ द इंडिया रहती है इंडिपेंडेंट हाउसेस में, ठीक है, हम कोई या फिर अपना घर जिसे बोलते हैं वो बना के लोग जिसमें रहते हैं, वहां पे, या अगर आप फ्लैट्स में रहते हैं, जैसे गवर्नमेंट फ्लैट्स, डीडीए फ्लैट्स ऐसे रहते हैं, वहां पे स्ट्रक्चर इंश्योरेंस आपको खुद लेना होता है, बिकॉज वहां पे आपके लिए किसी और ने लिया नहीं हुआ है स्ट्रक्चर इंश्योरेंस। तो ये पहला पॉइंट है। दूसरा है कंटेंट इंश्योरेंस। कंटेंट का मतलब ये है कि आपके घर के अंदर जितना भी सामान है, विच विल इंक्लूड, आप आजकल लोग काफी खर्चा करते हैं इंटीरियर डेकोरेशन पे, घर को सजाते हैं, महंगे कर्टन्स होते हैं, वॉल पैनल्स होते हैं,
बिल्कुल बिल्कुल,
घर में इलेक्ट्रॉनिक आइटम्स, टीवी, फ्रिज, वॉशिंग मशीन, एयर कंडीशनर्स। इसके अलावा आपके जो वैल्यूएबल्स हैं इंक्लूडिंग गोल्ड, ज्वेलरी, ये सब भी जो आपके घर में होता है, ये सब का इंश्योरेंस करता है कंटेंट। सो आपको एक अगर कॉम्प्रिहेंसिव होम इंश्योरेंस पॉलिसी लेनी है, आपको ये दोनों चीजें लेनी होती हैं,
ठीक है,
स्ट्रक्चर इंश्योरेंस और कंटेंट इंश्योरेंस। ये दोनों अगर आप लेते हैं तो आप पीस ऑफ माइंड पे हैं कि कल को अगर मान लीजिए एक बहुत ही स्केरी सिनेरियो है, बट आजकल अनफॉर्चुनेटली समर में काफी देखने मिल रहा है कि घर में आग लग जाती है,
आग लग रही है बहुत ज्यादा जी,
घर पूरा जल के राख अगर हो जाता है, तो घर में आपका जितना सामान था और आपके घर का स्ट्रक्चर वो आप दोबारा आपको बनाना पड़ेगा। ऐसे में इंश्योरेंस इज अ वेरी इंपॉर्टेंट एस्पेक्ट। अब मैं आपको समझाता हूँ इसको खरीदना कैसे, बिकॉज एक बहुत कॉमन सवाल ये आता है सब कस्टमर्स के दिमाग में कि मैं डिक्लेयर कैसे करूं कि मेरे पास क्या है, उनकी वैल्यू कितनी है। तो बहुत सिंपल प्रोसेस है। देखिए, जितने भी आपके इलेक्ट्रॉनिक आइटम्स हैं उनका आपके पास एक बिल होता है, आप वैसे भी वारंटी के लिए संभाल के रखते हैं। तो जो भी उस बिल पे डिक्लेयर्ड आइटम है आपको वो डिक्लेयर करना होता है। जितना भी आपके पास गोल्ड ज्वेलरी वैल्यूएबल्स हैं वो सब आपको डिक्लेयर करना होता है। और घर की एक नॉमिनल वैल्यू जो मार्केट वैल्यू है जो चल रही है वो आपको डिक्लेयर करनी होती है स्ट्रक्चर इंश्योरेंस के लिए। ये एक ऑनलाइन प्रोसेस है, बहुत सिंपल प्रोसेस है, इसके लिए कोई इंस्पेक्शन नहीं होती, कुछ नहीं होता। तो एक सिंपल प्रोसेस है जो आप फॉलो करके अपने लिए होम इंश्योरेंस खरीद सकते हैं। ये कुछ हजार रुपए, 7-8 हजार रुपए साल से स्टार्ट होके डिपेंडिंग ऑन द हाउस एंड वैल्यू ऑफ द कंटेंट्स ये बढ़ती है। लेकिन मैं दोबारा बोलूंगा, ये एक ऐसी चीज है जो सिर्फ एक हमारे ही देश में नहीं है कॉमन। इंडिया के अलावा हर देश में होम इंश्योरेंस सेकंड मोस्ट इंपॉर्टेंट कैटेगरी है इंश्योरेंस की आफ्टर हेल्थ इंश्योरेंस।
गॉट इट। तो चलिए, होम इंश्योरेंस अगर नहीं है तो कंटेंट और स्ट्रक्चर दोनों के साथ आपको इसे देखना चाहिए। कम प्रीमियम है लेकिन कवरेज बहुत ज़्यादा आपको मिल जाता है इवेंचुअलिटीज़ में। मोटर इंश्योरेंस की अब बात करते हैं। मोटर इंश्योरेंस इंडिया में ज़्यादातर देखा जाता है जो मैंडेटरी होता है ना, थर्ड पार्टी, वही लोग ले लेते हैं, लेकिन इससे आगे नहीं बढ़ते हैं क्योंकि उनको लगता है कि थर्ड पार्टी काफ़ी हो जाता है। लेकिन क्या ये काफ़ी होता है और क्यों नहीं होता है, इसको समझाइए।
बिल्कुल, देखिए, मोटर इंश्योरेंस आपने सही बोला, थर्ड पार्टी इंश्योरेंस एक मैंडेटरी प्रोडक्ट है जिसके बिना चालान हो जाता है तो वो सब लेते ही हैं। इसके अलावा लेकिन एक ये कॉमन मिसकंसेप्शन है, मैं बोलूंगा कि लोगों को लगता है कि इसमें मेरी गाड़ी भी कवर्ड होती है। थर्ड पार्टी इंश्योरेंस एज इट सेज है, अगर आपकी गाड़ी का एक्सीडेंट हो गया और उसकी वजह से किसी और को नुकसान हुआ, किसी की डेथ हो गई, किसी को इंजरी हो गई, तो थर्ड पार्टी इंश्योरेंस उसके लिए होती है। अगर आपकी गाड़ी डैमेज होती है, आपको चोट लगती है, तो थर्ड पार्टी इंश्योरेंस कवर नहीं करती है वो। ऐसे में जो एक बेसिक प्रोडक्ट है पहला, वो होता है ओन डैमेज इंश्योरेंस, विच मींस कि अगर आपकी गाड़ी का एक्सीडेंट हुआ या आपको कोई चोट लग गई ड्यूरिंग एन एक्सीडेंट, तो वो कवरेज मिलती है ओन डैमेज इंश्योरेंस से। अब इसमें इसमें एक बहुत बेसिक जो कवरेज है उसे, वो तो एक आपका बेसिक कॉम्प्रिहेंसिव कवर हो गया। इसके अलावा बहुत इंपॉर्टेंट है जीरो डेप्रिसिएशन कवर लेना अपनी मोटर इंश्योरेंस के साथ। तो अगर आपकी गाड़ी मान लीजिए 3 साल पुरानी है और आपकी गाड़ी का एक्सीडेंट हो जाता है, तो जितने भी प्लास्टिक पार्ट्स हैं, मान लीजिए बम्पर होता है या गाड़ी के और फेंडर वगैरह होते हैं, ये मामूली तौर पे इनमें डेप्रिसिएशन लगता है। तो मान लीजिए 50% डेप्रिसिएशन अगर हो जाता है, तो ऐसे में आपको क्लेम के टाइम पे सिर्फ 50% ऑफ द वैल्यू ही मिलेगा, उससे ज्यादा नहीं मिलता। लेकिन अगर आप जीरो डेप्रिसिएशन कवर लेते हैं साथ में, तो आपको 100% ऑफ द क्लेम अमाउंट मिलेगा, पूरा बेनिफिट मिलता है। तो ये ये एक एग्जांपल है। ये सेम चीज अप्लाई करती है हर पार्ट पे, ग्लास पे अलग अप्लाई करती है, हेडलाइट्स पे अलग अप्लाई करती है, हर चीज पे ये चीज अप्लाई करती है। तो वेरी वेरी इंपॉर्टेंट टू अंडरस्टैंड कि आप अपनी मोटर इंश्योरेंस पॉलिसी के साथ जीरो डेप्रिसिएशन कवर जरूर लीजिए, ताकि आपको जेब से खर्चा ना करना पड़े और आपकी इंश्योरेंस कंपनी ही क्लेम करे। दूसरी चीज मैं बोलूंगा आजकल बहुत इंपॉर्टेंट है इस इंजन प्रोटेक्टर। मॉनसून का सीजन चल रहा है पूरे देश में, अभी बारिश हो रही है,
बिल्कुल,
कि गाड़ी कहीं पानी में अटक जाती है और उसकी वजह से आपका इंजन डैमेज हो जाता है गाड़ी का, तो वो इंश्योरेंस में कवर नहीं होता है जब तक कि आपके पास इंजन प्रोटेक्टर कवर हो। अगर आपके पास वो है, अगर वाटर इनग्रेस हो जाता है गाड़ी में, मान लीजिए आप कहीं बाढ़ में फंस गए या कहीं बहुत बारी घर के बाहर ही आजकल पानी इकट्ठा हो जाता है और इसकी वजह से गाड़ी खराब हो जाती है, तो इंजन प्रोटेक्टर कवर इसमें काम आता है। ये 2 मोस्ट कॉमन एड-ऑन्स है जो आपको लेने चाहिए आपकी गाड़ी की इंश्योरेंस के साथ।
All right, we just have 1 more minute left before we wind up the show, Amit. लास्ट में ट्रैवल इंश्योरेंस के बारे में बहुत क्विकली बता दीजिए कि ये क्यों जरूरी होता है।
देखिए, ट्रैवल इंश्योरेंस जरूरी इसलिए है बिकॉज जब आप बाहर किसी देश में हैं, तब अगर एक छोटी सी भी मेडिकल इमरजेंसी हो गई और बहुत छोटी, आपको डेंटिस्ट के पास जाना पड़ गया जो कि एक बहुत मामूली सी चीज़ है, तो भी वो खर्चा लाखों में चला जाता है। बिकॉज बाहर एक आउट पेशेंट डेंटल ट्रीटमेंट कराना का वैल्यू ही हज़ारों डॉलर्स में चली जाती है। और ये आपको बहुत बेसिक चीज बोली, अगर कोई मेजर कोई एक्सीडेंट हो गया, कोई दिक्कत हो गई, कोई किसी को हार्ट प्रॉब्लम हो गई, तो ये खर्चा एक्चुअली हजारों लाखों में और मतलब बहुत बड़ा बड़ा अमाउंट बन सकता है. द कॉस्ट ऑफ हेल्थ इंश्योरेंस एक्चुअली हंड्रेड्स में होती है, हंड्रेड्स या थाउजेंड्स में होती है, तो कॉस्ट बहुत कम है, रेयरली क्लेम करना पड़ता है. लेकिन अगर कोई मेजर मेडिकल इमरजेंसी आ जाती है, या मैं तो मेजर क्यों, मैं बोलूंगा कि आपको डेंटिस्ट के पास ही अगर जाना पड़ जाता है, वो एक ऐसा पेन है जो बिल्कुल सहा नहीं जाता, तो ऐसे में आपका खर्चा काफी ज्यादा हो सकता है. ऐसे में आपके काम आता है ट्रैवल इंश्योरेंस पॉलिसी. तो बहुत ही नॉमिनल अमाउंट में यू गेट कवरेज इन केस आप जब ट्रैवल कर रहे हैं उस टाइम पे कोई परेशानी हो तो.
Fantastic. Thank you so much, Amit, for being with us on the program and explaining to all our viewers today top 5 must insurance policies. In case you do not have any of these policies, please ensure that you go ahead, find out more. You have any questions, send us your questions. We'll be happy to get Amit back to answer all your questions on the same as well. With that, we wrap up this special edition right here, but stay tuned. Market coverage continues on the other side. Hello and welcome. You're watching Business Today Television. I am Sakshi Batra and this is our special focused edition on mutual funds. अब आपने हमेशा सुना है, लोग कहते हैं म्यूचुअल फंड सही है, but what exactly is a mutual fund? Do mutual funds only invest in stock markets? And is there a lot of money needed to start off your investments in mutual funds? Or can you start off with as little as 500 rupees as well? And with so many options from equity, debt, hybrid, index, ELSS, which mutual fund option is actually right for you? If those are the questions that you always had in your mind, then this is the show that will help you understand everything that you need to know about kickstarting your mutual fund journey. And if you've always wanted to invest, did not know which mutual fund should you be choosing, we will also help you understand the strategies of identifying the right kind of mutual fund schemes for yourself as well in a simple possible way. We will also decode for you what are the different types of mutual funds available, where should you be really looking at getting the best options with the cheapest expense ratio. All of those things will be discussed on this special edition Mutual Fund Ka Funda. So we'll start off by inviting our guest on board. We have Ankit Tikmani, the CIO for PMS Jainam, all joining in on the program with us. Hi Ankit, warm welcome. Good morning. First up, for all our viewers who are just joining in afresh, we have started this new series on our personal finance coverage every day at 10:30. Today's topic is mutual funds and the basics of mutual funds. First up, give our viewers a basic understanding of why mutual funds are seen as the best way of growing wealth.
Yeah. So basically, mutual funds have, last couple of years have not given that kind of returns. But historically, if you have seen, it has delivered, a multi-cap fund, a flexi-cap fund has delivered a return of 12 to 14% kind of return. So hence, I think mutual funds is a good, instrument to invest, because as a individual retail investor, it becomes very difficult to track stocks and build the portfolio. So rather, it's best to give it to a perfectionist and give the money to them. So that's why we feel that MF is a good instrument. Yeah.
So, Ankit, also help our viewers understand, when one starts off their journey in mutual funds, what is it that they should be really looking at? Many people still have a lot of confusion. They believe the companies that, have a lot of mutual fund schemes to offer are the places where they invest in. So people look at more brand names, whether I'm going for an ICICI mutual fund or an SBI or an HDFC Axis. They do not understand that much that you are actually not investing in the company, but those companies are providing you a lot of schemes that you can invest in. So first up, break that myth for all our viewers. How should one be really looking at, a mutual fund to start off with? Is it important to look at the brand name, or is it important to look at the scheme?
So basically, the type of mutual fund an investor should choose totally depends on the three primary factors. Its financial goals. What is the financial goal of that investor? What is the investment horizon? And what is the risk appetite? What is the drawdown, that investor can take? So there is no single best mutual fund for everyone nor any scheme. So I'll just elaborate. Example, large caps equity schemes would be suitable for conservative equity investors seeking relatively stable long-term growth. Flexi cap would be appropriate for investors who wants to have a diversified portfolio with the fund manager having the flexibility to invest across market capitalizations. Mid cap and small cap is better suited for investors with higher risk appetite and a long investment horizon, typically 7 to 8 years, as these funds can be very volatile. I'll give you an example. Last couple of years, index have gone nowhere, but we have seen a lot of small caps and mid cap companies have corrected. So it so happens that if you take it from peak to through, I mean, it is a like 3 to 4 year cycle. So even if someone has invested at the top of the cycle at one of the schemes managing small cap and mid cap fund, so they need time to exit. So that is why unless India's growing economy, small cap, mid cap companies are doing well, but then the horizon has to be 7 to 8 years because they are very volatile in nature. Similarly, index funds and ETFs are ideal for investors seeking low cost passive exposure to the broader market without relying on active fund management. Hybrid funds is suitable for investors looking for a balance between equity and debt with lower volatility than pure equity funds. Now, hybrid funds, I'll explain this with an analogy, with a cricket analogy. In an innings, in a cricket batting innings, Dravid gives stability to the innings, and Sehwag takes care of the the scorecard, basically hitting the runs and everything. So similarly, a person, an investor who is more who is like who wants to take the benefit of both. For them, hybrid instruments are essential. For debt mutual funds, they are appropriate for capital preservation, regular income, or short to medium term goals. So investors should understand interest rate and credit risk.
Ankit, the question that I want to ask you is that simply first help our viewers understand. Usually people think that mutual funds is equal to stocks. First, help us understand whether this is a big myth there, and investors usually believe that mutual funds are risky. Are there also options where one can minimize the risk and yet take the benefit of mutual funds offering better set of returns than some of the very common schemes that investors invest in, like PPF or an NPS, or they go for some government schemes? Why does this option of mutual fund always equates to a lot of risk that people have to take? And how would you advise investors what to think about this?
So rather, I'll say that mutual fund is one of the less riskier asset compared to equities, because he has a equity. You as a mutual fund manager, they have got a team, investment team, they have got sell-side analysts to assist them. So they can have 20, 30, 40 companies in their coverage. It becomes very difficult for a retail investor to have that kind of diversified portfolio. At max, they can invest in 3 or 4 companies, and also entry and exit is very important. For them to take a call on which instrument in equity to buy and when to enter, when to exit becomes a very tough task. So that is why we prefer mutual fund scores over direct equities in that sense. Now, depending upon the purpose of the investment, whether it is retirement, buying a house, children's education, emergency corporate, etc., the investor can invest in that kind of scheme. For example, now I'll again explain this with an example. Now Diwali is around the corner. Now let's assume there is a trader, not stock trader, but a trader, and a businessman, who will be requiring some working capital needs to stock before the Diwali. Let's assume. So he should not invest. He or she should not invest in equity, because he'll be reading the funds 2 months down the line. So for them, that will come to a play. So it totally depends upon where that person is thinking, what state of life he is. But otherwise, mutual funds are much more simpler. and it's efficient compared to direct equities. That is what our sense is.
Okay. Let me also try and understand from you, Ankit, when people start out first, somebody who has never invested in mutual funds before, what are the categories you advise them to invest in?
So, see, it is not about first investment or second investment or third. Let's assume he is or she is at 20 to 22 years old, and he has that kind of money flow. He having that kind of money flow, so he can take that risk of equity. For another person who is sitting at 55 and 60, he's already retired and he wants an ideal steady state inflows. Then for them the debt funds is play a role. So at what stage of the life you are, whether you are a trader. Let's assume one more example I'd like to give to explain the viewers. Let's assume I am into stock market. Let's assume, okay, I'm getting my bread and butter to the stock market now, and let's assume the market, God forbid it doesn't happen, but let's assume that Nifty falls by 30%, 40%, and I have already invested, say, in equities comes. So that way, it is not diversifying. Rather, it is like consolidating my risk. So for me, it makes sense to invest in debt funds. So it totally depends, upon what age he is, what is his income. One more example I like to give. Let's assume I'm a jeweler. I'm already having 50 kgs or 30 kgs, 50 kgs kind of gold in my inventory, because that is how the business functions. Right? Whether it is B2B or B2C. Now I'll typically not invest in a commodity and mutual fund scheme that has got exposure to commodity, because God forbid again if the gold prices comes down, I'll take a inventory hit as well as take a hit on the MF scheme that is having more exposure to the gold thing. So it is totally dependent upon that particular person. What is his risk profile? That way. Yeah.
Okay. Let's also try and understand. A lot of people usually think about ELSS as the best way to invest in mutual funds because it offers investment and tax saving opportunities as well. But how would you really look at the ELSS option at a time when 90% or more people have already shifted to the new tax regime? Does it really make sense to look at the ELSS options?
So again, it depends upon what bracket you fall in, whether you fall in the 30% bracket. What is your this question has got more to do with the taxation part, again, individualistic thing. Let's assume I'm sitting at 20 lakhs package, then it doesn't make sense for me to go through that ELSS route, because anyways the government has increased the tax rate. Now let's assume I'm sitting at 50 lakhs and at a higher package. Then at that point of time, maybe I would look for an old regime and I'll take ELSS into that consideration. So that again is very individualistic. There are a lot of portals on the website. They assist you. Investor can take guidance from their CA. There are a lot of personal finance programs like what we are conducting. So maybe that should be helpful for them to take a call on that part.
Okay, let me also try and understand, when it comes to a lot of themes, people usually get attracted with when they say a particular thematic or a theme is working well in the stock markets. People usually go for those. Say for instance, defense, infrastructure, power space. Whenever we see a strong run up in a particular theme in the stock markets, there are a lot of new fund offers that are announced by a lot of mutual fund companies, and therefore people think that those are the right times to invest in those themes. When should a thematic fund become a part of your portfolio?
See, historically, more often than not, so it's not a rule, but it's a guideline that, and what we have seen being associated with the equity markets last 20-25 years. Whenever a new sectoral scheme comes, most often we have seen in the 2000 cycles, we have seen that there were a lot of IT schemes launched, and we had seen post 2001, 2002, this NAVs coming at 10 rupees becoming 2 rupees, 3 rupees. So it so happens that it is a human psychology. It's got more to do with behavioral finance. as the theme is more on the limelight, it becomes very easy for the investors to put money. It becomes very easy for the mutual funds to launch schemes in that particular schemes. So we should be very selective in that sense. If something is in limelight, that doesn't guarantee that it will generate a return from there itself. Rather, we should think from a pinch of salt. So that has been my experience. For the viewers, I would like to say that we should not blindly invest in a sectoral scheme, especially when the sector has been very hot for last 4-5 years. Because what we have seen is that after every 4-5 years or 6 years, there is sectoral rotation that happens, and God forbid if someone gets stuck, then there is a problem. So that's my opinion to the viewers.
Okay. Also trying to understand from you, what is the right mix between market cap based funds, say large caps, mid caps, small cap funds? What should be the ratio there? Then there are these multi-cap funds, that we look at as well. So how should one be deciding what is the right way of approaching or having the best diversification in market cap based funds in the portfolios?
So best and the simplest way is to invest through flexi cap schemes. Like the flexi cap schemes, more than 65% has to be invested in the equity schemes, and it is a good blend or mix of small cap, mid cap, and large cap companies. If the investor doesn't have to take a call on the which part of the segment that market will move. Let's assume it so happens that every 1.5-2 years, sometimes large cap outperforms the mid cap, small cap companies. Sometimes mid cap, small cap.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Good afternoon, dear viewers. You're watching the Business Today show with me, Sakshi Batra. This is where I get you all the stock market closing action on Dalal Street. First up, let's take a look at what's hot in the corporate and the financial world. Markets snap a 5-session losing streak as the easing Iran-US tensions and a sharp fall in crude oil prices have lifted the sentiments. Sensex is now up by over 800 points, while the Nifty has also surged above the 24,000 mark. IT stocks, pharma, real estate stocks are leading the rally, while the rupee has also strengthened 75 paise against the dollar. Brent crude prices have fallen below $89 a barrel, down over 8%. Oil-sensitive stocks rally with BPCL, HPCL and IOC advancing. Interglobe Aviation also jumps as lower crude boosts margin outlook. Sugar shares are in action after the government has ordered a physical verification of sugar stocks at mills across India from August 1st to 14th, amid reports of stock shortfall and rising sugar prices. The Tata Trust case sees another delay. The Charity Commissioner has adjourned the hearing in the Melli mystery matter to September 8, giving the Trust 6 weeks to file their response to mystery's objection. India's dollar inflow schemes continue to see strong traction. RBI Governor Sanjay Malhotra says banks have mobilized nearly $32 billion, largely through the FCNRB deposits, boosting the country's external position.
No Monday blues this time. We are looking at the strong market moves in this trading action. Towards the end of the session, we have lifted even further up. We tested 24,000 on the intraday mark, almost 1% higher. We're trading near the day's high point as far as the markets are concerned. You can see a strong mood across the board. Real estate stocks are now pulled up to the day's high point and are leading the sectoral action now, 2.3% higher, followed by IT stocks that are continuing to hold on to the morning gains that they had marked out. About 2.3% of a move on this one as well. Pharma stocks also in strong tow. You can see 1.6% of an uptick coming in there. Auto stocks are also rallying. Even the broader markets, mid and small cap, both indices are showing you gains of above 1% each at this point in time, barring just about slight losses that you're looking at as far as the oil and gas sector is concerned. The rest of the sectors are all up and about. India VIX, meanwhile, is down by 9.5% at 12.7 odd levels. That's also indicating to a comfort level that's coming back and the sentiments that are getting lifted as well. On the Nifty, let's pull up the top gainers on your screens, viewers. We have the top winners coming in again from the real estate pack, from the IT pack, pharma names as well. You can see Zomato, that's up 5.5% as the top leader on the Nifty 50 moves today. Infosys is up by 3.5%. Bajaj Finance is another one that's leading the rally from the front. You also have Shriram Finance, Asian Paints, M&M, all of these stocks up and about in the session right now. But let's welcome our guest on board. We have Gurmeet Chadha joining in as the co-founder and CEO Complete Circle, with us as our market expert of the day. Warm welcome to Gurmeet. Good to have you with us as always. Give us your sense. You've come back after a long time on Business Today and look what you've brought in. Smart gains on the markets after 5 days of a painful move that we have seen. How are you looking at what's cheering the markets?
I think I should then come more often if there are more green days.
Yes.
No, I think we lost a bit of momentum with resumption of war. Almost 11, 12 days of consecutive strikes. Oil prices again went from $70, $75 to three digit. And any cool off there is having now a bit of a positive impact. Also, I think there was this expectation that Q1 will be a washout in earnings. So far, earnings have been relatively much better. In fact, in small and mid cap space, the earnings have been 20-25% growth. Advanced tax collection has been very good. Bank credit at a system level is 17-18%. I've seen that after a very, very long time. RBI's FCNR drive has already fetched them more than $30 billion. So the balance sheet repair, which was causing some concern on current account deficit, is on track. So I think things are getting back. I think the only concern now is, the Nifty 50 companies still struggling in terms of earnings, but broader markets reporting good earnings. So I think it's a market where you have got to be very selective in terms of where the earning growth is. And hopefully we should have a better second half of the year. So we are getting very, very constructive now on the markets.
Okay, so Gurmeet, after from whatever earnings we've seen so far, any upgrades or downgrades already coming in from you?
So a couple of, I think energy names reported very strong set, whether it was APAR, whether it is most of the power equipment names. CG Power was slightly soft, but that was more due to the semiconductor losses going up and less to do with power system. Power system traction was pretty strong. So I think energy continues to stand out. I think defense, we have seen some amazing development in last few days. We had the testing of Kusha, which is our version of S-400. Very silently, DRDO has virtually removed the monopoly of HAL for private jets and BDL in missiles. So there are a lot of development come production partners now for the missile program. I think that's looking very interesting. So I think defense exports is something which can really surprise. And right now, because optically the stocks are looking expensive because the base is very small, right? And I think the size of the opportunity is very big. It's almost like what EMS was, 3-4 years back, because at every level it looked expensive. So that's something which is very, very strong. I think banks reported very good set of numbers, maybe with the exception of HDFC. Other than that, I think SBI is due now this week. I think that would probably give a better idea there. And I think healthcare standing out. Look at the numbers of Lotus Labs and some of the CDMO names. So I think, as I said, broad-based earnings have been very good. And so far, actually, has exceeded a little bit of expectation. And I think some upgrades will come in, more upgrades will come in energy, in healthcare, in defense, and also a couple of new age businesses. I think Eternal had a very good one. So overall, I think it's as I said, if earnings come at some point of time, even the FIIs outflow will stop.
Absolutely. That's something that we will also discuss in a bit. But let's actually look at the debate around the work-life balance is back in spotlight as French labor authorities have now fined Infosys for 1,75,000 euros. That's around 2 crore rupees over alleged shortcomings in the employee time recording system under local labor laws. And the development has also renewed attention on Infosys founder Narayana Murthy's call for the 70-hour work week, a remark that had sparked a nationwide debate, with many arguing such long working hours are not sustainable. My colleague Palak Agrawal is now joining in with more details on this as well. Palak, what is the reaction among the techies to this order? Has it created any chatter in the discussion groups as well? This was, of course, long-standing debate after Narayana Murthy talked about that young of the country have to work very hard. 70 hours a week is something that they have to punch because we have to reach a certain space, and that will only happen when the young of the country, the young techies put in as much work. But it's not really going well with the techies of Infosys who are working for the French authorities.
Among tech professionals, the reaction is less about the fine itself and more about the contrast with how overtime is treated in India versus Europe. In the Indian IT industry, there has never really been a culture of overtime pay for employees. While billable hours may officially be around 8 or 9 hours, many employees routinely work 10 to 12 hours, as they say. And during peak delivery cycles, even 14 hours a day are not uncommon. Yet in most cases, there is no separate overtime compensation, as what I have heard from employees. Now, with hybrid and work from home models, the boundaries between work and time have become even more blurred. Many employees say the expectation to stay available for longer hours has only increased without any corresponding overtime allowance. And the debate around that 70-hour work week brought this issue into the spotlight. But on the ground, many tech professionals would say that long working hours have been part of the industry's culture for years.
Palak, do you see IT companies learning something from this, at least in the European markets?
Yes, absolutely. This serves as a reminder that compliance is not just about data privacy or taxation anymore. HR systems and workforce management are also under regulatory scrutiny. For Indian IT companies with significant operations in Europe, this comes as a wake-up call that global HR platforms must be adapted country by country. Time tracking system need to be reliable, compliant with local legal requirements, etc. I don't expect this to trigger an industry-wide overall overnight, but it is likely to prompt companies to review their European compliances processes more carefully. Right now, the reputational lesson is probably more significant than the financial one.
Thanks, Palak, for getting us those details. Well, interesting developments there. One has to truly see as to what will happen with the industry-wide outsourcing measures that they take usually, and whether the rules will have to get changed according to the geographies that these companies adhere to at this point in time is something that we'll watch out for. But we'll actually largely look at the IT stocks performance with Gurmeet first. Gurmeet, how are you looking at the IT sector? We've had a long underperformance, so much of volatility, AI disruption fears, client spending falling, the guidance cut, all of that. This time, the quarterly results have not been as bad as the Q4 quarter. And, the reaction has also been not as negative as far as the IT stocks are concerned. Is the worst behind the IT sector?
Maybe in terms of downside, you may have some margin of safety, but look at the growth now. They're talking about 1-2%. Guidance also is between 1-3%. Now, those kind of guidance, you can't expect re-rating of the stock, right? But if, let's say, the deal with momentum picks up and we can get back to at least high single digit kind of a guidance, then maybe, right? But as of now, it's more, you may get a bit of a tactical bounce because it looks like a little so oversold. So you have to be selective here. We like HCL Tech because it's much more diversified. Other than IT services, there is ERD, and they have a software business which almost does more than 20% of EBIT. They invested in Servo. They were the lead funder in the domestic LLM, where I think invested 1,500 crores. We have some exposure to Coforge and Persistent in some of our non-discretionary portfolios. and a little bit small exposure to KPIT, but we are keeping it very selective. And I think at a portfolio level would be quite less. So still quite underweight, but happy to change the view if the growth comes back. And I think some of the mid-cap names have shown some ability to pivot. We actually look at this sector as a digital sector. So we like some of these new age businesses more. Some of the platform players more. Let's say Eternal and Meesho, Grow, etc. I think that is where we are seeing, good. So look at Eternal, very good numbers, Q1 in Blinkit. I think if you see the inventory days came down from 18 to 14 days, unit economics is improving and profitability coming back versus others who are struggling. So there's a differentiation happening. Grow now clearly leader in broking. It's and doing very well on the new SIP registration. They are all to 40% of industry. So now they're really incubating more verticals other than broking. So we like some of these platform new age business more in our digital portfolio than these pure vanilla IT services companies.
You talked about Eternal, the parent company of Zomato. So I have to ask you, because August is going to be a month where we're also looking at Zepto IPO making its foray into the D Street as well. So how are you looking at competition surging and, breaking the duopoly of sorts in the stock markets for Zomato and Swiggy? What's in the offing for the retail investors at large?
No, it doesn't really materially change much. The competition is more on the ground than on the exchange. Swiggy is already there and it's still below the IPO price. As I said, and Amazon now is getting aggressive. And what happens is usually, and that's my experience, I'm not trying to, paint everything with the same brush, but somebody who crosses 50% market share, and Blinkit, I think, is about 47, 48% market share already, tends to stay and do well. And the others lose out with the competition. So I think the bigger impact of Amazon now may come more to Swiggy and Zepto. Already there is a pushback on Zepto valuations by different investors, and a lot of things probably need to be changed. I personally think that once who crosses 50% becomes dominant, and I think Blinkit fits in the bill there. I think even the District app is picking up well, and even the food delivery continues to do steady. So I think I would go with Eternal as far as this space goes. Let's see how chips are.
Fair enough. Let's again shift focus to the earnings space. Banks is something that Gurmeet was highlighting, have reported solid set of numbers. We've also seen DCB Bank report strong first quarter performance. In fact, the net profit here has risen by over 35% year on year. The bank also remains optimistic about gold loan business despite recent volatility in gold prices. In fact, Business Today Television's Shell Bhatnagar has spoken with DCB Bank's MD and CEO Praveen Kutty about the bank's gold loan strategy and the growth outlook. Let's listen into what he had to say.
We have two separate streams of gold loans. We have a co-lending book, which is about 12.5%, and we have a organic gold loan, which is about 7%. So that's what makes our gold loan book. Reserve Bank had made this change where to certain segment of customers, you could give up to 85% loan to value. We, however, kept it conservative. Even today, if you were to walk into our branches, the maximum LTV that you can get is 75%. So we've been conservative and we've been growing to the level that you've seen growing both in Q4 and Q1. So I think there is a market where getting, India, as you see, private gold holding is really high. So the demand that we see on the gold loan continues, even though we are giving 10% lesser than the maximum permissible loan to value ratio. So that momentum is continuing, and I see that going forward also you will see that momentum going through in the gold loan. We expect our asset book to grow by 18 to 20%. Gold loan book probably will be growing by about 23 to 25%, slightly higher than what the bank book is growing.
Gurmeet, let me come to you. You did talk about how you've seen the performance in earnings for these banks improving vis-a-vis the tier one names like HDFC Bank. So what is really leading to that kind of a gap getting created in the earnings, and how are you looking at what's happening there? IDFC First Bank, DCB, all of these banks were out of the visible range for such a long time, and they've come back strong after a long haul, and we've seen the stock markets rewarding them. How would you advise investors to look at the marquee names, the tier one names, vis-a-vis the tier two names, and choose there?
So I think, as I said, barring HDFC, I think most numbers been better. Maybe Axis, I see the guidance was better. So ICICI clearly stands out amongst the larger private banks. I think Sandeep's arrival has really turned things. I think what I like is the focus on core banking, and unit profitability. There are no product-wise targets anymore. They're not very pushy towards insurance or other fees-based income, which has had a huge impact as far as the basic culture goes in the sector. And I think continue to do phenomenally well on NII and all operating metrics in the bank. So I think that continues to stand out. Some of the smaller banks have done very well. Federal Bank in particular, with Mr. Manian coming in again, leadership change coming from Kotak, veteran there and really turning it around. And with obviously more investments coming in, RBL post, the Emirates Bank is looking very different. I think they have the growth capital. So a lot of these small banks have also got growth capital. And the asset quality is now shaping up well. And because the low base is there, you are able to grow advances. Look at DCB, for example, did 17%, right? So as I said, the bank credit growth is 17-18%. And these deposits, because you don't have to provision for CRR and SLR in FCNR deposits, banks with higher NRI base and presence in Middle East and lending partners in Middle East, Singapore, etc., will have more FCNR deposits, which means lower cost of funds for them. So ICICI, Federal, SBI, they have better NR reach vis-a-vis some of the others. So I think they probably will stand out more in coming quarters as the industry mobilizes maybe $70-80 billion in the FCNR deposits.
And between private and PSU banks, which is the segment that's likely to benefit more from the FCNR deposits?
No, I think both. As I said, I think SBI will do well in my view. It's nicely consolidated. SBI fund management IPO has come, but hasn't led to any rub-off on the valuation of SBI. And I think let's see how the numbers go. My sense is SBI numbers should be solid, and I think would be one of these larger beneficiary of FCNR deposit as well.
Absolutely. But on HDFC Bank, since you've tracked this stock right over 2 decades or so, you've talked about it very openly on your social media platforms as well. How are you looking at HDFC Bank as an investor who's just started out? What would HDFC Bank mean for them in their portfolios?
No, honestly, I'm quite disappointed. As an ex-employee, as a very large shareholder in last 3-4 years, I think there's a lot of value destruction which has happened post-merger. 14 lakh crore was the combined market cap of HDFC and HDFC Bank pre-merger. And now we are at about 11 and a half, even if you adjust for cancellation of shares. Second, the synergy they were looking at hasn't played out in terms of CASA coming to them from HDFC Limited loan customers. So the liability side has been a bit of a challenge. And honestly, also the liquidity went tight in that period when merger happened. So the environment also was not conducive. I think the bank needs a bit of a reset. And then there's been issues, right, with RBI, then with the chairman going and all kinds of things. So I'm a touch disappointed. I think they need a bit of a shake-up without mincing words. And I think the branch culture needs to improve. Too much push on third-party products, and very less focus on core banking. I could just sum it up in that way. And I think it's due. I've not seen HDFC Bank at 1.6 price to book, at least in my 20 years of tracking, at 10-11p. I think valuations are very reasonable. They just need to probably report better operating numbers, and I think the street will be pretty happy.
Okay, we should focus to a breaking news coming in, viewers. This is with regards to Finance Ministry that's revealing more details about the plastic notes rollout plan. The 10 rupee, the 20 rupee notes are to be printed by the RBI. First 100 crore rupees of each denomination to be printed. That's what the government is saying. There is no proposal, however, to replace the paper notes, at least for now. The government is talking about polymer and paper notes to coexist. That's the big news that's coming in, at least for now. Remember, there's been a lot of update and discussion about whether the government will be completely replacing the current paper currencies into plastic notes. The information coming in from the government reveals that the plastic notes rollout will first start from the lower denominated notes, from 10 and 20 rupee notes to be printed by the RBI first. And of course, both polymer and paper notes will coexist. There is no proposal to replace the paper notes, at least for now. That's a big breaking news that's coming in. We've been seeing a lot of paper stocks also rally in the session today. Sesha Sai paper began its sharp up move in the session also today. Probably an indication that the demand for paper currency is likely to continue is something that is keeping these stocks in focus as well. But Gurmeet, how are you looking at this, foray into the polymer notes? It's happened in a lot of developed countries and developing countries, and now with India also looking at this, does it also open any kind of opportunity for investors?
Yeah, I'm sure some of these suppliers would benefit and then write a bit of a bump. But as I say, it's a long-term thing. Right now, it's only about 10 and 20 notes, and for the first 100 crore. So we'll study the valuation. I think it's also important that overall, what UPI is doing, in terms of system getting in fit, I think that's where we are more likely to see opportunities, with more UPI transactions, something like a Paytm, all the small finance lenders which are using UPI to penetrate credit. I think also some of the small finance banks are now seeing the credit cycle turning and the asset quality now stabilizing. I think that is one space we should watch out for because it's been very badly damaged in the last 2-3 years. So I would be more focused on the financial inclusion theme, less cash theme, than only focused on. I'm sure some of the paper suppliers would benefit.
Okay. We'll also shift focus to the auto space, viewers. Despite the SUV craze sweeping the nation, the country's largest car maker is still betting big on sedans and hatchbacks. In an exclusive conversation with Business Today Television, Maruti Suzuki has also made it clear that it was not regretting its exit from the diesel car market, claiming that CNG is the new diesel as well. Let's listen into that conversation.
We are looking for a growth of almost 25 to 30% in the SUV space this year. That much I can tell you. And ye dil mange more. If we can get some more production numbers, we can further.
So Bhargav Sir, when I was speaking to him, he mentioned about that hatchbacks and sedans are here to stay and they're not going anywhere. With the GST cuts, the demand has come back. So do you see that in numbers when it comes to sales in hatchbacks and segment sedan level cars? Sir?
In the quarter one, Desire happens to be the number one model in the industry. It's a sedan, despite so many players in the market. So, Chetan, my take is very simple, and I will again repeat it for the sake of repetition. If you are able to offer a right product at the right price, which is in line with the customer expectation, every segment will have a play.
Alright, now shifting focus towards CNGs and EVs, sir. The Grand Vitara EV is here. What kind of numbers have you sold? About 2,000 odd units.
We had a capacity constraint.
But we don't see. Yeah, of course, that's what I'm asking about. So what is the capacity constraint? How and when do you plan to improve it further so that you can push the EV momentum that you actually plan to begin with?
We told you that we are going to have a play, and we are having some commitments of the export markets to our OEMs also. So this year we will be playing around that zone only. But yes, we are going to have some more play in the EV segment in times to come.
Alright, now shifting focus towards CNG, which is one of your highest ever selling segment now. What kind of growth are you seeing in the CNG space, sir? Because underbody CNG is of course the need of the hour for the consumers. What kind of growth are you seeing in CNG, probably for the industry also and probably for the company also?
If I talk about the industry, the CNG contribution of CNG vehicles in the industry is now close to 22%. Diesel is at 18%. So that's what I think some of the journal friend has come with an article that CNG is the new diesel actually. And we are seeing the trend that people are now shifting from diesel to CNG. And obviously that is a small sort of contribution to the nation if every individual does, because it's a mission given by our Honorable Prime Minister also, and we are leading it. We are not participating in that mission, we are leading it.
All right, viewers, markets have shut shop. We'll quickly look at the closing of the markets. 24,002 for the Nifty, 234 points higher near the high point of the day is where we've ended at. A strong session, although just a tad below that 24,000 mark is where we've ended at. But the Nifty Bank also managed to pull up into some gains, about 0.7% odd kind of gains coming in. 2137 advances, 2,137 advances on the NSE today, widely outperforming the declines of 1,007 on the NSE. All the sectors of the Nifty managed to climb higher in the sessions today. So IT stocks leading the move with 2.3% rally, real estate, auto, pharma. These are the sectors that have definitely gained over 1% gain for the broader markets, mid and small caps. and all the sectors managed gains. Even oil and gas pulled up a tad bit into the green with almost 10% losses for India wicks today. That's how the markets have shut shop. Very strong session as far as Monday is concerned. But remember, tomorrow is the monthly expiry as well, and we need to see whether this will continue as well. There's another breaking news coming in on your screens. This is with regards to India's ultra-rich taxpayer base expanding rapidly. 576 individuals is what we have come to know. The reports also talk about an income above 100 crores is coming in. 100 crores plus taxpayers jump have seen about a 39% rally year on year, and from 415 to 576 ultra rich in just 1 year is what we have. The tax base clearly is increasing, and over 100 crore earners are up by 300% in the last 5 years, as per the latest data that Finance Ministry has shared as far as the income tax data is concerned as well. That's another big news that's coming in towards the closing of the session today. But let's start to take some queries from our viewers as well for Gurmeet. But Gurmeet, first on the markets particularly, your own sense by the end of the fiscal year, where do you pencil in the Nifty?
Honestly, nobody knows, and I think a lot of us don't know. They don't know. So I think, but as I said, I think things are looking better. Last 2 years have been quite volatile. FIIs have pulled out more than $100 billion. We had a war. We had oil at 110 recently. Anything that could go wrong has gone wrong. And despite that, I think we're still flattish. So I think things are about to turn. The AI trade is softening now. If you see, there's a lot of pullout already happening from Taiwan, Korea, etc. There's some cool off happening there. That I think is a good sign. And if oil can remain around $80 for some more time, maybe durably, with hopefully some resolution and ceasefire, I think India will see some flows coming back. And more importantly, as I said, earnings are picking up. I think maybe the juice is outside Nifty. In fact, I've mentioned this. I really don't see, with hand on my heart, a lot of the top Nifty companies really doing 15% earning growth. Looks very unlikely. Maybe some exceptions being M&M on Bharti and few banks. But other than that, I think majority of the index would still struggle to do 15%. But you will get that growth outside the index. And I think that's where the positioning has to be. So I think it will remain a stock picking market. And as I said, the second half should be better vis-a-vis what it has been so far.
All right, there's another breaking news coming in, viewers, and this is with regards to CXMT, the chip maker's blockbuster listing in China. We've seen CXMT Corporation surge by 470% on the listing day. CXMT is now the largest Chinese listed company. Of course, we are seeing at this point in time, this price surge has helped the CXMT outlook also to improve. The retail portion got subscribed by 212 times, and you can clearly see the shares of China's biggest memory chip maker have surged by more than 470% as it made its debut on the Shanghai Stock Exchange that we are looking at as well. So that's as far as the China stock market is concerned in focus. But one query that we will take from our viewer to Gurmeet here. We have this question coming in from Suresh Sarkar from Durgapur, who asks you, Gurmeet, what would you advise as far as the oil-sensitive sector is concerned? Should one stay away or stay invested in names like OMCs, aviation, paint, tires, or which sector would you prefer linked to oil?
So, just one sec. Sorry. So,
not a problem.
Yeah, sorry. So I think the oil-sensitive sectors, in my view, I think it's a little tricky right now because oil prices are all over the place. Friday we were at $100, today we are at $88. So it becomes a little speculative. But I think there are a lot of opportunities in auto, which is dependent on oil. I think if you see numbers of TVS, they grew sales by 38%. Bajaj Auto was 60% up. Mahindra and Shriram Finance reported very good commercial vehicle and vehicle finance numbers, and he actually mentioned that Q1 has been much good. Q1 cyclically is low for auto, which means the auto ancillaries will do very well, and the rub-off hasn't really come on auto ancillaries, both on two-wheelers, four-wheelers and commercial. So I think that's one space you should target if oil continues to be low. Auto numbers are looking very, very good, and these auto ancillaries have corrected meaningfully. That can give you a more sustainable return versus OMCs, etc., which might give you a bit of a tactical bounce.
Fantastic. Okay, thank you so much, Gurmeet. Appreciate your time with us on India Today and on Business Today Television. Hope you have a fantastic time. Viewers, in case you too have any questions about your investments in stock markets, mutual funds, SIPs, stocks or gold-related questions, send us your queries on the number that's flashing on your screens. With that, it's a wrap on the Business Today show right here. We'll be back to track the markets tomorrow morning at 9:05 a.m.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Hello and welcome. You're watching Business Today. I'm Neetu Chandra Sharma. Last quarter, Jupiter Lifeline Hospitals Limited announced major expansion plans that will significantly increase its bed capacity over the next few years. With the company set to announce its quarterly results later this month, it's a good time to take stock of its expansion plans, funding strategy